Into some more opinion coming in on the US economy from market experts.
Here at Annex, the way that we're looking at it on our investment committee is that earnings expectations continue to rise. And so that is actually something that seasonally speaking, back in April, earnings expectations typically fall, but they actually began to rise. And we think that that's actually just showing that the sell side maybe has still been a little bit too negative on the broader market. And so we could see some continuation of this rally. I know the old maximum is, sell in May and go away, but it really doesn't pay off in the near term or even over the longer term. If you think about what we are likely to encounter over the next few months, pretty decent economic data, the Fed probably still saying that they're in this pause. Really, we just need to wait for the earnings magic to work itself.
If you look at the rebound we've had from the 49.80, 5,000 target zone, that was our initial target zone when you saw that March, April short-term top build. The market's rallied from that, and clearly it's carried inertia again. These new highs aren't being confirmed by momentum. So what we think we're seeing potentially is, starting in March, April, that deceleration, the pullback, and now another push to a new high. If the market can't sustain these highs, and right on top of next resistance at 53.20 to 53.50, we suspect the market will stall out there. A pullback that then breaks the 50-day average again. We think you have to take that very seriously.
And from the US, we head across to Europe, where the markets there snapped a 9-day winning streak, with the French CAC losing about 50 points, the German DAX slipping 130 points, while the British FTSE closed near the fat line. The Pan-European Stock 600 index closed lower after hitting a record high on Wednesday. Autos, energy and the broader industrial goods and services sector dragged the index. Shares of Siemens slipped over 6%, marking its worst day in over 2 years after the company's second quarter industrial profits fell and missed estimates. ECB Governing Council member Martin Kazak said that they are in no rush to ease policy, so subsequent moves could be spaced out. And that's all we have from our global market action. But how will all of these overnight cues impact our own markets? We are being joined by our research team with the trade setup and the stocks that are likely to be in focus as well. I'll take you through the cues that you need to watch out for this morning. And it is very difficult to describe this market in adjectives. That was until almost 3 p.m. yesterday, the Nifty was having a pretty bad day, particularly for the bulls. But after that, it was almost one-way traffic. And if you can pull up the Nifty, you would see that 350-point recovery that came in on the intraday charts as well. The Nifty not only above 22,300, but it closed above the 22,400 mark as well. And same was the case for the Nifty Bank. It ended below the 48,000 mark, continues to face resistance there, but it recovered almost 650 points from the lows of the day. Now, chartists who watch the Nifty, they expect more upside after it crossed that 22,300 level, and the next level of resistance that they are projecting comes up to around 22,500 or 22,600. The other bit was that the institutional flows, the foreign investor flows, seem to be slowing down, at least in the absolute number. It was 770 crores compared to the usual 1,000 plus crore trend that we've been seeing over the last few days. But the FIIs continue to remain net short, that is for sure. Now, when it comes to the sectors, for the week so far, the Nifty is up close to 1%. The Nifty Bank is also up 1.2%. But the sector that I need to speak about is defense. And those stocks had a wonderful rally yesterday after HAL reported its numbers and during market hours. And if you can see those intraday charts there, after the numbers came out, and with HAL ending 11% higher, and along with that, almost every other defense stock also rallied after those numbers. Plenty of other earnings reactions in today's session as well. Biocon, Vodafone Idea, Concor, we'll speak about it during the day. JSW Steel reports results today, as does Astral and Bandhan Bank as well. That was almost ending at the lowest point of the day ahead of its results, but the stock is in the F&O ban as well. Now, the handover from Wall Street, as we spoke about, is slightly negative, but still is flat as well. The Asian markets have opened mixed, and the GIFT Nifty is also indicating a slightly flat start for our own markets. But from the markets, let's also go across to Abhishek, who will tell us the stocks that you need to watch out for this morning. Abhishek, good morning.
Good morning, Omar. So to begin with, Vedanta will hold a board meeting on 16th of May to consider the raising of funds via equity issuance, via FPO, right issue or any other ways. To begin with results, Crompton Greaves revenues up 9.5% YOY. However, net profit is up just 5.5% YOY. Biocon, that's a beat with respect to revenue versus our poll. Margins have also beaten our poll by almost 190 basis points. However, profits are below below our poll, 135.5 crore versus our poll of 179 crore. Vodafone Idea, the revenue has declined 0.6%. Quarter-on-quarter losses have widened on a sequential basis, and they are looking at a capex of 50 to 55,000 crore over the next 3 years. Endurance, the EBITDA has grown by 36.5% YOY. So margins have seen expansion over there to 14.5% versus 12.8%. JK Paper, margin have contracted sharply by more than 700 basis points on a year-on-year basis. So net profit is down by 1.7% YOY. Concord, the revenues are up 6.5% YOY. Profits are up 13.5% YOY, given the fact that margins have expanded to 21.4% versus 20.5% on a YOY basis. E-Clerks, the revenue is up 10.5% YOY. However, profits are down 1.5% YOY, given the fact that margins have contracted sharply to 25.5% versus 29.9% in the same quarter last year. Infosys has signed a 5-year partnership with Coal Technology Services for digital transformation program is the other stock in news today. Back to you.
Thanks a lot, Abhishek, for that. And finally, Mangalam joins in with cues from the FNO space. Mangalam, good morning. What an expiry we had yesterday. What's the session looking like today?
Well, it was wild moves yesterday. I mean, no two ways about it. But, you know, while those moves were inexplicable, they weren't really unexpected, largely because of the way the market was positioned. So if you look at both the Nifty as well as the Nifty Bank, you know, a big up move is what we saw, and it was the expiry-led surge which caused, the Nifty to cross that congestion zone. The option writers were positioned for a Nifty seeing resistance around that 22,300 mark, and that was what the congestion zone was for the last few trading sessions as well. Once we crossed past that, as you can see, there was a big up move that we saw on both the Nifty as well as the Nifty Bank, and in doing so, the option writers were perhaps taken to cleaners in yesterday's expiry. In doing so, the Nifty's also crossed past that congestion zone of the 50-day moving average and the 20-day moving average, a mark that we've been speaking about for the last many trading sessions. Now the question is whether it sustains above those levels and whether yesterday's move was just a flash in the pan or not. For that, we'll have to see what the Nifty Bank does too. Because in that up move, the Nifty Bank went ahead and crossed the 50-day moving average, but it's still below the 20-day moving average. So let's see how that goes. And in that up move yesterday, the Nifty, as the Nifty and the Nifty Bank moved, we had the India VIX, which cooled off a little bit as well, closed at just around 20. The GIFT Nifty indicates a mildly positive start. Again, it's the first star that is extremely important for our markets. We'll watch out for how that pans out, and that will tell you the texture of today's trading session. There was positive FII flows or positive institutional flows for the second straight session. The DIIs output the FIIs, and the FIIs continue to sell in index futures. 113 crores is what they sold in the Nifty futures. The FII longs were unwound. They added a few shorts, and now the short positioning is 2.6 lakh contracts, 26% long contracts. So let's see how that pans out as well. On the way up, we've seen some writing at the 22,400 and 22,600 calls, telling you that the market may face some congestion around 22,500. Let's see where it goes. But for now, important to hold on to the lows of yesterday.
Important to hold on to the lows of yesterday, and first star and the last star, as always, the crucial one. Thanks a lot, Mangalam, for that. Time for a short break. Up next, we return and get you excerpts from former RBI Governor Raghuram Rajan, who believes that India is on the path to prosperity. Stay tuned to learn why he thinks so.
Well, how I wish this was a video interview that we had, but you take what you get with the likes of Neville Nerona, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that, he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small, tiny audiences at very low cost. And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that, the mix of DMart's sales actually deteriorated largely because perhaps, there have been entries of a lot of these value retailers in the apparel space as well. To that, he said, yes, there is marginal impact and specific to a certain category such as apparel itself. And that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart is adding every year, whereas they worry about how well the stores being added are being actually managed, and that's the big dissonance. But having said that, they would like to add as many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces, and a lot more relevant for India, which is known for leapfrogging beyond different things as well.
Back with us here on Power Breakfast on CNBC TV18. Now, Ola Cabs' Chief Financial Officer Karthik Gupta has stepped down 7 months after taking charge. Now, Gupta's resignation comes 2 weeks after the company's CEO Hemant Bakshi also quit. All of this comes at a time when Ola is undertaking a restructuring exercise that could reduce its workforce by 10%. Ritu Singh has the details on the recent shakeup at Ola Cabs. Ritu, over to you.
Well, we continue to see exits at the Ola Group. Most recently, Karthik Gupta, the Chief Financial Officer of ANI Technologies, which is the parent company of Ola Cabs, stepping down from his position barely 7 months after he took charge. This is the second major exit after Ola Cabs CEO Hemant Bakshi resigned from the company just 2 weeks ago. Now, these senior level exits also coincide with a restructuring exercise which Ola Mobility is currently undertaking, which we had previously reported could see nearly 200 employees, constituting 10% of the workforce, getting impacted. The restructuring itself is coming ahead of a speculated IPO filing by Ola Mobility, something CNBC-TV18 has not independently confirmed. We do know, however, that its sister company Ola Electric did file a DRHP for a public offering in December last year and is still awaiting SEBI's nod. Now, an Ola spokesperson confirmed the CFO exit, saying that it was part of a restructuring exercise which is aimed at strengthening the cost structure, focusing on growth and increasing the company's bottom line. Now, how the CFO's exit helps with these objectives, of course, that is unclear. Ola Group has faced multiple senior level exits in the past as well. If you recall, between 2020 and 2022 alone, there were more than 30 senior level exits as per various reports. And this is coming at a time when Ola Mobility has yet to post a full year of profit. But the company in its statement said that Ola generated revenues of 1,987 crores in FY23 and reported a positive EBITDA of 250 crores in the same period and achieved profit before tax of 171 crores.
Ritu Singh, thanks a lot for all those updates. Now, former RBI Governor Raghuram Rajan spoke to CNBC on how India has turned the tables and moved on to a path to prosperity. While talking about his book, Breaking the Mold, he spoke of India's booming services industry and how comparisons to China isn't in the best of the country's interests.
Yeah, what's working well is really the services sector and growing services exports. After the pandemic, India's learned that, you can basically provide consulting services from India, from Bangalore, as well as you can provide them from Chicago to another city in the United States. So services exports are exploding. You're also seeing what are called global capability centers, not back offices, but semi-front offices. JP Morgan has 3,000 lawyers in India doing their contracts for them across the world. So Indian services, especially provided by highly qualified Indians, exploding. That's good news. But, people talking about India becoming another China, that's not going to happen. There is no place for another manufacturing export-led giant in the world. India is about the same size population-wise as China. India has to find a new path, a different path from the Chinese path. It cannot rely on manufactured exports. It has to focus on something else. Services may be the answer. So, lots of interesting plays in India. Growth is for real, but it needs to be faster for India to grow rich before it grows old.
That was exactly. Yeah, go ahead.
So our book is very much about that. What path should India take? A path in a world where there is increasing goods protectionism, where people are very hesitant about it, losing more of manufacturing. That has to be much more cleverly thought.
Raghuram Rajan there speaking exclusively to CNBC. Time for a short break. Up next, we get you cues from the commodities market. Stay tuned, back on the other side.
course, digital commerce. He says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures. And as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about growth in the tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
In the auto sector, in our pecking order, we see two-wheelers having a higher single-digit or lower double-digit kind of growth rates, followed by PVs and followed by CVs and tractors. I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side, I think that's where you start scanning businesses from. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
On an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more than 1,000 wagons. This year, our target is to get...
Welcome back. You're watching Power Breakfast, and as promised, Manisha Gupta is now joining in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, I'm looking at the crude oil prices, Hormuz, which have seen again after 3 weeks of constant decline. The markets are looking at decline in inventories, not just in US, but also in Asia. There also is a decline in inventories in sense of gas in Europe, and that is what seems to be supporting markets right now. Apart from that, IEA and OPEC both have come out with the sense that you are looking at demand growth in this year and the next as well. Of course, their numbers differ, and OPEC is way more positive in sense of demand going forward. Apart from that, I'm looking at metals, where you have seen a bit of a profit-taking come in today. Copper prices, after hitting an all-time highs, have seen some decline. Markets also are looking at some profit-taking in gold and silver. This has to do with the mixed U.S. data that we are dealing with. While, of course, the inflation numbers have eased, but so has been the case with trade numbers. The jobless claims actually haven't declined as much, and the probability that you might see a rate cut in the month of September has come down from 72% to 68% right now. There also is a bit of a support in the US dollar index that seems to be weighing on metals. So after a very strong week, today seems to be a bit of a profit-taking in Asia.
Law of average is kicking in, I guess. Manisha, thanks a lot for joining in with all the updates from the commodity space. Now, the Supreme Court has curtailed the arrest powers of the Enforcement Directorate. The probe agency cannot arrest an accused in a money laundering case after the special court takes cognizance of the complaint. The ED will also need permission from the special court to take an accused into custody. Abhimanyu Sharma is here with more. Abhimanyu, this is quite an impactful verdict taken by the Supreme Court.
It's an important verdict delineating the scope of powers of the Enforcement Directorate. The Supreme Court has ruled that the ED cannot arrest an accused under the provisions of the Prevention of Money Laundering Act after the special court has taken cognizance of the complaint. Delivering its verdict on an appeal against a December 2023 order from the Punjab and Haryana High Court, the top court noted that the twin test for bail for release of accused will not apply in such cases. The apex court's order implies that once a special court takes cognizance of a complaint under PMLA, an accused appearing before the special court after being summoned will not be treated like he or she is in custody. If an accused does not appear, then a bailable warrant can be issued, followed by a non-bailable warrant if the accused still evades summons. If warrant has been issued on account of non-appearance, bail can also be cancelled in such cases. However, if the ED wants custody of such an accused after appearance on summons, it would need the court's permission, and the custody would be granted only if the ED's reasons satisfy the need for a custodial interrogation.
Abhimanyu, thanks a lot for that update. And with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.
1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. When we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY 26, then our EBITDA margin should see an improvement, and we should be targeting between 13 to 15% EBITDA margins.
One of the big lessons I learned, in addition to what I learned from my mother and father, was the guru, John Templeton. He was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. He was a very careful with money, and he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. I learned a lot from him regarding the need to be frugal and not to waste money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me. I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was a lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest hoarding. 14 other people found a mention on Monday evening courtesy of that hoarding, a mention in the list of the deceased. Blame games have begun, as is the case in most such tragedies. Additional Commissioner of the civic body told CNBC-TV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Another heartbreaking tragedy took place in 2017 when at least 23 people were killed and another 39 were injured in the stampede that took place on the erstwhile Elphinstone railway station, now known as Prabhadevi. The army sprung into action soon after, building a new bridge just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced and we never heard about that incident again.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Friday morning from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surbi joins us on the program today. Guys, good morning.
Hi, morning, guys. So we could have said, thank God it's Friday, but we can't because we've got a working Saturday and then we've got a very interesting Monday lined up. The Festival of Democracy is coming to Mumbai.
Well, that's right. And yesterday, what a surge we had in the final hour of trade. So, Prashant, let's take the cues forward.
Well, one just hopes that we have some follow-through today. And because, yesterday it really came out of nowhere. It was like a rocket. And started at about 2:15. Till then, it was, one was whining and wailing about how markets were ignoring the strong global cues, etc. But 2:15 on, the market took off and never looked back. And we ended a solid 200 points plus. And that should have been the day from 9:15 on, right? Because, overnight, the global cues were so strong, but nothing of the sort. It only began late in the hour. And then, of course, it did quite well. Now, huge volatility, as I said. But the Nifty finally closed above the 20-day moving average. There is one constant feature of the market. It is, of course, a fair bit of volatility, 40, 50 points here and there. Nothing. Now, overnight, it's not, of course, nothing like the handover we had when we came back yesterday morning, same time. It's more subdued. NASDAQ is down about 0.25%. You've got the 10-year yield in the US, which is up about 4 basis points. It's back at about 4.4. Dollar index has come up a little bit. But of course, day before, you almost had a 1% fall. So we're still at about 104.5. You had some data points which came. So US jobless claims, housing data, industrial production, they all were mostly sort of slightly on the dovish side. Only one thing out of the on the industrial production side, numbers which kind of worried the market was the import prices, which were very strong. And that kind of talks to the strength that retail and consumer demand is exhibiting in the US. You had some Fed commentary as well. So you had, Fed's Bostic warning that shelter inflation is significant and merits watching. Now, this is housing, right? And a lot of people, a lot of economists, senior economists have made the point that, this component could turn things on the dime. Expectations now, of course, gathering towards a rate cut, probably the first one sometime in September. But this is the data point, which I think is worth watching the most. Oil prices up another, we're basically back at about 83. That's been the range, 81.5 to about $83. So nothing very much to take away. Just to tie all of this back to our markets here, we put this data point yesterday as well, the FII shorts versus, the local longs. And one was looking at in the cash side, we did, FII sold, but they sold relatively small, some 800 crores worth of stock. Locals, of course, bought. But the fact is that on the future side, net shorts in index futures is still about 2.57 lakhs. Actually, day on day, that went up a little bit. So that is interesting. So there was no real big covering or anything on from the FIIs. Client long positions, and when we say clients, we mean HNIs, family offices, the local smart money. That actually went long, is now long, 2.8 lakh contracts. For clients, it's the highest ever. On the FII short side, it's not the highest ever, but it's pretty high at this point in time. So I think, we'll have to kind of watch this closely and how this resolves. While we were reporting on markets in the last hour and looking at the surge, one was wondering whether some of this actually is going to look different and FIs perhaps are coming back to cover. Not yet. Now for the Nifty, the level to watch out for on the upside, we closed above the 20-day. 22,422 is the first number. That's the retracement of the fall that we've had. So that's the first level which the market needs to cover from where we left off yesterday. And on the way down, the 40-day exponential is 22,273. Hopefully that should not break. That's about 100 points away from where we are yesterday. And then, of course, yesterday's low. Big swing day, so 22,054 is that number, which is the low yesterday. Bank Nifty broke above the swing high of 47,957 yesterday. On the way up, the 20-day, which is still not conquered, that stands at 48,190. Again, very, very numbers are very close by. And final level for the Bank Nifty to take out would be the 61.8, which is 48,832. Once both the Nifty and the Bank Nifty get their head above and do a solid close above the 61.8, then you can kind of talk about regaining the earlier highs, etc. But first, you've got to do that. GIFT Nifty will come up on your screen, and that should tell us how how the sort of at least the opening is set up. It's a quieter kind of a start, 20-odd points this morning. Surbi.
Prashant, yeah, absolutely. Nothing much to report, I guess, from Wall Street action. But there's plenty of action right now in Asia. I just wanted to point this out. The much-awaited Chinese data is out, and it's looking quite mixed. And markets across our neighborhood are also sort of a little all over the place, more down than up. Mixed trends from China. We should put up the Hang Seng. Yeah, so these indices are a little volatile right now. Retail sales for the month of April have come in lower than expectations at just about 2.3% growth. That's year-on-year growth. But industrial production, now that's really improved in April in China. 6.7% rise. This is again year-on-year. The pace has picked up even on a month-on-month basis, so that's good news. But then there's also the fixed asset investment data, cumulative for the first 4 years, that's looking weak. Real estate investment data, that's looking weak. So it's a little sort of mixed. Markets are digesting that. Let's see what kind of cues that we get from our neighborhood. But just coming back to our market, I mean, so I was looking at the fall, and the fall has been almost 1,000 points, 973 points to be precise, from the peak. The peak was hit on the 3rd of May, and we're talking about that peak being 22,794, so just a shade below the 22,800 level. Now, the market has recovered almost 63% of that fall. However, it's been a very choppy and volatile recovery. That's the issue that we're talking about. The other trend, absolutely no sign of FPIs. When I was looking at yesterday's numbers, so I thought, let me look at the data, the final data for the year as a whole as well, and those that picture is a little dismal. Because look at the numbers. In May, we've seen the highest sales so far, FPI sales of about 27,600 crores. The net sale for the year as a whole is about 25,400 crores. Yesterday's numbers, of course, will come on your screen as well. Yesterday, the selling was to the tune of about 780, actually a lot lower than the 4-digit selling that we've gotten used to. And DIIs, as usual, were big buyers, over 2,100 crores of buying. But the bigger story is in the bond market. Where are the FIIs? They're not coming to the equity street, but they're definitely going to the bond street. And we all know what the triggers there are with the inclusion of India and a lot of the big global indices. So look at that. Net inflow of over 44,000 crores in the debt market, whereas there is an outflow of 25,400 crores in the equity market. And that debt inflow is already looking very smart, even if you look at the whole year picture compared to last year. Anyway, that's a word on the fund flows. Yesterday, there was a bit of a drop in volatility in that last 1 hour surge as the expiry factor played out. But the VIX is still around 20. So we have to take that on board. Perhaps we will still have to deal with more of these election jitters, more reaction to the announcements, to the data that's, that the whole electoral process is throwing up. And in terms of results, we have a couple of interesting ones today as well. Just putting that on the table as well. So JSW Steel is going to come out today. Then we'll have some interesting mid-caps. There's Balrampur Chini, there is Bandhan Bank, and some of the PSUs which have had a good rally, NHPC, SCI. There's also Sobha from the real estate space. So an interesting bag of earnings also lined up. But, Nigel, how do you look at things?
Well, the advice has been don't write naked options. And it's known as naked options for a reason, right? Because yesterday, if you wrote options, you got whipsawed. Just take a look at the move that we saw in the final hour of trade itself. Yesterday was weekly expiry. And that's why we did see such a big move. From around 2:15 p.m. odd, we saw a rally of close to around 350 points odd. So naked option writing is a strict no-no. Leave it to the experts. Just avoid it totally. And we made this point in the last few days as well. So that was one of the reasons why we saw a bounce. The other point is, we had a release coming in from the EC with regard to the Lok Sabha turnout. And what was encouraging is that in phase 4, the turnout is higher than what we saw in comparison to 2019. Till now, we were worried, that the turnout actually was a little bit lower. So that could be another point that worked in markets' favor. A higher turnout is what you're looking forward to. Before this release, in fact, we saw that the turnout was a little bit lower, which was worrying markets. So that was encouraging as well, given that now we are factoring in that in all probability, we should see continuity. And that's what the stock market wants. Next up, the flows. Yes, the FIs are selling, but they're selling relatively less. And I look at it as the FI and the DI number together. And the total number that we got yesterday was a net buy number of around 1,300 crores. That's the highest that we've seen in May 2024. And that's encouraging as well. So these are the few reasons why we did see a bit of a bounce. One would say, well, there is short covering that's played out. Actually, the FIs didn't really cover their shorts, on yesterday's trade. They added some mild short positions and they unwound some positions as well. And the absolute number is at around 2.5 lakh contracts. And I've made this point many times that if you're comparing it to the earlier data, well, then effectively, the total short positions is at around 1.25 lakh contracts because the lot size itself has changed. So effectively, if you're comparing it with the earlier time, then it's around 1.25 odd. We have also seen 1.75, 1.9 as well. But a net short market is what you want because they get trapped on the wrong side. And that's what pushes up the markets. Which brings us to the levels then. The near-term resistance is around 100 points away from there. If in fact we can get past that, then all eyes will be on a fresh all-time high that we're looking at around 22,800, and around the 22,000 odd mark, that's where support is, and that's where the 100 DMA is at as well. The 20 DMA is going to be very crucial because the Nifty did conquer it in yesterday's trading session. We ended around 70 points higher than that. But the Nifty Bank, well, it was a relative underperformer. And the 20 DMA is around 200 points away from those levels. So as a trigger for today, on the bullish side, this is going to be the crucial mark that I'm looking at. A mild positive start is what you're looking at. Yesterday, we saw a big surge. Well, the bulls will want to build on to the momentum that we saw yesterday. And the levels, as I placed for you on the screen. A net short market is something that we like.
Absolutely, Nigel, I'd agree with that. Net short market, I mean, for today, and in any case, we're moving to a big event, which is the 4th of June. You've got a net short market on the F&O side. You've got a market where FIs simply haven't participated on the cash side. So depending on the outcome, there could be a massive moves as we get closer to that date.
I'll make one point, Surabhi. So, of course, elections, the results are going to be in the first week of June. The market usually gets it right. So, if the market senses that there is continuity, I would say that towards the end, right, as we go into that last week into the elections, the market should rally.
I see where that's coming from, and that sounds perfectly logical.
It should rally. But strange things do happen. I was in the newsroom in 2004.
That's true.
Right, when that famous
India Shining didn't quite.
So yeah, I mean, it's life. Strange things happen, but I would say that the market usually, because collective wisdom, right, is all opinion combined, and you see that price, and the price tells you what the collective kind of wisdom is showing. So it's doing what it is doing, but it should kind of reflect what the actual kind of outcome is going into the final thing. It could happen in the last few days. It could happen in 4 days, 5 days out, but it should happen.
The nerves of a Nifty trader in this season, and really kudos to all the traders who are managing to do this. Well, with that, let's move on to some money market views as well. On the rupee, Lakshmanan V of Federal Bank says that the US dollar index weakened to a 1.5-month low due to softer US inflation, while crude oil prices fell to a 2-month low. Although euro and pound were trading at more than a month's high, the rupee was under pressure due to equity-related outflows to the tune of $3.3 billion in the month of May so far. In the coming sessions, he expects USD INR to trade in a range of 83.30 to 83.65.
Okay, well, on bonds, we have Lakshmanan V, who says that Indian government bond yields declined, tracking a sharp drop in US peers as inflation in the world's largest economy came in lower than estimated. It's raised rate cut bets this year. India's CPI for April is at 4.8%, and that was in line with expectations. In the coming sessions, we could see the 10-year benchmark bond yield trade in a range of between 7 to 7.12%.
Well, we've got a lot of stock-specific action for you. We get to that in just a bit. For the time being, though, we run you through the list. We're looking at Biocon, Vodafone Idea, Vedanta, Concord, Endurance Technologies, Crompton, and Keynes Technology. All of them will be reacting to positive news flow. On the flip side, PB Fintech, AkzoNobel, and Prince Pipes will be reacting to negative news flow.
All right, well, let's get some global opinion. Phu Ken Yap is Senior Investment Strategist at Stancy. Phu, great to have you with us here. Good morning. Thanks for your time. So, just a quick word, Phu, on the flows picture, and if there's anything you're picking up from clients that you speak to and how they are positioned. Because, we were just putting out the data. Locals, both on the cash side and future side, are positioned in a long way. And you've got this constant barrage of selling from foreigners. Now, the debate is, what is that selling coming on account of? Some are saying, well, they're not selling because of the elections, because they've been sellers in February, in March, and April. So it's not an election-related thing. It's a bunch of other things. Your first thoughts, just feedback when you speak with clients.
Yeah, I think in the month of April, when we saw a bit of weakness in the US, we saw some flows coming out of the US towards Asia and out of Japan as well, which has done very well. And into China, actually, where it's been a very beaten up market for a long time. And then we saw a bit more policy announcements, at least on the very top level of policymakers. We saw a bit more bargain hunting going into China, a lot of watching about what's going to be the policy changes in terms of support for the property and housing market. And then the earnings as well, in terms of we saw a lot of earnings in the Chinese internet space this week. So we've been seeing some flows coming out of that. And we do see that China tactically, at least for the next few months, has some legs. It has been a very oversold market. We saw some of the buyback news has been positive. But over a 6 to 12 months view, I think our preference actually still remains with markets like the US, where the earnings season has been phenomenal. And I think that's going to be supportive. But in the short term, we've been seeing some more flows of bargain hunting going into China.
Fook, hi, good morning. I was looking at a note that you folks put out, and it was titled "A Triple Top in Rates." So just want to understand how this is playing out, because we were just discussing the numbers. Foreign investment coming into the Indian capital market, it's actually gone. All the money is moving to the money markets. It's going to Indian bonds. And the money is simply not coming to Indian equities. So any reasoning that you can ascribe to this?
Well, I mean, I got to say, firstly, that we do like Indian bonds, especially the, if you're 10 years above 7%. And we've got a view that the rupee can be relatively stable, going to about strengthening a little bit into 82. We think actually the local, in terms of the space of emerging market local currency bonds, India is favored, right? 7% is above the other peers and FX is stable. So we do like that. Now, in terms of the equities, we think that currently it is an opportunity in terms of we've seen the market consolidating a little bit, going sideways, but we do like India equities. We think that the post-election, the narrative of a stronger growth, continuity, that's going to come back. So it's a bit of a consolidation phase now, but we do like Indian equities. We think it is an opportunity. But right now, I think tactically, we've been seeing very strong momentum in China, and some of the flows you are seeing is directed. Questions we see are directed in that direction.
Hi, Fook. Good morning and good to see you, Ben. Fook, a two-part question is what I had for you. One is on the Fed action. Earlier we were talking about a March cut, then June, it's pushed down to September, which now the street is factoring in as a certainty. Do you think that actually comes in? And the second part is, the FI flows, well, they haven't been there getting into the election. But I was looking at historical data, and the FIs actually, they don't buy ahead of the India election. They come in a little bit later. So post getting a positive verdict, do you think then we'll see the big FI inflows?
Yeah, I mean, on the Fed action, our view is that we're going to get 2 rate cuts this year. One in Q3 and one in Q4. And I think a lot of the issues has been about the yields and inflation. We saw 3 positive surprise for inflation, and then the last print that we saw has been a negative. So the inflation has been a bit weaker than expected, which is good news for the market. And so I think we saw the S&P 500 making new highs, and we do expect that it can continue to outperform, as we do expect inflation to come down and the narrative or rate cuts will come through. Now, I mean, the sensitivity of the market pricing, of course, is to the data that comes in. And we still need to see, we've got employment data coming in, and then we need to see inflation prints as well. And we're still in an environment where bad news is good news, in the sense that when you see a weaker economy, that will prompt the Fed to cut rates, and then that's going to be positive for the equities. So yeah, I mean, we do expect 2 rate cuts this year, and that's going to be supportive, especially for the valuations for the US. But it's really the earnings where we've seen 2024 and 2025 both upgraded post Q1 earnings season, and that's a positive for that. Now, in terms of the view in Asia, I think, yeah, we do like India equities, as I said. I think it's consolidating a little bit at the moment, but the narrative is there. I think a lot of people do view it as a core allocation, as it's going to be growing very strongly in the medium term. So the election is news that we're following, but then we think post-election there would be more coming in.
Okay, all right, Fook, we will leave it on that note for today. Thank you very much for joining in and giving us some perspective on the Indian market. Well, on that note, we do have to take a very quick break. We'll come back on the other side with our list of top stocks to watch out this Friday morning.
Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of a few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21.
Welcome back. Well, you are with us on Bazaar Morning Call, and it's time to talk all the individual stocks that we need to watch out for. And as usual, we have our team standing by with that list. Guys, morning. Ekta, let me start with you first. Biocon numbers are in. They look good?
Well, yes, the Biocon numbers did look good. It came out post-markets yesterday. Revenue was up around 3.8% year-on-year. Street was anticipating around a 2% growth. Margins came in better than expectations at 23.4%. And the profit was a little lower than expectations. But nonetheless, there was a lot of, this was a year where there was a licensing income, etc. So revenue and margins were something to basically focus on. Biosimilars, 59% of sales was better than expectations according to analysts. So it was up 12% on a year-on-year basis. Generics, 18% of sales was sluggish. It was down 3% year-on-year. And that was primarily because of the API business. The company said that they are seeing a pickup in their key biosimilars such as pegfilgrastim, trastuzumab. Liraglutide approval, which is a GLP drug in UK, was an important approval for them. They said that GLP drugs will play a major growth driver FY26 onwards. Debt management continues to remain a priority. Formulations will be a key growth driver going forward. FY25 will be a year of consolidation and transitional acceleration of growth, which means they expect more opportunities to come up in the second half of FY25 and revenue will pick up then. And overall, they expect a stronger second half. Expect the stock to be in the green today on account of, good numbers in terms of margins as well as the guidance that they have, especially on GLP-1 drugs.
Okay, all right. Thanks a lot for that, Ekta. Well, let's go to Rima. She's here to tell us about Vodafone Idea. Morning, Rima.
Well, it's stable, decent sort of numbers. Nothing great, but not terrible also. So revenues have declined for the company by 0.6% on a quarter-on-quarter basis. And just to recap, Ben Bharti reported numbers, it was a 2% quarter-on-quarter revenue growth. Margins have improved on account of cost savings by 10 basis points. Though the loss continues in this quarter, it's at about 7,600 crore of a loss. There is a subscriber loss, so the company continues to lose subscribers, 2.2 million subscribers lost. But compared to what we've seen in the prior quarter, the subscriber loss was less. The ARPU increase is just about less than 1% actually, to 146 rupees. There is an earnings call at 2:30 p.m, so we'll be listening in closely to that. Back to you.
Okay, thanks a lot for that, Rima. Well, I'm looking at Vedanta. They've gone ahead and declared a dividend of around 11 rupees per share. That's a little bit higher, because Hindustan Zinc had paid out dividend. And out of that, if you do a calculation, then Vedanta should have paid out close to around 7 rupees 40 paise as a dividend payout from what they got from Hindustan Zinc. But at 11 rupees, it's a little bit higher. The total payout will be around 4,090 crores, out of which the promoter entity gets around 2,500 crores, which is good because that equates to around 300 million odd, which takes care of that $1.1 billion repayment that they have scheduled for the remainder of this year. So the Vedanta Resources is in a good space because they get $300 million, which the market will like. They've also approved an equity raising plan of around 8,500 crores. At current market price, it equates to around 5%. We'll have to see what they do out there. And also they're talking about setting up a 125,000 copper rod plant in Saudi Arabia. So that's the third piece of news that comes out. I expect the stock to open up in the green. But moving to PB Fintech, Sudarshan joins us to tell us more. Sudarshan.
Morning, Nigel. So Newsbreak is confirmed and the company has confirmed about 2 of its directors are looking to sell up to 1.86% equity via block deals. Yashish Daya, who is chairman and CEO, is looking to sell up to 54 lakh equity shares, and Alok Bansal, who is vice chairman, whole-time director, is looking to sell up to 29.70 lakh share. So post stake sale, the stake in the company will come down to 4.5% from the current holding of 6.4%. So what will they use these proceeds for? Q4, company says stake sale proceeds will be used for tax payment and future ESOP exercise. And the information we have through sources is offer size of the block deal is of rupees 1,053 crore and floor price is at rupees 1,258 per share, which is at a discount of 6% to Thursday's closing price. So I'm going with red for the stock.
All right, so thanks very much for that. But more names, Container Corporation and Akzo Nobel are in focus. Actually, you'll have both companies join us a little later in the program to talk about the numbers. But let's get the details in first. Mangalam has got those. Mangalam.
Well, for Container Corp, the volume data we already had for the quarter, and it turns out with the reported numbers that volumes are better than realizations. The margins have improved year on year. It's a largely mixed set where the revenues were slightly above what the street was anticipating. The margins were a mild miss. If you look at the revenues, the company reported a growth of 6.5%. The EBITDA was a growth of about 11.5%. Margins around 21.4%, and the net profit was a growth of 13.5%. What's heartening, however, is that the revenue growth was led by the EXIM segment, which is the larger contributor to their overall revenue, so up 9% out there. And the margins were led by the domestic segment, which saw a margin improvement of almost 100 basis points. The quarterly land license fee run rate also has come in at around 83 crores, which is a lot lower than what it was same time last quarter. So mild green is what I see on Container Corp. More importantly, for Akzo Nobel, it was a soft set, but that's in line with the industry. If you look at it, Berger Paints reported a 3% revenue growth, Akzo Nobel about 2.3%, Kansai 2%, Asian Paints was largely flat. There was some gross margin improvement, but the top line growth did not percolate all the way down, and which is why we've seen 4% sort of EBITDA growth. The net profit also grew about 13%. See some mild red on Akzo Nobel.
Okay, that's Akzo Nobel. And Mangalam, just run us through Concor as well.
I spoke about Container Corp. The volumes were better than realizations this time around, and we did see some bit of margin improvement. It was led by the EXIM segment, so see mild green on Container Corp.
For that, well, let's quickly move on to Endurance Tech. Sudarshan's looking at those numbers for us. Sudarshan, how do they look?
So it was an operationally strong quarter. If you talk about the numbers, profit was up 54%, revenue has increased 20%, and margin has come in at 14.5% against 12.8% against the same quarter last year. But more than numbers, what is more heartening is the outlook. Company expects total order book is expected to be boosted further as company has 1,840 crore worth requests for quotes which are under discussion with several clients. And in FY24, total orders have surged to almost 1,200 crore, which is up 28% year on year. And ramp up numbers for new orders is seen rising 3 times by FY27. Currently, it's at 920 crore, and companies expecting it to increase to almost 2,700 crore. Lastly, talking about the brokerage views, of all the brokerage coverage, more than 60% have buy call on the stock, and target price is as high as 2,375, which indicates upside of 20% from current levels. So I'm going with green for Endurance Technologies.
Okay, all right. Thanks for that, Sudarshan. Well, Upasana joins us to fill us in with more earnings. So, Upasana?
First up is Crompton Greaves. The company reported an in-line set of numbers. Revenue up 9% on a YoY basis stood at 1,961 crores versus the poll estimate of 1,942. EBITDA margin stood at 10.4% versus 11.8% on a YoY basis versus the poll estimate of 10.3%. PAT saw an uptick of 2% at 133 crores versus the poll estimate of 125. The revenue growth was led by strong growth in ECD segment, and on the lighting side, revenues were flat and margins saw a dip of almost 180 basis points. That is mainly due to continuous pricing erosion seen in B2C lighting business. Next up is Kaynes Technology. The company reported a good Q4. Healthy demand was seen across the segments. The revenue saw an uptick of 75% on a YoY basis. EBITDA margin stood at 14.9% versus 16.3%. Order book of the company stood at 4,115 crore, up almost about 9% sequentially, providing a strong visibility for growth for FY25. Well, the growth was led mainly by strong demand in industrials in EV, aerospace, electronics and railway segment. Lastly, coming to Prince Pipes, it was a weak Q4 for Prince Pipes. While the volume growth remained quite strong at 16%, revenue was down almost 3% on a YoY basis. EBITDA margin saw a dip of almost 510 basis points at 13.9%.
Upasana, thanks very much for those details. Let's get a quick check on commodities as well. Manisha is here with that. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, I'll start with the crude oil prices, where we are seeing it heading for a first weekly gain in 3 weeks. There are signs of global demand improving, and there is a decline in inventories in most global markets, and that has been supportive. But the profit-taking clearly is seen in the metals as a sector. I mean, we've seen all of this week see strong gains in base metals and precious metals as well. But right now, the markets really seem to be dealing with a mixed U.S. data, where the U.S. industrial production has stalled, but the initial jobless claims also have seen a decline. The trade data, in the meanwhile, has been on the stronger side. So gold and silver is off its highs from this week, and that's exactly what you are seeing in base metals also. Copper prices have slipped off on profit-taking after hitting all-time highs. There is a bit of a profit-taking that you also are seeing in iron ore. Steel prices also slightly on a weaker side in Asia right now.
All right, Manisha, thank you very much for that. That's some of the commodity headlines of the morning. Let's move on and quickly get our first management conversation going for the day. And it's Crompton Greaves Consumer, which is in focus. The fourth quarter numbers were in line with street estimates, aided by strong revenue. Let's connect with Kaleeswaran Arunachalam, the Chief Financial Officer of the company, to discuss the Q4 performance in detail. Mr. Arunachalam, your sales growth was supported by the ECD segment. What kind of volume and value growth do you envisage for the segment in FY25 and perhaps for the company as a whole?
To start with, as an organization, we don't provide forward guidance. But having said that, I would like to delve a little bit more on what has happened in FY24. It's been a year where we transitioned into Crompton 2.0 effective Q2 onwards. And extremely glad to state that after many quarters and years, Crompton has reverted back to double-digit revenue growth on a standalone basis. This is aided by very, very strong performance across all the categories in ECD. For example, for the first time ever, maybe we are the largest player in the world and the first one to cross 2 crore fans to be sold. So that's one of the big milestones that we have achieved. We have also seen broad-based growth across categories in ECD. Our pumps business on a full year basis have grown at double digit. Our appliances business, led by both our LDA and SDA portfolio, is tracking at 25% plus growth. The new initiative that we have started in large kitchen continues to grow and continues to expand. And one of the main focus areas that we called out is how do we arrest the decline that we have been going through in our lighting business. I'm extremely glad to state that the lighting decline has also been arrested, and all these are happening amidst very strong improvement in our margins. If you look at the category-wise margins, ECD margins have expanded significantly. We started the year at around 12% EBIT margin in ECD. We are now inched almost close to 17% in ECD. Lighting margin, in spite of the challenges that we had during the year on account of price erosions and competitive intensity, EBIT margins in lighting have also expanded. The other business, the new baby in our portfolio, which is Butterfly, that we recently acquired about a couple of years back, it's still in transition. It's work in progress. We are looking at corrective actions that we have to take to ensure that it pulls its weight as a brand and a leader in the kitchen category. Some of these things were around how do we de-risk some of our non-core channels and also start moving towards retail business led by trade and RCS. So that journey is moving on in the right direction.
All right, Arunachalam, currently Butterfly contributes close to 8% of your revenues. Long term, where do you see this number going? And also, when do you see Butterfly's margins turn positive?
Start with the kitchen is the largest segment that we play as a group. There is Butterfly, which we recently acquired. And there is Crompton Kitchen, which comprises of the mixer grinders, wet grinders, and the garment care segment that we operate within Crompton. And then there is a built-in kitchen that we have in Crompton as a portfolio, which has the chimneys and hobs business and the microwave ovens, which is also helping us to premiumize the overall portfolio and the brand Crompton. Now, specific to Butterfly, there has been certain interventions that we had to make in terms of the channel corrections that we need to do. Largely, that has been completed. As we move forward, we look at the business to grow at a double digit in the long run. And in the near term, probably whatever the correction that we need to do and take the charge on margin, etc., by and large has been completed. As we look forward to next year, we want to make this business a very strong, solid leader in the categories that we operate in. Today, if you take Crompton plus Butterfly together, we are already a number 2 player in the kitchen appliances category. And we have already have a portfolio of kitchen that we have been growing very strongly at about 30% plus for the last 2-3 years, which is the Crompton small domestic appliances. We should be able to translate those learnings into Butterfly, make Butterfly grow at a double-digit business and get it on track to about 8 to 10% EBITDA in the long run. So that's what we're looking at. I think as we move forward, step one, the margins would be positive in FY25, and the margins would also start to expand from there onwards.
Mr. Arunachalam, good morning. Now, lighting business revenues remain flat. Margins are also down there, about 180 basis points. Could you share with us what is the growth trajectory and outlook on that side from here on?
See, lighting, if you look at it, first and foremost, then the margins that you're seeing in lighting and Crompton as a whole plus Butterfly is impacted by a full year liability crystallization towards extended producer responsibility. This is a recycle initiative that has been started by Government of India, and we have taken about 6 crores of it in our lighting business and 15 crores overall as a group. So if I adjust for that and look at lighting margin, the lighting margin has expanded in Q4 also. From an overall business perspective, our B2B portfolio is doing very well. We have created an enterprise vertical, which has helped us to win very strong orders. This constitutes both one with the National Highways authorities and also some of the corporate orders that we could get with marquee clients. Now, coming to B2C, B2C as a category continues to see price erosion. This is largely in the bulbs category, followed by reasonable price corrections that are seen in ceiling and battens also. We haven't undertaken any price increases in lighting, considering that the category is already going through a price challenge. The way that we are trying to grow the margin is by taking 2-3 actions. One, we have a project, Unnati, which helps us to focus on the overall cost of the company and see how do we drive at least 4 to 5% productivity on a year-on-year basis. Our new product launches that we are making are also made as fit to purpose, which is helping us to improve the margin. The third is driving better mix. We see there is significant opportunity for us in our lighting portfolio to push ceiling category as compared to other bulbs and battens. So over a period of time, when the saliency of ceiling goes up, this will also help us to expand margin. So lighting overall, the decline that was there when we started the year, which was almost at a double-digit decline, has been arrested. We are on to growth path. B2B is delivering strong growths. We expect B2C also to follow, and margins would remain strong as we have seen already in FY24.
Mr. Arunachalam, I know you've said that you don't give out specific guidance, but let me try to get a general outlook at least instead for the current year on revenue as well as on margins.
When we started with Crompton 2.0, we want to deliver a strong competitive performance, both in terms of revenue and bottom line. The idea was start with a double-digit revenue growth. We have achieved that in FY24 after many quarters and years. We expect that to continue and expand the revenue growth as we are looking at FY25. The summer has started positive. Let us see how does that move forward. So as far as margins are concerned, we called out that we would be focusing on absolute profits and ensure that the absolute profit growth is more than the revenue growth. This in the long run will help us to expand the EPS and create value for all stakeholders.
Okay, well, we'll leave it there, Mr. Arunachalam. Great to have you with us here. Good luck. Thank you for that chat this morning here on CNBC-TV18. We'll take a break. We are back with Nischal Maheshwari, CEO Institutional Equities, Advisory, Centrum Broking, with some fundamental stock chat. Stay with us.
CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good Friday morning. Well, we listed out all the top stocks that you need to track. Nishal Maheshwari, CEO, Institutional Equities and Advisory at Centrum Broking, joins us on the show. Hi, Nishal. Good morning and always good to see you in. Well, let's talk about the telecom space. You know, Bharti Airtel came out with a set of numbers. The management liked the commentary. I think in the last year or 15 months or so, the stock has moved from around 700 rupees to around 1300 rupees. But we have Vodafone Idea as well that came out with a set of numbers. Massive response to the FPO. What's your view on Vodafone Idea?
Hi, morning, Nigel. Morning to all your viewers. Yes, I think Vodafone, as expected, I think a bit disappointed basically on the revenue front. Otherwise, if I look at it, margins or our ARPU increases or even the data usage, I think all of them basically seems to be in line. Now, I think the most important thing is basically because these are results. And after that, the money got raised. So that's why I think the money which has been raised basically is not been deployed as yet. So this quarter results do not reflect anything on that. So as we go along, basically, we'll see. So I think management commentary is the most important. Otherwise, I think the results are more or less as expected.
Okay. Nishal, hi. Good morning. Great to have you on the show. So just, away from earnings, I wanted to talk to you about Policy Bazaar, PB FinTech, and what the view is on this one. I mean, today we're expecting that perhaps promoters will unload a little bit of shares in the market. But, I mean, otherwise, how do you view the performance? Stocks also run up. So what's the call?
So, morning, Surbi, we do not cover it basically, but I've been tracking that stock. I think it's performed very well. I think the numbers have been pretty much in line. Or better than expected, I would say, basically, because we do not have any numbers. So my personal numbers, basically, the stock numbers have been much better than expected. But let's see, basically, I think Go Digit is also getting listed. So some amount of profit taking should happen. So that's the way, basically, I see. I think you have a competitive stock, basically, which is also coming on. So I think some amount of profit taking should happen at these prices.
Did you manage to see the details on Go Digit, Nishal, since you brought it up? Because I believe some of the parameters are still, they leave more to be desired, combined ratio, stuff like that. So just a view in case you managed to go through the financials and Go Digit.
So I do not, so at the moment I have not looked at the details of Go Digit. So difficult to comment there, basically, that how all those parameters stack up, basically. But given that it's also in the same industry, definitely, I think some amount of comparison will happen.
Okay. I mean, Surbi is a very small player, actually.
And it's a very
looking
small
at the market share. I think market share Go Digit is about 3%.
Yeah.
ICICI Lombard and the other player, which is New India. I mean, the biggies in general insurance are by far. I mean, this is, of course, a smaller player, but a fast-growing player. And it's come up very, very fast in that sense. So it's an interesting one with some star power attached to it as well. We'll, of course, talk more about this as we go along. The IPO, I think, opened. It's already open.
Yes.
Today is the second day.
I think it opened on Tuesday.
Yeah. It opened. Yeah, it's been open for a few days. I think today it must be sort of wrapping
Probably closing.
up. Yeah. So we'll change those dates for you. All right. Nishal is of course with us. Nishal, morning. Mahindra and Mahindra. The numbers. They put out a guidance as well for how business will look in FY25 and FY26 also. There is a large investment which has been announced on the EV side. Just your thoughts on the stock.
I think outstanding performance of Mahindra & Mahindra. I think not for this quarter alone. I think for the last 2-3 quarters. As we go along, basically, I think obviously EV is one of the spaces which they are targeting pretty aggressively. But as we go along, I think if there is a good monsoon, I think the tractor division should also start, and the farm implements, both of them should start doing well in the next couple of quarters. Yes, I think the stock has run away quite a bit, but still okay as far as valuation is concerned. We continue to favor the stock even at these prices.
Okay, all right. What about Nishal? What about Vedanta? They've given another dividend, which is something that the street always looks forward to. 11 rupees now is what you could expect. They're talking about raising some equity as well. So at the parent level, things are getting sorted out. The fear is that, always Vedanta Resources heavily leveraged and anything can happen out there. So, this is good news. But the stock is already at around 430 rupees. Seen a big rally. Your take on the stock?
So I think the stock has run away, I think, in expectation that if the businesses get split and each of these companies get listed, so even our SOTP valuation is closer to 600 rupees for Vedanta. Now, the timelines are not defined, but I think this is the market expectation. Obviously, I think the dividend is there. And we also expect, I think, closer to 40 rupees of dividend even this year. So that is definitely, I think, yield of around 8-9% on Vedanta. But I think the bigger trigger still remains to be if and when the dates gets announced, basically saying that the split is going to happen and maybe 6-7 companies get listed separately. That will be a big unlocking of value. So I think market is sort of pricing that in, and we have a buy even at these prices from Vedanta.
Okay, so you like Vedanta, got that, Nishal. Any of these EMS players, do they interest you, Nishal? I mean, any thoughts in this arena? And also, I mean, I don't know, companies like Kane, Sirma. Kane's numbers were looking very strong, by the way. They reported after market hours yesterday. Any thoughts here?
So certainly we do not cover it at the moment, so difficult for me to comment there.
That's on the electronics manufacturing side. If I just talk about consumer durables, maybe a stock like Crompton or Havells and, the trends that we've seen this season, what do you make of it?
So I think after a long time, the whole sector has started doing well. The wires and cables guy were anyway doing well. So if you look at it, KEI and Polycab has done extremely well even in this quarter, and they've been doing well for the last 3-4 quarters. I think now the AC guys have started doing well. And now the fans, even yesterday, Crompton results were pretty good, basically. If you look at it, the fan segment was pretty good. I think margins have been better than expected, even after they were spent quite a bit higher than expected advertising expenses, especially on the Butterfly side and even on the Crompton side. Still, I think the numbers have been good. So as we go along, summers are pretty strong. So I think even they will be benefiting out of that. So we are positive on the whole space now. I think after a long time, even Havells has, that way the numbers have been good. Havells, the only situation remains to be is that it's run away quite a bit. So we have an ad on Havells now, but we have a buy on Crompton.
Yeah, no, absolutely. Get that. Just a quick word on a few more names, right? Because we've been highlighting some of these stocks for a while. Capital goods, manufacturing, power equipment, that's a space, Nishal, which has seen such a big move, right, over the last couple of days. Started, of course, with the biggies, which is Siemens, ABB, etc. But now, of course, everything has been doing well. So I just want to quickly, for our viewers, just put these names up on the screen. Just run through these names and comment if you will, if you want to. So look at what happened yesterday. Titagarh, Texmaco, Big moves on these names. And by the way, Texmaco management joins us in a bit. Titagar, of course, was with us yesterday. Stock ended 10% higher. Very strong guidance. Texmaco was up 6%. Ircon is another sort of railway kind of name there. Look at Genus Power. I mean, varied sectors, but the broad theme, of course, is capital goods. You had Inox Wind, which was up sharply. That is Genus and Inox Wind. You had Kirloskar Brothers, which was up sharply. That is the KEIs of the world, which continue to rally hard. Many of these names, of course, are at new all-time highs. Yesterday, there was a new addition. These bearing companies started to participate very strongly. So, Timken, Schaeffler, SKF India, some of these names ending between 5 and 15% higher. It's kind of rotating. And, of course, HAL, etc., from the defense side, I think we've been talking about that one as well. From this space, broadly, Nishal, the bet, of course, is that this spend on industrial infrastructure will continue to rise. Order books are looking very strong. Lots of companies are expanding capacity in various areas. Transformers, for example, is one. But what would you bet on at these prices is the question.
Yes, I think that's a bit of conundrum, basically, that everything seems to run away quite a bit. But I think there are pockets where I think the performance has been strong. The order books is still very strong. And that's why you can actually look at it. So some of these railway stocks like Texmaco, Titagar, I think there still, I believe, some steam is left. Again, another stock which got the results were declared yesterday, Triveni Turbine. I think there also the numbers have been very good. The order book was still again strong. So I think there again you can look at it. Some of these stocks which are underperformed in the last 1.5 years, especially the bearing stocks, I think they are coming back strongly, though the numbers in the current quarter were not very strong. But I think they are playing a bit of a catch-up because they are underperformed for a year and a half. So I think that's what is happening. But overall, I think the order books are very good. There is spending which is happening from the private sector. And that's why you are seeing the whole sector once again doing, giving a thumbs up. So I think the situation still continues to remain good. We are still seeing very strong demand on the ground. So continue to remain invested.
All right, Nishal, stay with us. For the time being, we'll take a snappy break. We come back. Midesh Thakur and Shrikant Chavan as well will be joining in to give us their technical strategies.
Markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India
Welcome back. There's, of course, 8 minutes to go for the pre-open session, and the market is going to start about 20 points higher. So it's a flattish, quieter kind of day. Mitesh and Shrikant are with us with what they want you to do this morning. Gentlemen, good morning. What a day yesterday, right? Absolute rocket after about 215 or so, 200 points higher on the Nifty. So is there a safe way to trade this market, Mitesh? Broadly, I think with stocks, I guess stay long because, even when the Nifty has been coming off, broader market, even day before yesterday, has looked just fine and healthy. So much happening there.
That's right, Prashant. And even I think sectoral activity is showing good traction. So The overall market, broadly, if you look at the last few weeks of data, you've seen multiple lows being made around 21,800 and 22,750, I think, is acting as some kind of a supply zone. So it's broadly evolving as a wide range of about 900 points. And that's where we are. Now, the midpoint pivots are at 22,400. So there's one, important level over there. And the other important level is 22,530, 550 zone on the hourly chart. So I think, in a day or two, we might head towards 22,530, 550, and then even try to head higher to about 22,700, 750. Given the fact that we'll have the May and expiry and election results, I would suspect that we might not break above this immediately. But let's see how we react, how we behave when we are towards the upper end of the range. Now the idea should be that 22,200, which was crossed decisively yesterday, and then we saw a big bar on the hourly and 2 hourly candles. I think now that becomes your important stop loss level. So any declines close to about 22,300, 270 zone would be a buy.
And Mitesh, I guess the tip would be never to leave your chair, right? If you're a trader in this market, not even for 10 minutes, anything can happen. Morning, Shrikant. Good to have you as well on the show. Tell us, how are you looking at the indices?
Good morning, Survey. Good morning, everyone. Yeah, I think Nifty is very clearly moving upward. It is forming higher base formation. On Thursday, after hitting the levels of 22,050, the way it recovered and closed above 50 days as well as 20 days simple moving average. One thing is very clear, that it is going to hit the upward range, which is somewhere close to 22,600, 800 levels. But the strategy should be to buy on dips close to 22,300, 22,250. The market is having excellent support in terms of averages, and the markets are volatile. VIX are still at 20.5. So we can expect a volatility and correction during the day. So in case if there is any drop because of any reason, close to 22,300 levels, look for adding positions with a stop loss below 22,200 for intraday traders. And we can again expect on the higher side 22,500 to 600 levels in next 1 or 2 days of time. For the Bank Nifty, there also we saw smart recovery, and 48,000 was something a serious resistance for the market, but it has broken that. So we are expecting now Bank Nifty is moving towards 48,500, and we can expect leadership from banks.
So we know that point about never leaving your chair, right, through the course of the day. Yesterday, somebody wrote on Twitter saying that मैं lunch करने गया, market down था 100 point. Lunch करके आया.
And if his position was open, then oh god.
No, Nifty था ऊपर 200 point. So obviously he was long. He said that pros मम्मी को बोलूँगा जो बनाया था कल वही बनाया. Just a different sort of angle to this entire thing. But jokes aside, what are your trades, specific trades, gentlemen? Mitesh, why don't you start?
Prashant, I have mostly buy calls. Excite, has been consolidating after a good rally, consolidating a new highs between this 475, 476 to about 450, 445 kind of a range. Good chances that we'll see a break above 477 today. So buy above that, keep a stop at 470. Look for a target of 495 to begin with. JSW Steel is a buy with a stop at 870 for targets of 920. Britannia, I'm waiting for the stop to clear the pivot of 51 and 50. Then it becomes a trading buy with a stop loss at 5,100 for targets of 5275. Disclaimer, it's a part of my holding, so I have some vested interest over here. And I would sell on Bandhan Bank with a stop at 184 for targets of 170.
Okay, got that. Shrikant, what about your stock-specific trades for the day?
Yeah, I would like to go with bank stocks, and in that specifically State Banks looks good. It is relatively outperforming to the PSU basket as well as private basket. It is consistently holding above the levels of 800, which is positive. And based on its technical formation, we can again see the levels of 840, 850 in the near term. So it looks a very attractive buy at current levels with a stop loss close to 795. With a target of 840, 845, we should look for adding State Bank to the positional portfolio. We also like metal companies, but in that Tata still looks good. It is consolidating within the range of 175 and 160 whenever there is a correction. We see some drop close to 160 levels, but most of the time it recovers back. This time I'm expecting stock to break the upward barrier and could hit the levels of 180, 83. So Tata still looks a very strong candidate to buy at current levels with a stop loss close to 160.
All right, gentlemen, thanks a lot for that. By the way, as we're having that conversation, I think the PB FinTech block is currently underway. I think it's almost taken place. So we'll do one thing. We'll slip into a short break. We come back. We'll get to the pre-open rates. We'll also get chatting with the management of Texmaco Rail and Engineering. Stay with us.
Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
Okay, first rates are in, and by the way, I don't know if this is a free crate on Adani Ports or what, but it's the only reason I'm mentioning this is that I think it was a Norwegian institution, I think, which put out some sort of caveats yesterday on a couple of Adani Group stocks. They are removing those holdings from their own portfolios. We'll try and sort of get more details back on it. But anyway, that's the first rate on Adani Ports. The overall Nifty rate is about 1% lower, but that should stabilize. So let's wait for these things. A couple of bank stocks are showing all kinds of freaky rates, at least for the time being. Let's quickly go across and get some F&O trades going then. We have Sneha Sheth joining in from Angel One. Sneha, hi, morning. What are the trades you're looking at today?
Very good morning. If you look at yesterday's recovery from the lower levels of 22,050, I think the resistance, we have managed to surpass it. In fact, we have given a very strong close yesterday. I think we may head towards 22,500, 600 also. And on the lower side, I believe 22,200, 300 zone should be acting as a support. So in case of any kind of a dip, we should be, adding some longs. As far as individual counters are concerned, I have a two buy call. First is on Tech Mahindra. This counter, despite yesterday, we saw initially index showing some weakness, but this counter was holding quite well. I believe this counter has potential to move towards 1457 odd levels. So with a strict stop loss of 1279, it's a buy for me. Apart from this, Ashok Leyland, this counter looks quite well. I would recommend buying this counter as well with a strict stop loss of 199, and the target can be expected around 220.
Okay, all right, Sneha, thanks a lot for that. Well, Nishal is still with us. Nishal, I wanted to ask you about your view on Adani Ports. It's a stock that should be just opened up. If it's going to open up with some weakness.
Well, it's stabilized now, I must point out. It has completely stabilized now. I mean, there's a lot of chatter, a lot of press articles on this. It is the Norges Bank.
Yeah.
They said that they want to sell a large part of their holdings. So just placing that on the table, basically.
Okay, your view, Nishal, on Adani Ports?
I think these kind of things basically are opportunities only in this market. Yes, one institution may have taken a call on it basically for whatever reason, but it doesn't change anything on the business outlook or that Adani Ports continues to remain the largest operator of ports in India and continues to do pretty well. So if the stock opens 5-10% down, I think it's clearly an opportunity to buy.
By the way, speaking of pre-opening rates, a lot of the bank stocks are still holding on to early weakness. Axis, HDFC Bank, ICICI Bank, all of these are pointing south. But it's still early. I mean, it's just about getting the first rates in. And from the looks of it, if you go by these rates, then the auto sector some of those names could have a good start again. So M&M, Tata Motors, still looking at perhaps some more incremental up move.
You know, yesterday, Surbhi, you had Abhishek put that note out, right? MK came out with a note. You know, the analyst at MK, of course, is the ex-JP Morgan analyst who tracks financials. And he had a pretty sort of, at least on large financials, and maybe we'll be able to pull those graphics up, but he had a pretty sort of, you know, negative outlook on some of the larger banks. And actually, you're right, because yesterday also, there was pronounced weakness in PSU banks more than anything else. PSU bank index, I think, ended about 2% lower. And of course, some of the larger private banks, with that recovery, of course, HDFC Bank, etc., came up a little bit. But there was that note, I think, at the margin, which was worrying. This morning, I think there is also, of course, Macquarie, which has come out with a note, and we'll have more on that. I mean, they're, of course, talking about this deposit hike from SBI and what that could mean. But that is in a bit from now. Those are some of the points which MK was making with regards to the on the deposit side. Really, there's, I think, you know, the pre-open, of course, is settling down. Another 4 minutes, and we'll be sort of at the end of the pre-open session. Nishal, any other sort of opportunities that you see? Any other sort of single stock ideas which looks really attractive? Yesterday, Nishal, we had Nimesh Chandan of Bajaj Finserv with us, and I was asking him, you know, he said, well, the only way to make money if you're looking to get fresh exposure is to be contrarian. And, you know, one of the sectors you can do that in is chemicals. So you think there will be perhaps a re-rating within the next 1 year or so? Any thoughts, Nishal?
So I think chemicals, though it is disappointed this quarter, I think agrochemicals seems to be now coming out of issues, especially on the domestic front. If we have a good monsoon, I think agrochemical is going to be the first space which is going to get traction first. And thereafter, as Europe recovers, I believe basically most of the other chemical sector is also going to start doing better. So yes, I think in the next 1 year, chemical sector is one where you can actually look at for traction. First on the agrochemical and then on the specialty chemical.
Nishal, did you look at this Aadhar housing finance? You know, day before yesterday it listed flat, no interest. Yesterday was up 10%. It was part of our D Street chatter as well, and we got confirmation that I think Akash Bansali picked up a large chunk. 20,000 crore AUM, 20% CAGR growth, and 60% exposure to the salaried size. Ticket size, housing loans is about 10 lakhs. So a lot of growth there in that segment. Any thoughts on this one? And it's still cheap as compared to some of the other listed players.
Yes, that was I about to say. Basically, it is the cheapest stock as far as the housing finance is concerned. And I think it's pretty well priced. So I think at these prices, basically, definitely it should be a buy. I was surprised how this kind of a response happened on the day one. I have known this company for a long time, and definitely I think this is worth a look. They have done pretty well in the last 5 years. I think they, after Blackstone has bought, they have doubled the AUM from 10,000 to 20,000 crores. And the growth still continues to be there. So I think it's in a sweet spot of around up to 10 lakhs or 12 lakh rupees, basically. That's a ticket size. So it's a pretty granular company that way. And I think growth is good. So at these prices, definitely a buy. Though we
Thanks
do not.
Okay, Nishal, appreciate you stopping by and giving us your view on a whole host of stocks. Wishing you a good Friday ahead. Well, let's get to our next corporate. We have Texmaco Rail that joins us on the show. We have Mr. Indrajit Mukherjee, the Executive Director and the Vice Chairman of the company who joins us. Good morning, sir. Thanks a lot for joining in. Well, I had a two-part question. One is on your execution. The last time you joined us, you said that you'll be working at around 600 wagons per month. You're expecting it to go to around 750 to around 800. Has that happened? So what's, you know, how is the execution picking up? Point number one. And point number two, give us an updated order book.
Currently we have gone and touched 850 wagons. So I'm very happy to state that we have done more than what we had targeted. So I hope to sustain this manufacturing rate for the future too, because the ecosystem now is fully developed, and now it's a process of executing it through various management tools which we are using. Coming to the second question, that we have currently an order book of something like about 8,000 crores. That's the in terms of that is in terms of revenue. In terms of the wagon, we have about 15,000 wagons. To be very precise, 14,600 wagons which are in the order book right now. And as you know that more wagons are required by the industry, so we are expecting to build up our wagon order book further.
So given that order book, Mr. Mukherjee, can you tell us what your expectation can be from the top line as well as the margin for FY25? Your revenue growth in FY24 was a very solid 56%. You ended the year with the annual margin of about 7.5%. So how will these numbers look as you execute this order book in the current year?
Well, I think it's a simple case of mathematics now. So we expect, because if you really look at this year's performance, really triggered by 3 quarters. If I would say 2.5 quarters, because the first quarter was not very strong. We had various issues which we had to surmount, which we have to get over. So I think we would expect a similar kind of a steady growth to come up. One of the indicators could be the performance of the Q4. That could be something which can be taken as a guideline around which we will be moving in the future. And then, of course, we look at a longer term. This is the shorter term future.
All right. So you can keep the run rate going 30, 35, at least 50%, you think, for this year?
I think it will be very difficult. It will not be proper for me to strike a number on that, but it will be a very, very strong growth. I would reckon will be not 50%, but it would be close to that region.
All right, and margins will hold at current levels.
Margins will improve, but the EBITDA margin will improve, because if you look at the Q4 EBITDA margin, it is more than the yearly margin. So the margin will keep on increasing, because as you have also we have also published it that our average realized prices for wagons are going up because of proper product mix. So there are two forces are acting on it. One is a number, the other is the average realized prices. And as you know that the price is very sensitive to the profitability.
Got it. All right, Mr. Mukherjee. Thanks a lot for joining in and filling us in with all those details. Wishing you the best for FY25. But it's 9:10, so let's get Mitesh back. Mitesh, tell us, what's your 9:10 call?
I'll go with the buy on Excite once it crosses 477.5 and look at a target of 495.
Okay, quick revision then on Vedanta as well. They went ahead and declared a dividend of around 11 rupees per share. If you were calculating Hindustan Zinc's dividend that was received by Vedanta, then you would be expecting around 7 rupees 40 paise. So the dividend is a little bit higher than what is expected. How does it help? It helps the promoter entity more than anyone else, because the promoter entity gets close to around 2,500 crores, which equates to around $300 million. Their payment for the year is at around $1 billion. So it takes care of that, and the promoter entity is in a better space. And besides that, they also went ahead and they're saying that they've taken the approval to, to raise equity of around 8,500 crores. And they're talking about setting up a copper plant of around 125,000 tons in Saudi Arabia. So all three data points for the time being, the stock opens up with a gain of 0.5%. But let's go across, I think, to Sudarshan first to tell us about Mahindra & Mahindra, whose numbers look quite good. Sudarshan.
So first, before I go to brokerage view, let me talk about some of the internals after companies reported strong earnings, which were much above than all the estimates that we had. And company has been one of the outperformers in 2024, and its stock is up 37% in 2024, and market cap has doubled in last 1 year. And if you check the delivery buying of yesterday, it was at 1,766 crore, which is more than 4 times if you take the 1 month average. Now coming to the brokerage views, Goldman Sachs has a buy rating with a target of 2,700 per share. It says core auto, farm revenue and EBITDA have come in 5 to 9% higher than its estimates. And going ahead, catalyst will be XUV 3XO, Thar 5-door and growth in tractor segment. Jefferies has upgraded to buy and target is raised to 2,910. It says tractor industry is now in late downturn. SUV portfolio continues to strengthen, and Q4 EBITDA has come in 13% higher than estimates. Considering all these, it has upgraded FY25-26 EPS estimates by 16 to 21%. MS has an overweight call with and target is raised to 2665 per share. It expects company to remain fastest growing PV OEM in FY25 and believes re-rating potential is for auto business and farm business sentiment has been improving. Lastly, CLSA, it has downgraded to sell, but target is raised to 2312 per share, and downgrade is because of the recent rally that stock has seen.
I mean, valuations have come up, so right?
Yeah,
compared, almost I think comparable to, or maybe close the gap with Maruti in that sense. It used to be, you know, M&M used to be the by far the cheapest auto stock. It used to trade in single digits, right? 8-10 times earnings. But of course, all that is history with very, very strong performance over the last couple of years that we've seen from Mahindra & Mahindra. And SUV really is the big growth driver that we've seen for M&M. 3% higher yesterday. By the way, when the numbers came out for the first 15 minutes, nothing. And then, of course, it ended as a top gainer on the Nifty and another 2.5% this morning as well. The first rates on the market should come up on your screens in just a bit. So it's 11. It's quiet. I mean, absolutely quiet. 22,400 plus. I think we take it with both hands if the market manages to stay and keep its head above water by the time we sort of ring the bell at 3:30. And so not asking for much, but we'll see. 50 points on the Sensex is what the pre-open has left us with. And we'll, of course, look at the indices, and then we'll go straight to some of the stocks which are going to be in focus as well. So, you know, Biocon and, you know, Vodafone Idea, Vedanta, some of the top of the mind stocks this morning. So absolutely flat start. 19 points lower is what you have on the Nifty. 30 points now. 20 points lower on the Sensex, so just trying to find its feet. 65 now on the Sensex. So real rates starting to emerge and settling down. Mid-cap index is up 100 points, so that's about 0.2% higher, 51,250. And I think you've got the small cap index, which also starts flattish. The Bank Nifty is down about 0.2% right now. Small cap ended strong yesterday, along with the mid-caps part of the market. And I think that is where bulk of the action is really once again at this point in time. So 30 points lower on the Nifty. It's a quiet kind of a start. Nigel.
That's right. You know, from the broader markets, so plenty of stocks are reacting to news and reacting quite favorably. So let's run you through a few of them. Endurance Technologies, massive up move is what we're seeing on that stock. Volumes as well picking up, so good move is what we're seeing. Street likes the numbers, that stock flying away. IFL Securities, what a dream run this stock has had. You know, in the last few years, I think it was around 20-25 rupees 4 years ago or so. Now it's at around 175 rupees. So the street likes those numbers. That stock is well up close to around 6%. Keynes Technologies flying away. Just take a look at that stock. It's up and about in today's trading session, up more than 10%. And that's actually the best earnings reaction that we've got this morning. Crompton as well, holding well in the green with a gain of close to around 4%. So big up move is what we're seeing out there. Alicon Castalloy, I recall explaining this company on Inside Out, you know, around a month or a month and a half or so ago. That one has reported very strong set of numbers, and that one's up close to around 10%. In fact, Crompton is another one. Just take a look at that. It's building onto those gains. Big up move is what we're seeing out there. So fair bit of gainers from the broader markets. The headline index is flattish, but otherwise plenty of stocks moving around. Let's add to the list a couple of other stocks. Sangvi Movers, I'm not sure whether they came out with their numbers, but that stock has pulled back close to 7.5%. It saw a big re-rating, but that one is down in today's session. Surbhi.
I'm looking at InfoEdge, by the way. InfoEdge had a quiet reaction yesterday, but this morning there's a straight 5% pop that's coming in on that stock. So that's the big mover. And then some of these capital goods plays. I mean, the week has been all about the capital goods theme. So even this morning, there's a CG Power, which is up about 3%. A Hitachi Energy was looking at some additional gains. So these are some of the main ones. Even GE T&D, the stock has just been moving from circuit to circuit on a daily basis. So that theme still seems to be alive and kicking. But otherwise on the index, apart from the fireworks we're getting from Mahindra & Mahindra today, what a follow through really. Yesterday and today, 5% now on M&M. We'll be speaking to the management in just about 10-15 minutes. That's the big one. There's Tata Motors, there's Bajaj Auto. So autos is a big theme. But beyond that, once again, the issue is lack of leadership. And it is financials. It is large stocks like Reliance, ICICI Bank, Hindustan Lever, Infosys. So the big boys just not participating.
But it's a vibrant kind of market, right? In the broader markets, which is a good thing. And it's been that way for the last couple of days. That's fair enough. Voltas is down 2. Just a few names on the downside. Voltas is down 2, so keep an eye out on that one. 1292 is where that is. Sangvi Movers is down about 8%, so that's a large cut. 1178 or so. Container Corporation, again, something a company we'll be speaking with in a bit. So stocks down about 2.5% or so. There is Honasa, which is, I think, coming up with some rates as well. Prince Pipe is down 2%, I think, again, reacting to numbers. G Shipping is down about 2% or so at this point in time. Otherwise, I mean, it is auto day with Mahindra & Mahindra surging ahead, 6% higher. You know, stocks move on earnings revisions, right? Basically, you've got to just see whether the street is upping their earnings forecast based on these earnings. And in the case of Mahindra & Mahindra, as Sudarshan pointed out, right before market opening, we've seen that markets have upped their earnings forecast by between 10 and 15% on the EBITDA front, operating profit level for FY25 and 26. Crompton is up a full 10%, so keep an eye out on that one. That is as well. 373 on Crompton. And Titagarh, 10% yesterday. The management was on, and you know, we really focused on the passenger coach business with Titagarh yesterday. And big plans, and 10%, another 6.5% this morning. Morgan recently initiated coverage on Titagarh a couple of days back. Dixon is another company which was with us yesterday, and they're talking about you know, big jump, 18,000 crores in revenues in 24. They're talking about between 30 and 32,000 crores in revenues in FY25. That's another one which continues to react in a big way. Keynes is up 12%. Keynes, again in the EMS space, 2869 on Keynes, a big 12% move. And I can start to see some of these, you know, Garden Reach, and it's never one with shipbuilders, right? There's always Cochin, and others would perhaps also would be there. So we'll see, keep an eye. You know, but that's the market. Strong gains. I was talking about some of these bearing companies. Look at Schaeffler, 4% pop. SKF is the other one which had a big move yesterday. So NRB and a few others. So, you know, we'll come back to some of these names, but it's a very vibrant start really as far as the broader market is concerned. So what if the Nifty is not doing very much? Venugopal Garre is with us, head of India research at Bernstein. Venu, great to have you with us here. Thank you very much for your time. It's been a while. So again, we want feedback from what you're hearing from your clients. You were in the US recently. I mean, you've basically been all over talking to people who put money here from overseas. So what's the feedback about the market? Of course, I mean, valuations is a constant complaint. I don't think that would have changed. But what's new is election. Does election come up in those conversations?
Thanks, Prashant, for having me on the show. Yes, you know, I've had a fairly large number of conversations in the last 2 months, spread across various countries, centered around both foreign investors and domestic investor base. I would probably say that across the board, the fact that everybody is positive on India over the long term is more or less a consensus view. I hardly get any pushbacks these days on India, or for that matter, the India story over the long term. Valuations have always been a challenge, and particularly has been a much more of a because heading into this phase of elections, there has been some degree of euphoria that we saw in the markets last year. So to that extent, the only issue that I per se encountered is the fact that I did not anticipate FII money to be waiting on the sidelines or to chase momentum. Any fundamental models that you follow, which is based on analysis of numbers, long-term and valuations, you would always find it difficult to invest in a market like this. So this is like what is sort of stopping investors from participating in the India story as meaningfully as they should ideally have. So this is a broad sort of a take that I have in terms of how they're looking at markets. The second aspect is elections did feature as an important conversation point across the board. I don't think anybody was anticipating or expecting a change of government or trying to position for a change of government, right? So whatever challenge that you saw in the equity markets in the last month, I would not attribute it to an election-led impact, which is FII selling that you've seen. It's probably other factors as well, both in terms of valuations and how China has done over the last month. Part of that is redemption-led as well. So that's the sort of summary.
Okay. Venugopal, hi. Good morning. Great to have you on the show. Speaking of valuations, I mean, the debate on valuations will always have the E of earnings as well, right? And that's, what I want to ask you about, because in this quarter, there have been companies that have really delivered. I mean, whether it's the capital goods majors like Siemens or an ABB or Mahindra and Mahindra today, and stocks are, flying even higher. So, according to you, where is there still headroom? Because earnings are delivering, even though valuations may be elevated.
Yeah, so the way to look at this is that firstly, there is no major earnings upward revision happening across the board. You're seeing some sectors seeing upgrades, some sectors not seeing any changes, and some sectors seeing cuts as well. It's a combination of all that. I mean, if you look at auto as well, I don't think Tata Motors would have seen an upgrade, while you're seeing probably M&M a marginal upgrade. Okay, so when you finally pull together consensus, you'll see 3 to 4%, sort of an increase and not 10%. So the reality is that overall for an index level across the board, be it SMIDs as well as for large caps, you're not seeing any earnings upward revision. Now, the second aspect is that growth this year as well as next year is going to be slower than the growth previous year. Now, the reasons are very simple. That previous year, the growth lift was also because of the impact of commodity prices being lower. I don't think that's something which is going to support us. If at all, it could, be a risk as well. And that's the reason you're going to see YOY growth, of course, moderate through the next 2 years. Now, you could argue that the growth itself is slightly higher than what we used to have a couple of years back. That is true. And that's the reason why market valuations are also high. The second aspect of this is that both for Nifty as well as SMIDs, they're actually pricing in this high growth to sustain for a very long period. Now, which is where, the risk is that you're not going to be seeing such high growth sustaining for a long period. So we do need sort of some form of a flatlining of the markets for a while or some corrections to see a much larger interest in terms of investors coming in. And the last thing I want to highlight is remember that given that the optimism in general is fairly high, you're going to be seeing a lot of fundraising activity in the market, which is going to be tremendous in terms of size and scale over the next 12 months, which sucks in the liquidity as well. So that's the other challenge.
So more block deals ahead is what you're anticipating.
It's across the board, block deals to preponement of IPOs, which should have ideally be done 3 years later. You will basically say, hey, why not do it now? So it's going to be swath of IPOs plus blocks, which could be private equity sales to fundraising by corporates, because any CFO, when they look at the market, would prioritize probably an equity fundraising over anything else at this juncture, because equities are cheap from a fundraising point of view.
Hi, Venu. Good morning and good to see you, Vin. I want clarity on a couple of issues then. You sound a little bit cautious on earnings. So what are you factoring in? The street is at around, low to mid-teen growth. What are you factoring in earnings growth here in India? And also, I was reading an earlier note where people are talking about 400 seats, and you said mathematically that looks a little bit challenging. But do you think the street will be okay if you get a simple majority for the ruling BJP-led NDA?
Yeah. So the first thing, on the earnings point of view, I am basically of the view that Nifty 50, which is the main index, is probably going to be in the mid-teens to slightly below mid-teens range. And of course, it will be lower, a bit lower than that for next year, FY26. While for the broader mid-cap index, which actually on my bottom-up growth was more than 30-35% last year, it crosses somewhere in the 20-25% range this year and 15% range the next in FY26. So that's the broad spectrum of earnings. Last decade, mid-caps probably saw 12% growth and 8-9% for Nifty. So we are still above the last decade growth rate, but of course, I don't know if that's the benchmark, but much lower than what we delivered last year. So that's like the broad earnings spectrum. What is getting priced in the market is 13 to 14% Nifty growth for the next 15 years and 18% for mid-caps continuously for the next 15 years, right? So that's what I meant as to what is getting priced in for the long term. Now the second thing is that go ahead.
Yeah, please go ahead. You were going to tell us about, do you think the street will be okay about a simple majority for the BJP?
Yes. So the second part, of course, is your, I think anything which is a majority is good enough. That's the way I would characterize it. Because look, honestly, you don't need 400 seats. It is not that you need such a large mandate to change anything. See, it's good to have a large mandate because, opposition benches would be much lower. There'll be sort of more confidence in the government to execute things. But if you get 400, are you going to bring back farm laws? You're not going to do that, right? So So that mandate is actually of not much, implications for market. Anything which is a decent majority is good enough in my view for the markets. But remember, markets are anyways pricing in a decent majority. Markets may not be pricing in 400 plus because that's euphoria. If you see 400 plus for any reason, which I think mathematically is not possible, you'll probably see the markets crossing 23,000 from a Nifty point of view for a short period in that euphoria. If you're in the 300 to 350 range, I don't really see much of a market movement at the 22,000 plus range, right? So, and we're not pricing in, of course, a change of government for sure, which is obvious.
Okay. There's an order for BEML, again, another one which has reported a fantastic set of numbers recently and really great going there. Venu, you used to track autos, right? You still do?
Yes, I still do.
Just a word on, the Mahindra management will be with us in 10 minutes. Anything you want us to ask them? Superb execution, right?
Yeah, I guess, no, the execution is superb. We have an outperform rating on that as if I were to just disclose that. So we have a buy on that stock and pretty happy that they've done well. See, the broader perspective as to why this stock price movement has been so intense is primarily because the previous quarter was expected to be weak because tractor volumes were so bad that there was a worry that this is going to actually impact numbers. But our broader thesis purely, from this particular stock or space was the fact that over the years we had observed that while tractor was a major driver for the stock price movement, last year we had argued, back end of last year, that look, tractor is no longer an important driver. SUV is the important driver because it's very, very important business in terms of profit contribution. So in that sense, we felt the drivers are changing and we shouldn't worry about tractors. So that's basically it. From a management point of view, I think what you need to ask is more centered around their pipeline. More centered around the pipeline in electric vehicles and what they're going to do there. I think the market narrative in a couple of years or probably in 12 to 18 months to shift towards success in EVs.
And that's why they're putting the money. 12,000 crores is the, the cash that they're pumping in on the EV story. Venu, just a quick clarification. You said that you are expecting low to mid-teen returns for the Nifty in FY25, right?
No, I actually meant earnings. It's 13 to 15% growth for Nifty earnings. My Nifty target is 23,000. If at all it really is of any value, it's 23,000, which was 8% return YTD. Yeah, 8%.
That's why the clarification. Yeah, because I kind of eyes popped when you actually said 15% Nifty return this year. Got it. So that's mid-teens earnings return. Because half the year is kind of done, and we're not. I'm yet to come across someone who's been as bullish on a 15% index return.
People of little faith.
Perhaps.
You would be surprised with 15%. Why?
He's like 23,000 on the index. He's in that.
I have only 23,000 as my target, which was actually 7-8% return year to date, which is what I had modeled. See, if broadly Nifty hasn't done much in the first half, so since I'm not really revising my target for Nifty, I'm basically talking about positive returns in the second half, which is actually good enough. But remember, with all these returns, you're going to see a lot of volatility as well. See, the point is, if there was no primary market activity, if you're going to be having this kind of an earnings growth, which is mid-teens, no primary market activity, which is no major fundraisings happening in the market, then flows itself could have led to a breach of the target. But I do anticipate at every point of time, big chunky fundraisings happen. So that's going to start liquidity.
Just one more data point on the elections. Every year, every calendar year in the last 4 years, you've seen double-digit returns in an election year. It could vary.
Before the result, after the result.
No, for the calendar year, 2019 is around 12%. 2014 was obviously out of whack and earlier. So double-digit though.
But the difference is, every election period, you had seen the pre-election year period being weak returns. And this is a unique year where we had very strong returns in a pre-election year. That is because everybody is smart. People realize that they read patterns saying, oh, election year returns will be there, let's buy before. So people bought before.
But it always depends on how you slice and dice the data, right? Someone who's watching it only from a calendar year perspective will say, what is this? There's nothing. There's no pre-election rally, right? But anyway, that's a debate that can continue. Great to have you on the show. Thank you very much for joining in, Venugopal. Very, very, interesting conversation as always. Well, let's quickly move on and now focus on some more earnings. We have Krishna Institute of Medical Sciences on the radar. The company's Q4 margin contracted while occupancy declined, although they registered a good growth in average revenue per occupied bed. B. Bhaskar Rao, Chairman and Managing Director, Krishna Institute of Medical Sciences, is with us now. Thank you very much for joining in. Occupancy for the hospital this quarter declined both year-on-year and quarter-on-quarter. Why is that?
See, the occupancy, the decline is due to what we have done in Sunshine. We are shifting the old premises to the new premises. During that time has come, and it has come back now in the last 2-3 months. So that is not a big major junk. And the second important thing, because of the elections of last time of the Telangana elections, and as well as the cyclone in Andhra has been affected very largely. That is the reason the occupancy has come down.
Well, Mr. Rao, the average revenue per occupied bed saw good growth of around 11.5% on a quarter-to-quarter basis, 12% on a year-on-year basis. What led to this double-digit growth?
So the reason is that the ALOS, average length of stay, was 4.11, has come down to 4.01. And also the payer mix. We have reduced the state government insurance like 1%. That has increased the corporates and as well as the cash and insurance business. So the payer mix and as well as the clinical mix and also the ALOS. These three factors has increased the ARPOBs and the average revenue per operating bed.
Right. Mr. Rao, what are you guiding for FY25 on occupancy and average revenue per occupied bed?
The ARPOBs will still, there is a growth will be there in both in ARPOBs, and also we are trying to implement in the ALOS as well. And also we are planning to change the case mix and as well as the payer mix. So definitely there will be whatever is the growth we have seen in the last ARPOBs and as well as operating bed that continue to grow in the next year also, coming year.
Okay, sir, margins came off over last year. Can you just tell us the breakup in EBITDA in the new hospitals and the older ones as well? And what's your guidance on margins for FY25?
See, mostly the newer hospitals growth will be on a single digit. Now this year is actually in Q4 of coming this year. We are going to open up 2-3 hospitals that may be able to drag down the EBITDA when compared to the total. But the existing hospitals growth will be single digit.
All right, Mr. Rao, what was the surgical revenue as a percentage of your total sales mix? Have you seen an increase in high-end surgery work in your hospital?
Yeah, surgical business has increased when compared to the previous quarters and year on year, about a few percentage. In more and more, we are going to add, and we are also adding the new therapies, which is a non-surgical and as well as non-medical. There will be more of a interventional radiology and other procedures that will able to help the growth.
Mr. Rao, what is your sense on the possibility of this proposal, right? Standardization of procedure rates in hospitals. Where is that conversation at? Or do you think, it'll only happen once elections, etc., are over? Go on.
No, basically that last time also I mentioned it is very impossible to uniform rates and sensitization because every patient is different. Even though they come with the same symptoms and signs, but the underlying causes will be different. So we need to be able to treat according to that. It is a complexity of each patient is different. So we cannot able to make it a uniformity. And if it happens, as we have seen in the past, in the last quarter, most of the private equity people who want to invest in healthcare were showing a good investments in the last 1 year. They will not able to come back and try to invest, and the industry itself is going to be in trouble, and as well as the quality care will come down. So I don't think that will be an implementable solution. But only thing is they can able to come up to improve right now the pricing of central government schemes and state government schemes. If they can able to scientifically, if they can able to do the tariff, that also help the organizations to grow much better than what we are today.
Sir, speaking of how much governments are paying, I mean, let's come to the the billing mix as well between different payers. So, what is that current mix between the billing that you do with insurance companies, outright cash payments, and then, of course, all the government schemes and the government component in your revenue mix? And what's expected for the current year?
The insurance and cash is around 80%. The corporates and the Arogyasri scheme is around nearly 20%. Where the Arogyasri scheme, which is a state government run scheme, has come down to 1%. The corporates has gone up 1%. And also the revision rates of insurance has been started. That's why the RPOPs has increased. Usually it will be once in 2 years we will review the insurance rates. It's supposed to happen last year. Usually it will take a long time to renegotiate with them. That has been materialized in this quarter.
All right, Mr. Rao, we leave it there. Great conversation as always. Thank you very much, and hope to speak with you soon again. But that is the result from KIMS and the outlook that the management has chosen to put forward. Market is not doing very much. We're down about 40 points right now, 22,364, and it's just holding on. Mahindra & Mahindra is the top gainer with a 7% pop. I mean, this is just an incredible sort of performance once again. And if my memory serves me right, we've had, M&M is, at least the stock is making it a bit of a habit to jump up sharply post results. So, expectations now, of course, running high in terms of what they'll be able to do from their ICE SUV portfolio, but also electric vehicles, which is likely to be a big focus area. So let's actually invite the management of Mahindra & Mahindra in to talk about some of this stuff. There is, of course, also that investment which they've announced, 12,000 crores. Rajesh Jiturikar is ED and CEO, Auto and Farm Sectors at the company. Rajesh, good morning. Great to have you with us here on the program. Prashant this side. As I said, you're setting the bar high for yourself with performance. We are seeing earnings, upgrades, etc. coming in. Your guidance for 26 looks pretty good. So I guess I want to ask, how are you doing it? But even if you want to choose that, you want to answer that, you can do that. But let's just get specific a little bit. On the SUV side, you've got, open order book of about 220,000 sort of vehicles. Just tell us how that is growing, what is happening, what are you what will you end up with by the end of the year? What is your expectation there? Because that is the big growth driver, UVs and SUVs.
Morning, Prashant, and pleasure to be with CNBC this morning, and thanks for having me on the show. Yes, we do feel good about the results that we put out for F24 and for the quarter as well. And as you rightly said, the auto business has been a key driver of performance. We've seen some very strong momentum on the auto side, on the margin management, but as well on the performance of our SUV and LCV portfolio both. So if I was to now, go more deeply into the question that you've put out, what's happening on the SUV portfolio is we've had some very successful launches. So I'm just going back a little in time. The Thar did very well. Then we had the XUV 700, which did very well. We launched the Scorpio N, which did well. And then we also had Scorpio Classic to continue and also stay in momentum. We've recently, on the 29th of April, launched the XUV 3XO. And that, again, has got a very, very exciting response, if I may use that word. We opened bookings on the 15th of May, and we got bookings of over 50,000 numbers in an hour. A lot of excitement in our showrooms, even now as we, it's a weekday, it's summer, but, showrooms are running full. So even on weekdays, we're seeing a lot of excitement. It's a very strong value proposition with a very, very many exciting firsts in the category. To the specific question on the 200,000 plus booking number, 50,000 of that is what we've added through the 3XO. But again, like I said, the Scorpio portfolio remains very strong, and our existing products remain strong as well. We do want to bring the size of this booking number, open booking number, down, because we don't think that is what customers want anymore. over the next few months, our focus will be on using, ramping up as much as we can to bring the waiting period down for our customers. And on the 3X in particular, we already have produced 10,000 vehicles and we'll start deliveries on the 26th of this month. Back to you.
Okay, all right, Mr. Jejurikar. I'm very sure that a lot of your customers will be very happy to know about the delivery timelines. Just a little more on the sort of the way this whole SUV portfolio is playing out for you. I think you ended the year with a market share of 18%. Where do you see this moving, considering the strong demand? And also tell us about what the levers will be in terms of, adding to the top line on the automotive segment. Is it going to be more volume-led growth? What about pricing? I mean, blended pricing on the SUV portfolio, what was the increase in FY24? And do you think you can push through more price increases because there's such strong demand?
Hi, good to be with you. And the way, let me try and break this up. Firstly, the SUV growth expectations we've put out for F25 is mid to high teens. That's on the back of what we believe has been a good 3XO launch. And also a new Thar, which will come later in the year. So we do have 2 new products, which will help us get to mid to high teens. So we think this will be a much higher growth than what the industry will have in the year F25. We would aim to gain market share. To put market share in context, we look at it on 2 parameters. We look at revenue market share. We do that because our average selling price is way above the industry average. So we do look at what our revenue market share is, and we've been number 1 by way of revenue market share over last many quarters, including the last quarter. We are number 2 by way of volume market share. And given the fact that we are very specialized, authentic, adventure-ready SUVs, being number 2 in an industry which is now 60% of the passenger vehicle market is, I think, very, very credible. And we feel good about being able to be at that level of market share. Coming to the price increase question, we have taken price increases through the year, managed our costs well. And that's helped us get a very good margin increase by way of our auto margins. As you see in Q4, we improved the auto margins to 8.8%. There is this very, very thin line on what's the right extent of price increase that you wish any player should take or any brand should take. And we always believe that's got to be very well calibrated. We have to make sure we don't lose our strength. Our strength is that we offer a lot of technology and a lot of features at a very good price. And I don't think we're going to do anything to, take away the basic brand strength, which is our ability to do that. So, short-term price increases can seem very good to get a bottom line impact. But over the last few quarters, what we've demonstrated is our ability to keep growth going, keep demand strong, and to manage our margins through a combination of pricing and costs.
All right. Hi, Rajesh. Good morning and good to see you in. This is Nigel on this side. I get a little bit nervous when you launch a new XUV. I'll tell you why. Because you get a lot of calls saying, can you help us with the delivery? Because it's going to take a really long time. The waiting period is 7 months, 8 months in the past. But that's on a lighter note. Phenomenal growth is what you'll have seen in the XUV business. So good on you. Let's focus on tractors, though. We have an election. There has been some kind of slowdown is possible in the first half of the year. But for the year, the industry growth is what you're penciling in around 5%. Will you outgrow the industry? And if yes, what does it take your market share to? Because I think it skimmed off a little bit by 100 basis points at around 39.5%. Tell us more about the volume growth you're targeting and market share in the tractor segment.
Hi, Nigel. So let me get the market share question out of the way first. So for the full year F24, we grew market share by 0.4, which is 40 basis points. That is a very credible achievement, given that we are already 42% plus kind of player. The Q4 is explained by a decision we took to, moderate our level of stock and bring it down to appropriate levels. So it's a stock correction call. It's not a loss of retail momentum. In fact, in April, the tractor market share gained significantly and was at a level of over 46%. So the quarter market share of Q4 is just an aberration based on a stock correction decision that we took. I'm talking about the dealer stock correction. We have said that the growth for the industry will be 5% for the year F25. There are several positive drivers at the moment, the most significant one being the monsoon forecast, which show a reasonably good spread, a good timing, and except a couple of states, I think the market, the rainfall will be overall good. The other positive sentiment is the farmers' terms of trade, where output inflation right now is higher than input inflation, and that really enables the sentiment of farmers to buy and starts bringing cash in. We expect the second half to start picking up growth momentum. So you did talk about elections. We don't think election fundamentally disrupts demand. It's just aberration and there's a deferment. This is a buying season, and hopefully, June will see a recovery, but May does see some kind of a disruption because many people are busy with electioneering. Second half of H2, given all the positive parameters, should see a positive growth. Based on how the monsoons start coming in, we may put out a new forecast in July, but at this point of time, we are seeing the industry at +5, but many positive, green shoots, if I could call it that.
Okay, all right. So we've got that out of the way. Then tractor industry growth at 5%. Explain to us why Q4 is a bit of an aberration on market share for tractors. Let's focus on the EBIT per vehicle. Now that as well has moved up. For autos, it's holding at around the 92,000 mark. And for the farm equipment space, it's at around 115,000, which has moved up as well. Do you think you can better both these two numbers on a per vehicle, EBIT that you're making?
Yeah, so Nigel, without giving any kind of guidance, let's look at and answer this question with a demonstration of our track record. We have improved our EBIT margins significantly over the last few quarters, and the tractor EBIT margin continues to be strong in spite of a volume downturn, which really is an indication that we are doing many things to manage our costs well and the balance between pricing and cost. There has been, commodity prices have been a bit benign too, and that's helped us on the tractor side in particular in Q4. We would keep the balance right between growing margins and keeping demand, market share, and volumes intact. And that's really, what we would aspire to do, that keep improving our margins with the right actions, a high focus on cost management, appropriate pricing decisions which don't disrupt our ability to grow or lose the ability to gain market share.
Right. Rajesh, let's just talk about electric vehicles, right? Because that's going to be the next, it's a new thing, maybe not exactly a completely new thing. But you've got big investment plans. I mean, over 25 and 27, I think you're looking at spending some 37,000 crores. That's the investment you will make. It's a big step up from what you've done between 22 and 24. I think you're saying that there will be some, I think 7 new sort of electric vehicles, although you've spoken about this in the past. Could you talk to us a little bit about this? How is the thinking evolving? Is this investment largely going to go into the electric vehicle sort of space? And, is the model there set? Because penetration here in India is still very, very low. So there is a risk of being very early also. So you've got to kind of calibrate when some of these products are developed and hit the market. Globally as well, in some of the big markets, EV sales, EV penetration maybe is just cyclical, has kind of stalled. Just your thoughts, Rajesh, briefly. Go on.
Super. So firstly, just to clarify, that 12,000 crores out of 37,000 crores is the... so 27,000 we said is the total auto capex over the 3 years, and 5,000 was for the farm equipment business. Out of that, 12,000 crores was for the electric SUV portfolio. We believe that, we as a leading auto OEM in the country and, with global aspirations as well, need to make the right investments to create future-ready product portfolios. And we've been working on that over the last couple of years. A key part of that is creating a new in-glow platform, which is a born electric platform. We have showcased some of the products that we will bring out through 2025, 26. And we believe that, as a leader in the SUV space, really, we would want to play a critical role in growing the electric vehicle category. Categories grow when you have exciting products. We've demonstrated that on the ICE SUV side. We believe that our exciting product offerings is what has been the key driver for us to gain volume, gain market share in this segment. We will be hoping and aiming to do the same with our Born Electric EV portfolio. We would start launching products in a calibrated way starting in the Q1 of calendar 2025. The products really do have standout design. They're going to be very high on tech and software and are really fun to drive. The electric is quiet and they have excellent acceleration and pep. So we remain very excited about the opportunity. You also spoke about, the EV penetration in India with, as compared to around the world. In India, it's at a very, very nascent stage. Countries around the world are seeing some kind of slowdown after they've crossed 15-20% penetration. We are at 2% penetration. So there's enough of an upside. We believe that by 2027, 20 to 30% of our portfolio will be electric in the SUVs. Given that the balance 70% or 80% will still be ICE, we continue to invest in exciting ICE products because that will still 3 years from now be a critical part of our portfolio. So in a way, we would have a very strong ICE and EV portfolio 3 years from now.
But Mr. Jejurikar, will there be any cannibalization, sort of EV eating into ICE as the new launches roll out? I mean, that's a little natural to expect, right? How do you see both playing out starting that first quarter of next calendar year when we get the EV launches from M&M?
Yeah, so of course there will be some cannibalization. I mean, we don't rule that out at all. And that's something we're comfortable with. As we've shared, not necessarily at the date of launch, but as we have on our ICE product portfolio, we do build margins incrementally as we build volumes. We would expect on a steady state basis, the margin per unit of ICE and the margin per unit of electric vehicles would be the same. Now, not as a percentage because there is a denominator effect, but as a per unit margin, they would, on a steady state basis, like to be comparable. In which case, we won't worry about cannibalization. We give customers the choice. And one of the reasons we've decided to sell both ICE and electric from the same dealerships in the same showrooms is to give customer the choice of whether they want to buy our ICE portfolio or our EV portfolio. And customers will choose based on their needs. A lot of our customers are multi-car owners, don't hence have to worry so much about range anxiety, have charging infra at home and in office. And of course, the new portfolio has a very, very good range as well.
All right, Rajesh, appreciate you joining in and giving us clarity on the SUV part of the business, the tractors, as well as some color on the EV business. Wishing you all the best for FY25. FY24 has been a star, as the stock price is telling us. Well, for the time being, though, we'll have to slip into a short break. You come back, we'll get chatting with the management of Concor. Don't go anywhere. Welcome back. This is Corporate Radar. Well, as promised, let's get straight to Concor's Q4 numbers. He reported a mixed set. The volumes came in better than realizations. Their margins also improved. Mr. Sanjay Swarup, the chairman and MD of the company, joins us on the show. Good morning, Mr. Swarup, and thanks a lot for joining in. Well, for the past year, your volume growth was around 8% odd. Earlier on, there was some kind of skimming down of guidance. But that's about the past year. Going ahead for FY25, what kind of a volume growth can you guide us? And if you could break it up for us between EXIM and domestic.
Yeah, good morning. we are expecting a very good growth in this FY25. In Exim, we are expecting around 15% growth. And in domestic, the growth will be around 25%. So overall, we are expecting a growth of 18 to 20% in this financial year 25.
Right, got that. So hi, good morning. Prashant this side. Mr. Swarup, how were realizations in the fourth quarter in both export and domestic versus last year?
Yeah, realization have seen a good growth in this fourth quarter as compared to the Q4 of FY23. And we are seeing a good margins and good top line growth. In fact, the Q4 of this financial year has been the ever highest in the company's history. And it was the Q4 of 23, which was ever highest. Now we have broken that record. And we have posted a highest top line in this FY24 Q4.
Mr. Swarup, I wanted to understand your strategy going ahead. Because there was a report that I read from BNP Paribas, a couple of months or so ago. They were talking about your realizations, your pricing being relatively higher than some of your peers. And that's what could lead to some market share lost as well. So what's the strategy out there? Will you look at skimming down on pricing to go for market share? And in that context, what is your market share?
See, it has been the company's strategy to give best service to our customers at reasonable cost and without sacrificing any of our margins. So that strategy will continue in this FY also. We will not be compromising on our margins, but we are giving more and more incentives, more and more facilities to our customers. Like we have adopted IT in a big way. Logistics app has been a big help for first mile, last mile connectivity. Similarly, at our flagship terminal, we have adopted AI-based terminal management system. And we are actually giving all in all these services to our customers, which have been welcomed by them. And we don't sacrifice our margins. But of course, if due to our operational efficiencies, we save some money, part of that we share with our customers also. But that doesn't mean that we sacrifice our margin. Our margins remain intact. We are operating at an EBITDA of around 25%, which is in the logistics sector quite reasonable, quite handsome. And we continue to be maintaining EBITDA around this number only.
And you were going to tell us about market share as well. Have you lost some market share? Is Gateway higher in select places?
Actually, we have not lost market share. As far as the rail-based containerized transportation is concerned, we are maintaining a market share of between 60 to 65%. This we have been doing for the last 3 years. And we are very hopeful that we will continue to maintain this market share and maybe gain some market share because of the new products that we are going to introduce in this financial year.
Okay, got that. This is for the rail-based containerized segment, right? 60-65%. And you're saying you may look to gain as well. Could you tell us what is your share of revenue from value-added services and what's the target going forward?
See, value-added services constitute an important part of our service to our customers. We have introduced a business solution segment 2 years back, which has been a very successful initiative of the company. It's a sort of vertical integration to our already services that we were giving to our customers. It involves the various end logistics like first mile, last mile, giving custom clearance facilities, fumigation, everything we do at our terminals. It has been welcomed by our customers. And of course, it gives us a reasonable amount of margins as well as revenue. At the moment, I cannot share that number because I don't have it with me right now. But it gives us handsome margins as well as top line to us. And customers also, prefer these services to be given by Concor rather than going to any other operator.
Okay, all right. Mr. Swarup, one tricky aspect which the street is a little bit skittish on is the LLF. That's the land leasing fee. I'm looking at a release and there's a demand coming for 3 of your terminals that amounts to around 700 crores. So tell us how, is it resolved, the understanding that you'll have, or is that still far from resolved out there? The demand is close to 700 crores. Give us some color on that as well.
See, LLF demand is not 700 crores. I don't know from where have you got that number. LLF demand is around 400 to 420 crores. So we are very much clear on that, and we have resolved this issue with the Indian Railways. And this is a 7% growth in LLF every year. And it's a continuous exercise in my company to surrender the railway land, which we are not using, or which we find that it is not giving us the due returns. So that exercise is continuous, and we are surrendering the surplus railway land and without losing any business. And we are commissioning more and more terminals, purchasing our own land. So this has been a continuous exercise by the company. And this year also we have commissioned 3 MMLPs at Jajpur, Kadakola and Paradip. And this exercise will continue in FY25 also.
All right, so I'm looking at the page 11 of your release, Pilor, Tungla-Kabad as well as Murabad. If I group all these 3 numbers together, the key audit matter that you have written about, that summation of 3 of them comes to around 700 crores. So I asked you that. But you're saying that that's resolved, right? There's no issue, there's no need for the street to be worried about
that
this.
That is fully resolved. Yes.
Okay. All right. Well, thanks a lot, sir, for joining in. I think we've got most of the deal. Just one more question if we can squeeze in before, we let you go. Any update on the divestment post the election? Should we expect something?
See, that is the policy of the government. So we are following the guidelines that are being issued by the government. And if there is any update, definitely you will get it.
Okay. All right. Mr. Swarup, we'll leave it there. I look forward to getting more updates from you as we go along and, for another chat. Thank you very much for joining us here on CNBC TV18. You got the market, which is it's like flat, absolutely flat. 3-point change is what you have as far as the indices are concerned. Mahindra & Mahindra is still the top gainer with a 6.5% gain. Crompton is not up 10, it's up 13 now. So it's kind of moved up even more. And there is Dixon, which is up 6%. It's a new high. Stock's almost at $9,000 with the move that we have. And of course, some of the other stocks, there is a lot of new stuff in the mix. Hindustan Zinc is up another 5.5%. There's a fair bit happening. It's a very healthy, vibrant, broader market screen that you have. 2:1, actually more than 2:1 is the advanced decline ratio. But I think we have the next management with us.
Absolutely. And AkzoNobel is the stock on our radar, the maker of Dulux paints. Now, the performance was more or less in line with street estimates, and it was a little muted the quarter gone by. The revenue growth was just about 2.5%. Yeah, there we go, 2.3% on the upside. Gross margin, however, did expand, and profit also saw a fair amount of growth. We have Rajiv Rajgopal, Chairman and MD of the company, with us right now. Mr. Rajgopal, thank you so much for joining in. Let's start by talking about top-line growth first. So, fourth quarter, 2.3%. Just take us through the consumption trends. What was the volume growth, first of all, in the fourth quarter? And FY25, are you expecting things to improve? What's the volume expectation for the year as a whole?
Thank you, Surabhi. Good morning to you and all your viewers. First and foremost, yes, I think it's very misleading because you see headlines. We've had a solid volume growth. The volume growths have started coming. Our volume growths were almost to the tune of 15%. Now, there are 2 reasons why you're seeing hence the revenue growth of 2.3%. One, the industry has seen a price drop, as you know, between December and January, which is reflected in this quarter gone by, of almost for us, almost about 4.5%, right? So that's one. The second is the mix has been adverse. And I think you've seen it in all the industry results that have come in, that for us, it's so far, and we've seen it in the full year, the premium category actually outgrew. But if you look at the quarter gone by, it's basically the mid-market, the mass, and the economy, etc., which have done very well. As a result, you're seeing the dilution of the mix, which is the reason that you've seen the revenue, particularly from a paints perspective, the paints vertical perspective. Similarly, we've seen similar trends happening in in our coatings vertical, particularly if you look at automotive. We are not in the OEM, so we've not had that dramatic jump that some of the players who are in the OEM business would have seen. In the aftermarket, we've seen in that category, our premium has grown, but our mass has been a little curtailed. So we've had a bit of a mixed bag in the last quarter. Suffice to say that, I think the trend is right, because I'm really looking at underlying volume growth, and both, for the quarter and the full year, the underlying volume growth for the company has been double-digit.
That's fantastic. So you're saying 15% volume growth in Q4. And what was the total number put together for FY24? And then, we can then discuss FY25.
It's almost 10%, so it's for the full year. And that's the reason why we believe that we are slowly coming back. See, you must realize, as far as AkzoNobel is concerned in the paint side of the business, we were at significant premiums to the market player last year this time. And one of the things that we wanted to do is to correct that premium, right? And move from a price-led revenue strategy to a volume-led revenue strategy for the next 2-3 years, because that's important and an imperative given what's going to happen in the paints industry.
But what about the price decline? Just a quick final question to complete the point that you made. I think you mentioned that the price decline in Q4 was 4.5%, right? So that, for your investors, is going to be a slightly worrying trend. Is that continuing into the first quarter? What are the factors at play here?
Well, look, the industry had taken a price drop, and obviously given our market share, and the fact that we've gained market share in a full year period, we were very clear that we are going to fight tooth and nail to make sure that we continue and build and consolidate our market position. Now, is it a worrying trend to your question? I don't think so. I think one of the reasons we could afford to do that, and you've seen it in the results, you've seen that, our EBIT margins have actually grown in the quarter Q4 and also in the full year significantly, is because of the fact that the raw material was benign. Now things are sort of flattening and moving up a bit, so I don't see that happening further. And we will see. We will have to take, as they say, one ball at a time and play the match. But we are very clear we are going to consolidate and build our market position. If you look at our EBIT margins, Surabhi, we are almost at a 14-15%. Remember, this is including royalty. Yeah, so effectively, when you look at the market, we are virtually number 2 in terms of the shape of the business compared to, even some of the larger players. And that's in a good shape. If you also look at
Rajiv, hi. Sorry, we just sorry for the interruption. Just let me get a question in. For FY25, what kind of volume growth should we pencil in?
Double digit.
So it could be 10%. It could be anything. I mean, would it be? Where will you be? Yeah.
12 to 15%.
Okay. 12 to 15% volume growth. And what about margins, Rajiv? I mean, because you're saying that you'll focus on volumes now, and we've heard this from Berger, we've heard this from Asian Paints, that, essentially it's going to be volumes. I mean, the volume value differential it varies between 2 and 5-6%. So just wanted to get your sense. Yeah.
You're right. Look, the volume is going to be about 12 to 15. The revenue will be in the high single digits. Now, whether it's going to be 8, 9, or if we touch 10, I think that's obviously a function of, how we implement some of the strategies that we are sort of unfurling. Yeah. So that's the ballpark where it is there. That's how we see the full year, 25 sort of pan.
Okay, all right. Hi, Rajiv. Good morning and good to see you. And so going by the numbers you're giving us, volume growth of 12 to 15%, high single-digit revenue growth means you're factoring in another price cut of around 3 to 4% for the year, right?
Well, we are not factoring in a price cut, because remember that the price drops that were taken in December and in January. So that's going to pan out till December this year, right? And then we will have to look at. But what I'm factoring in is the fact that there could be possibly a bit of a slight mix change. Remember, for us, we are a premium brand. We are a premium large town brand. And obviously what we've been doing, and I've been talking to all of you, yourself, Prashant, Sonia and Surabhi over the last, is that we are trying to get into smaller towns. We've now touched 5,000 towns and we are moving to 5,500. So obviously, as you go into smaller towns, the mix will slightly change. It will have a higher constituent of, economy and mass. As I said, our focus is to drive and consolidate market share. We are not going to let go of the India market. It's a critical market for AkzoNobel Global now. So we are going to fight tooth and nail and make sure we consolidate and grow our market share. We've done that in the full year. In fact, we've got about a 0.3% market share gain in the full year that's just ended.
So what's the market share right now? If we could quickly get that number.
We are now crossing almost about 4.6, 4.7%. We were at 4.2. We are slowly building it back. My belief is that, look, I think we want to, in the paint side of the business, we want to take it to at least a 5.5 in the next couple of years. And we believe that we will, because our products are good, our biggest belief is that we've got the best product in the industry.
Okay, all right, Rajiv, this is Nigel on this side. It's been good speaking to you. Thanks a lot for joining in and giving us all those details. We'll hold you to these numbers. Absolutely. For the time being, well, we'll slip into a short break, come back, refocus on the commodity space. Manisha's waiting for us.
Embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Well, how I wish this was a video interview that we had, but you take what you get with the likes of Neville Nerona, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small tiny audiences at very low cost. And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that the mix of DMart's sales actually deteriorated largely because perhaps there have been entries of a lot of these value retailers in the apparel space as well. To that he said, yes, there is marginal impact and specific to a certain category such as apparel itself, and that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart.
Welcome back. Well, the equity headline indices are absolutely flat, not doing much. There's just, one stock that's catching the eye, and that's Mahindra & Mahindra. But the mid-cap screen is very, very vibrant, as Prashant has been saying. And lots of high flyers around. But for the time being, let's move to the commodity space and find out what the cues there are looking like. We have Manisha with us in the studios now. Manisha, what's on your radar?
Surabhi, thank you for that. Well, everything in commodities also has been flying around. We've been talking about metals for a very long time, but energy as well for this week has been on the positive side. So after three weeks of decline, crude oil prices are headed for a weekly gain onto this one. Well, there are signs of global demand improving. The supplies are on the tighter side, and all data indicates that for this quarter, you could be looking at demand improving. So starting right with the US itself, where we have seen the crude oil, gasoline and distillate stocks decline, clearly has been supportive. When you look at the US crude itself, we have seen inventories decline by 3.1 million barrels. That has been supportive. Not just US, well, we have seen the Singapore inventories also decline to almost 3-month lows when it comes to middle distillate fuel stocks there. When you look at the European markets, here as well, we are looking at the gasoline stocks down by 7.5% in the matter of last 1 week. So whether it is about Asia, US or Europe, you have seen decline in energy and product inventories there. Add to that the Chinese markets have increased stimulus $1 trillion, by the way, in sense of bond issuance. And the Chinese imports and demand for most of 2024 have been on the positive side as well. Apart from China, it also has to do with the soft US inflation readings. Well, that is supporting buying. The dollar index is slightly lower and the markets are anticipating that you could be looking at the first US rate cut coming for the month of September. And most importantly, the US Atlantic hurricane season is likely to be the most active on record. When you look at the numbers, the latest data that has come in from the meteorology department, from there, it is going to be about 25 named storms, 12 hurricanes that are forecasted for 2024. And when you have this kind of a data, and even if one of these storms or hurricanes is bigger than the other, then there are concerns about Gulf and the oil facilities there. The US summer driving demand season also is expected to be positive for the prices there. The only bit of a concern is the US retail sales data and the investment numbers. Well, that has been slightly disappointing and is the reason there is some profit taking that we've seen in the Asian markets right now. But then it is all going to be about the OPEC and allies meeting in the first week of June on whether or not are they looking at further cuts or they carry on with their production cuts for the second half of 2024 as well. That is where you will get the next cues from.
Okay, all right, Manisha, got that. Thank you very much for the details there. Well, with that, we do have to take another very quick break. Come back on the other side and we will get chatting with the management of NCC and talk about their fourth quarter performance.
Whereas they worry about how well the stores being added are being actually managed, and that's the big dissonance. But having said that, they would like to add as many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces and a lot more relevant for India, which is known for leapfrogging beyond different things as well. And on competition and of course digital commerce, he says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures, and as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about growth in the tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
In the auto sector, in our pecking order, we see two-wheelers having a higher single-digit or lower double-digit kind of growth rates, followed by PVs and followed by CVs and tractors. I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side.
Welcome back. As promised, let's focus on NCC. We're joined by Mr. Sharma, the head strategy at NCC, who joins us on the show. Hi, Mr. Sharma. Good morning, and thanks a lot for joining in. Well, I wanted to focus on two aspects. One is on your margins. You know, out there, they were a little bit lower in quarter four, a little bit subdued, and it appears even your guidance is a little underwhelming. Tell us why about this, and also when do you get to double-digit margins? And the second factor is your order inflow guidance as well is a little bit subdued. Why is that? Because of elections?
3-4 questions, Nigel. Very good morning.
Two only, sir. One is on your margin guidance as well as on your order inflow guidance. Both of them. Please address it.
Only the margin guidance, not the past. You also talked about Q4 guidance is a little subdued. So I wanted to comment on that. Let me start. You know, at the start of the financial year 24, we had shared three numbers with you. The first number was order inflow guidance of 26,000 crore. We have been able to hit that number comfortably. The second guidance that I had shared with you and the street was revenue growth of 20%. We have hit that number as well. We have delivered really a growth of, about 35%. The third goalpost that we had shared with you was the margin guidance of, about 10% EBITDA margin. We have comfortably hit that number as well. See, if you are only looking at Q4, you have to also understand, the kind of cleanup that we have done in the past year. Every time that I came to your show or I got an opportunity to talk to an analyst or an investor, we got asked these questions about, these legacy issues. For example, the Semcorp, what is it, when are we really planning to settle that? The second question that was always, thrown at us was about Taka settlement. So I am happy to report that, we have been comfortably able to settle all these legacy issues and at the same time, hit the margin guidance number that we had shared with you. Now coming back to the guidance, we have again shared three numbers with the street. The first number that we have shared is the order inflow guidance, that is 20 to 22,000 crore. The second guidance that we have shared with the street is revenue growth of 15%, upwards of, 15%. The third guidance number that we have shared with you is about the margins, that is 9.5 to 10%. See, the elephant in the room for this financial year 25 is the election, being an election year, I am a keen watcher of, your show. Day in and day out, we are talking about the fact that, this is an election year and about 4 or 5 months, the government would freeze. There won't be, decision making, so that is the reason we have not really, brought the guidance down. If you really extrapolate that number by 30-40%, it's a very good number. It's really a growth. If you really extrapolate all these three numbers by 30-40%, we are talking about a growth, not a subdued guidance at all.
No, I mean, we were not extrapolating, Mr. Sharma. We were going by absolutes, and therefore 22,000 versus a total order intake of 27,200 crores of the previous year. I mean, it was, straight away looking like a dip. But anyway, I mean, let's just talk about, some of the qualitative factors as well. First of all, are you expecting things to pick up? I mean, is it just that you're being really conservative? And June onwards, are you expecting awarding to pick up? And which will be the key segments for you, which will drive a lot of the, the tendering?
See, maybe it could be June or maybe it could be July or it could be August. But our considered view on this space is, this infrastructure story is not a story about a quarter or couple of quarters or a couple of years. This story is something that is going to play out at least for 4 or 5 decades, So my guess really is as well, as good as yours, but our considered view is, maybe it could be July, maybe it could be June, or maybe it could, but we continue to see very healthy pipeline of projects or tenders, which are really expected to bid out. There may be a delay, maybe a couple of months here and there, but we are quite confident of, this pipeline being very healthy for next couple of decades at least.
Okay, unfortunately, we have run out of time on the show this time around, Mr. Sharma, but, we would like to kind of squeeze in. Nigel, you have one last you want to
No, I just wanted
to
tell Mr. Sharma that he's doing the right thing, with regard to business. We've taken his points on board. And as he said, he's always tuned into the show. So keep that going, Mr. Sharma. We'll invite you the next time. We'll have a longer chat as well. But thanks a lot for joining in and clearing out some of those issues. Well, for the time being, though, we'll wrap up on this edition of Bazaar. You stay with us. Chartbusters comes up next.
To start scanning businesses from. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
on an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more than 1,000 wagons. This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. When we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY 26, then our EBITDA margin should see an improvement, and we should be targeting between 13 to 15% EBITDA margins.
One of the big lessons I learned, in addition to what I learned from my mother and father, was the guru, John Templeton. He was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. He was a very careful with money, and he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. I learned a lot from him regarding the need to be frugal and not to waste money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me. I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was a lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
Mahindra & Mahindra zooms ahead. Brokerages are positive on the back of strong Q4 results. They raised their target price and EBITDA estimates for the next two fiscals. The management expects mid to high teen growth in the SUV portfolio in FY25. Also tells CNBC-TV18 that by 2027, 20 to 30% of the portfolio will be EVs.
Crompton surges after delivering fourth quarter earnings that were in line with street estimates, aided by strong revenue. Management tells CNBC-TV18 they're guiding for double-digit revenue growth for FY25. The stock is up more than 13%, now up 15%.
InfoEdge gains for the second straight day after upbeat brokerages. Nomura issues a buy rating, citing strong billing growth across all segments. The stock is up nearly around 8%.
Container Corp off lows. The company reports a mixed set of numbers. Volumes came in better than realization. The management tells CNBC-TV18 that FY25 volume growth will be 18 to 20%.
Kane jumps more than 14% after posting strong Q4 numbers. The revenue climbed 75% year-on-year. The company guides for 60% revenue growth in FY25.
Hello and welcome. You're watching us here on Chartbusters. The market opened mildly in the red. From there has been a bit of a recovery. We've seen green across all indices. That should be good for everyone. And more importantly, the mid-cap index doing a lot better. So it looks like a decent Friday so far. The question is where we go from here.
Well, that's right, Mangala. I mean, all the indices, key indices on the top of the screen trading well in the green, and a lot of stocks are moving around. Dixon is seeing some follow-through buying post its results and positive commentary. The street likes that. Crompton is up close to 15% on temporary freeze as we speak. And Concord, we had the management here on CNBC-TV18 just around 30 minutes or so ago. They are saying that there's no issue with regard to the LLF on the railways. And that's why the stock, from being deep in the red, close to under 1,000 rupees, that stock, in fact, has recovered big time. On the flip side, a couple of stocks that are under some pressure. Whirlpool has slipped a little bit from the top, and NCC as well a little bit subdued in the last few minutes. Yes, Mangal?
Just on the land license fee issue, this was an issue which was a couple of years ago, and as it was an issue, it was obviously open. So as auditors, they have to report issues which are already open. Has this resolution, the news of the resolution new? Not likely, because what has happened is that the LLF issue itself between the government as well as Container Corp was resolved about a few quarters ago. Brokerages had written on that as well that time. The LLF was, made at around 6% with an increase of 1% every year. The fact that the street was a little worried after looking at the audit report, the management clarity has definitely brought some relief, but per se, this issue wasn't a new issue.
Well, that's right, Mangala. But at times, the screen tells you the picture, right? What the street is nervous about, we here at CNBC-TV18 try to put those queries to the management, and they've clarified on that. So as Mangalam said, it may not be new, but it brought some clarity, explains why the stock did see a big recovery. Well, let's turn our attention to a special segment where we get you a few ideas for profit from Money Control Pro. Khushbu of moneycontrol.com joins us to talk about a stock that she's tracking. Khushbu.
Today's idea for profit is Aditya Birla Capital. The stock has delivered strong returns and outperformed the market, led by robust business growth and the announcement of merger of Aditya Birla Finance Limited with the parent company. This proposed restructuring is expected to be completed in the next 9 to 12 months, post which the company will convert from a holding entity to a large unified operating NBFC with better access to capital and operational synergies. The lending business outlook looked positive, backed by strong business growth in the NBFC loan book and increased disbursement in the housing finance segment. Also, the newly launched ABCD app will further aid the credit growth. On the earnings front, the company has posted strong numbers in Q4 with improved asset quality. The asset management business also saw healthy growth led by strong capital market performance. We believe that the simpler business structure and the ramp-up of the digital capabilities will aid the long-term growth, while the stable credit cost and better product mix will likely aid the return on asset. Also, if we look at the valuation, we see reasonable upside from the current market price based on multiple growth drivers.
Okay, thanks a lot for that, Khushbu. Well, let's focus on auto components maker Motherson Sumi Wiring. They reported a strong performance in Q4. The company even saw their best quarterly and yearly performance for revenue and EBITDA. We have with us Mr. Mahinder Chabra, who is the CFO, as well as Mr. Anurag Gilot, who is the CEO, who joins us on the show. Hi, Mahinder and Anurag. Thanks a lot for joining in. Well, a good year it was for you all. If I look at Q4, the revenue growth is close to around 19%. And for the year, you grew by close to around 18%. For the coming year, can you keep up the momentum? Should we be working with high teens growth? And if yes, which segment is going to lead the growth?
Good morning and thanks for taking us on CNBC. Just want to tell you, as you said that PV has grown by, also grown by 2 digits in FY in year on year in Q4 and single digit for the whole year. And MSWIL has outperformed the market. So market is supposed to grow because all the customers has invested heavily into the creating a capacity. Our biggest customer, Maruti Suzuki, has also announced that they will grow. They will be building capacity to around 4 million from 2.3 million, including EVs, hybrid and ICE. So they are going to build, this capacity next to 6 to 7 years. And Tata Motors also, you must have heard, these all information is in public domain that they have taken the Gujarat facility of Ford. They are acquiring a land in Tamil Nadu at Vellore. Mahindra, we have seen news in the market today. So market is going to be very interesting. And we showcase that there's going to be a very good growth in the future in the coming time. And in case of MSWIL, our growth is directly related to two things. There's one is the volume growth, and second is customers are choosing now feature-rich models or top of that line models. Hence, upgrade is happening, and thus this is more content of wiring harness in the car. And MSWIL always get benefit as cost of the sales are dependent on the models. So higher the model are selling, MSWIL sales goes high.
Right. So what kind of growth do you gun for in FY25?
I think, as you are seeing that market is already giving the numbers, we are very much aligned with those numbers and we are planning ourselves. So I think that numbers are already available in the market.
Could you, for our benefit of the viewers, reiterate those numbers which are already available in the market?
It is obviously it's a single-digit number only, but as you must have seen our past performance, we are outperforming. So I believe that whatever the market is going to grow, we are going to grow more than that.
All right, we take that point on board. But will that also mean scope for margin improvement? I just wanted your thoughts on this one, Mr. Chabra, because your margins have risen in the fourth quarter, but copper prices have also risen, input prices have increased. You've added a new facility. You have your own plans as well. Are you able to pass on these price hikes to the customers? Is there further scope for margin improvement from current levels?
Yeah. So as far as margins are concerned, we do see good EBITDA in the current quarter and also in the current full year compared to the corresponding previous period. And it is a result of the hard work put in by the teams and a lot of initiatives taken in the area of cost optimization, localizations, and operational efficiencies. As far as copper prices are concerned, we do have an arrangement with our customers where we pass on the fluctuations in the copper prices to our customers. Now, this passing on could be at a time lag. With some customers, it is at quarterly lag. With some customers, it is at a half-yearly lag. But that way, it doesn't impact our P&L as such. And coming to a question about sustaining the margins, as an organization, we focus more on ROAS, and we have a target of 40% upward ROAS that we would like to deliver. And 23-24, we delivered a ROAS of 48%, which was better than we delivered in FY23, which was about 44%. And we'll keep on working on the overall financial health of the organization and try and deliver better ROAS from here.
Okay, ROCE of 40%, that's the target. Give us some more details. How is the content per vehicle different? For EV and ICE, because you're well equipped to serve the EV industry, and that's what could help big growth going ahead as well. So give us a couple of numbers.
Okay, so in EV, you have to understand that there's one part of EV is obviously the engine room goes for the high voltage, but rather of the room area and all that remains to low voltage. As I was explaining the content of wiring harness grows obviously as people are choosing for feature-rich models. So the higher the model is, the more of wiring harness content goes into that. In terms of EV, you will find that there are not so many models come. There are very, one or two variants only, and they are loaded with all the features in the vehicle. So the higher the content is over there, wiring harness also selling accordingly to that. So you will find in the engine room area for electric particularly, there are very heavy wires. There are different connector who can hold a high voltage amperage. So anyway, content goes high in that area as well. So for us, in case of wiring harness, compared to ICE to EV, it is going approximately in passenger vehicle 1.75 to 2.25 times the content goes high.
All right. Let's break your revenue growth up going forward. Now, you said that there are three ways in which the company grows. One, if your underlying clients grow, that's point number one. Secondly, is if you increase the clients that you have. And thirdly, you increase the content per vehicle of every client that you service, right? So going forward, could you give us a sense of where the delta is in all these factors? You've spoken about the underlying industry growth. Let's talk about how much more you will sell to every client, and let's talk about some more client additions as well.
See, there are, I just come to for the customers, there are well-established customer in the market, in the PV, and there are few which are new coming in, and you must have seen that information in the public domain. In two-wheeler industry also, there are established customer and there are new generation customer. We are working with both. Established customer we were already supplying, and for the new customers, yes, we are already at the development or the proto stage. Now coming on to the growing of the business, as I said, that one is the volume growth. Second one is it's all depend on the customers. Actually, if you see that in the passenger vehicle, also 50% of the share goes to now to SUV. So the market is shifting from the entry level vehicle to the SUV. And and in SUV also, you are seeing that there are feature-rich models which are there. So as soon as there are more feature-rich are there, wiring harness content goes high, and our sales is directly linked to that. So we have to see that in coming time, how the new models or the new vehicles are going to launch, and which sort of feature and what are the customer are choosing the vehicle. That depends on all that. But we are engine agnostic company. We are ready with EV, hybrid, petrol, diesel, you name it, and we are there. So we are ready with we are very much aligned with the customer and ready to serve them.
All right, gentlemen, appreciate you joining in. Thanks a lot for giving us all those details. For the time being, the stock is more or less flattish, but you're promising good times ahead. So we'll track all of those numbers. Well, for the time being, though, we'll slip into a short break. When you come back, we'll focus on another management. Dalal Holidays will be the stock that will be on our radar.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest hoarding. 14 other people found a mention on Monday evening courtesy of that hoarding, a mention in the list of the deceased. Blame games have begun, as is the case in most such tragedies. Additional Commissioner of the civic body told CNBC-TV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Another heartbreaking tragedy took place in 2017 when at least 23 people were killed and another 39 were injured in the stampede that took place on the erstwhile Elphinstone railway station, now known as Prabhadevi. The army sprung into action soon after, building a new bridge just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced and we never heard about that incident again. Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of a few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Welcome back. You're watching us here on Chartbusters. The market's now picking up pace, closer to 22,450 for the Nifty. A bunch of banking stocks doing well. And we've seen Kotak Mahindra Bank move to the high point of trade. A couple of these metal names doing extremely well too. ITC is the stock which has now moved to the high point of trade. Among all the companies that have reported numbers so far, ITC remains to be reporting its next week their results. So we'll keep an eye out on that. And a decent traction is what we're seeing in names like SBI, etc. as well. Dixon Tech now up 10%. But a bunch of stocks also on our radar on account of numbers, and it is Dalal Holidays which will be in focus. The managing director joins us now to discuss their numbers. But just to set, put things into perspective, the numbers this time around, the fourth quarter is typically weak for amusement parks, and which is why the stock is down 5% in an otherwise decent market for mid-cap end of things. The revenues grew just 1.1%. The company is slated to open their new park, Bhubaneswar Park, in the next week itself. So a lot of the expenses were brought into this quarter itself, and as a result of which we saw a decline of 16% in the EBITDA, and the net profit declined by about 35% as well. We have the management with us, Arun Chittilapalli, who joins in from Dalal Holidays. Arun, thank you so much for joining in. Revenue growth this time around in the fourth quarter, understandably weak because of the seasonality. Just wanted your thoughts on what are you penciling in terms of footfalls for FY25, because in just a few days from now, the Bhubaneswar Park opens.
Thanks for having me on the show. As always, it's a pleasure to talk to you. Yes, we're not expecting big numbers in the fourth quarter. It's traditionally a weak quarter for us. But going into FY25, we are expecting about 10 to 15% growth in footfall, in revenues from our existing parks. But also we have a new park which is opening, in fact, next week. So that should add another. We are expecting between 5 to 5 lakh, around 4 to 5 lakh footfalls in that new project, and so that should augment our revenues for this coming year. And but of course, ARPU will be slightly lower compared to our existing parks.
So just to put things into perspective once again, you said that 10 to 15% is the revenue growth that you will get from your existing parks, and 4 to 5 lakh is the additional footfalls that you will get from Bhubaneswar, right?
Correct.
So what does that mean in terms of overall revenue for the year, including Bhubaneswar, and overall footfalls for the year, including Bhubaneswar?
I think revenues. It's hard to predict right now from the new project because it's a completely new park and we're just opening it out to the public for the first time. But I mean, in terms of footfalls, we are expecting about 5 lakh footfalls, which is like roughly half of what we get from our bigger parks. This is a conservative estimate. Revenues are hard to predict at this point, but we are expecting a good performance. And in fact, our opening weekend at this Bhubaneswar park is already sold out. And so it's going to be a very exciting year for us.
Okay, all right. Hi, Arun. Good morning and good to see you, Ben. So footfalls, we should pencil in around 40 lakh for the year, at least?
Yeah, I think we are expecting about 5% footfall growth in our existing parks. And plus, you can add about 4 to 5 lakh visitors from our new park. So that's the kind of number that we're looking at.
All right. So approximately 39 lakh, I think, is a fair number to work with. What about ARPU growth? What should it look like for the coming year? And also talking about Bhubaneswar, by when does it break even?
I think we should be able to break even from an EBITDA standpoint from year 1 onwards. But at a PAT level, obviously from year 3 onwards is what we are looking at.
Okay, and ARPU,
in terms
overall
of
ARPU growth?
ARPU growth for this year, we are expecting about 8 to 12% ARPU growth, mostly led by non-ticket spends and slight improvement in our ticket prices as well.
So could you give us a sense of where do the ticketing, non-ticketing mix stand at right now? Because I remember you saying 70-30 right now with a possibility of that moving 5% every year.
That's correct. So we are at 70-30 at this point in terms of ticket to non-ticket spends. We are expecting about 3 to 5% improvement in non-ticket spends. So maybe 65 to 35 kind of numbers we should be able to hit in the next year or so. We are expecting non-ticket revenues to grow faster than our ticket price, and also in terms of revenues, it should grow at a faster clip.
All right, Arun, the space that you're in itself is, hotting up. And personally as well, I'm going to be visiting a park. It won't be fair for me to comment on it. It'll look like a, a bit of a push for them. But I wanted to ask you, what about the CAPEX plans going ahead? When does Chennai come on stream? What is the CAPEX you've lined up out there? And at various locations in the country, what is the total CAPEX? And if you could give us the targeted locations as well, next 3 to 4 years.
Yeah, I think this is going to be a very busy space for the country with our young demography and, a lot of young people who wanting to go out. Domestic tourism is definitely going to be a big play for our country. We are looking at, right now we have 5 projects, 3 operational, 2 under construction. Obviously, 1 more we're going to open next week. We have another 5 locations at least that we want to get to before 2030. Starting with Greater Noida, we want to do something in Ahmedabad. We are looking at Goa. We are looking at maybe something in Maharashtra as well, if things align properly. We are open to doing more projects. These are long gestation projects. It takes time for them to come off the ground. So we are working on them already. Hopefully, we'll be able to give some concrete news. In Indore also, in Madhya Pradesh, is something that we are very closely looking to work at a project there as well.
Final question before we let you go, Arun. 10 to 15% is the revenue growth that you've guided for, along with 5% organic footfall growth in FY25. With the increased expenses and the stores that you plan on opening, the parks that you plan on opening, what is the margin expectation for this year?
The margins might contract a little bit in this year because we have, added overhead expenses, new recruitments, a lot of, extra costs will be coming into the books in this year and probably the next year as well because of new park openings. Slight contraction in margins is what I had told before as well. We can expect that, I think, slight contraction, maybe 3 to 5% contraction in margins, but nothing more than that. And as the new parks ramp up in footfalls and ARPUs, I think that will reverse pretty quickly.
Okay, Arun, wish you well. Exciting space. All the best for the coming year. We look forward to chatting up with you all through the fiscal. For the time being, we need to cut across the CIA Annual Business Summit 2024, but the Finance Minister is addressing the session.
With these advantages placed before you, I also want to underline, much against the advice given by some economists that India should no longer be looking at manufacturing or ramping up manufacturing, I like to highlight the fact that manufacturing must increase. India must also increase, with the help of policies, its share in manufacturing in global value chains. So we need to have greater sophistication in our product manufacturing. We also need to see how best this can be given policy support. Capgemini Research Institute gave a report which came out in May 2024 that India figures at the top of the list of investment destinations for senior executives in Europe and in the US who are looking to reduce their dependence on China and shift part of their manufacturing capacity to emerging markets. So their preferences for India, 65% of nearly 760 executives surveyed were planning to increase investments significantly in India. Expanding manufacturing also will be to help India be self-reliant, Atmanirbhar Bharat. Presently, the telecom sector's PLI has actually helped India to become better Atmanirbhar, in that 60% import substitution has been achieved in the telecom sector. That itself gives quite a big scope for our Indian industry. PLI scheme is also transforming the mobile and electronics sectors from 78% import dependence in 2014, from 78% import dependence in 2014. Today, 99% of all mobiles sold in India are made in India. 99%. Value addition in electronics and smartphone manufacturing too have grown significantly, having crossed 20% from the negligible level of 2014-15. India is becoming Apple's second largest manufacturing hub for iPhones outside of China. iPhone exports nearly doubled in April 2024, reaching $1.1 billion compared to $580 million in just the previous year. So that 1 year rapid growth is very noticeable. If I'm speaking of manufacturing sector, there's a word to be said about the service sector as well. India commands over 50% of the world's global capability centers and remains the most preferred destination, creating significant domestic and global opportunities in the service sector. The number of GCCs in India has increased by approximately 60% since 2015-16, reaching more than 1,580 in 22-23. So I would like to present that the fundamental basis for this consistent and steady growth and high growth is the policy stability, absence of flip-flops, corruption-free decision-making, and making sure that the facilitation both in legislative and also the legal frameworks all simultaneously going on, having heard from the industry that rapid changes are required in our compliance regime.
Right, that is the Finance Minister speaking to a bunch of businessmen at the CII Annual Business Summit, speaking about the need for keeping our economy growing fast, at the same time a framework around that as well. Take a short break, come back, focus on the markets and a lot of individual stocks.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record. Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Hormuz Fatakia, and this has been the comeback week for the bulls. If you remember, last week, the benchmark indices ended with a cut of close to about 2%, the biggest fall that we've seen in the last 2 months. And this week, we've pretty much recouped all those losses. So week to date, the Nifty and the Sensex are up 1.8%, with the broader market, the mid-cap index outperforming significantly. So the mid-cap index is a gain of close to about 3.5–4% for this week, with real estate, metals, PSUs, all these stocks making a comeback. The low this week was on Monday, 21,820 thereabout. And from that level, it's pretty much been a one-way move. We've been consolidating along the way, but after that little bit of a consolidation, we've been inching higher. Today as well, after a flat, muted sort of an opening, markets have picked up pace, up 0.25%, and the mid-cap index is up close to about 0.5%. But it's, this is a market all about individual stocks. So in the frontline pack, you've got M&M. Outside of the index, you've got a Crompton, Keynes Technology. We'll discuss all these big movers on our show today on Trading Hour. But let's start with the big index mover, and that's M&M. Came out with numbers yesterday. They looked very good. There is a 12,000 crore investment in the EV business. Sudarshan gets us a wrap out of the numbers and what brokerages have to say. Sudarshan.
So M&M is top Nifty gainer and has gained up to 7% after posting strong earnings, and even guidance is very strong. And currently stock is at a record high and it's up 45% just in 2024. And if you take the last day in the last 1 year, market cap has almost doubled. Now talking about the guidance, company says in FY 25-26 SUV exit capacity seen at 64,000 to 72,000 per month, and company is planning to bring in 7 new BEVs, that is battery electric vehicles, and 9 ICE SUVs to be launched that company is planning by 2030. And FY25 tractor industry guidance, that is growth guidance, is seen at 5%. Now coming to brokerage views, GS has a buy rating and target is rupees 2,700 per share. It says core auto, farm revenue and EBITDA have come in 5 to 9% higher than its estimates. And going forward, catalyst will be XUV 3XO, Thar 5-door and the growth in tractor business. Jefferies has upgraded the stock to buy and target is increased to 2910. It says tractor industry is now in late downturn. SUV portfolio continues to strengthen and it has upgraded FY25-26 EPS by 16 to 21%. And it says core FY25 PE is at 23x and that is still 20% below blended peer average. MS has an overweight call and target is raised to 2,665 per share. It expects company to remain fastest growing PV OEM in FY25 and re-rating potential for auto business, and it expects farm business sentiment to improve here on. Lastly, CLSA, it has downgraded the stock to sell, but target is increased to 2,312 per share, and downgrade is because of the recent rally that stock has seen.
Okay, thank you very much for that. In fact, we also chatted with Rajesh Jejurikar, ED and CEO of the auto and farm sectors at M&M to discuss the Q4 performance. Listen in to some interesting excerpts from that conversation.
The auto business has been a key driver of performance. We've seen some very strong momentum on the auto side, on the margin management, but as well on the performance of our SUV and LCV portfolio both. Firstly, the SUV growth expectations we've put out for F25 is mid to high teens. That's on the back of what we believe has been a good 3XO launch and also a new Thar which will come later in the year. So we do have 2 new products which will help us get to mid to high teens. So we think this will be a much higher growth than what the industry will have in the year F25. We would aim to gain market share. In fact, in April, the tractor market share gained significantly and was at a level of over 46%. We expect the second half to start picking up growth momentum. So you did talk about elections. We don't think elections fundamentally disrupts demand. It's just an aberration and there's a deferment. We have improved our EBIT margins significantly over the last few quarters, and the tractor EBIT margin continues to be strong in spite of a volume downturn. We would keep the balance right between growing margins and keeping demand, market share, and volumes intact. And that's really, what we would aspire to do. We would start launching products in a calibrated way starting in the Q1 of calendar 2025. We believe that by 2027, 20 to 30% of our portfolio will be electric in the SUVs. We would expect on a steady state basis the margin per unit of ICE and the margin per unit of electric vehicles would be the same. Now, not as a percentage because there is a denominator effect, but as a per unit margin, they would on a steady state basis, like to like, be comparable. In which case, we won't worry about cannibalization. We give customers the choice.
Okay, let's move on to the other big story that's Crompton. But before that, Hormus is joining in. Hormus, hi.
Good morning, Rima, and it's the good morning for the Bulls as well. It's been a pretty good day, last couple of days.
This whole week, right? Barring the Monday first half.
Exactly, and it's been the recovery that we saw yesterday that took the Bears and the Bulls both by surprise. Actually, the Bulls in a good way, of course. Yeah. But yeah, for the week though, we are up. The Nifty is now headed to the highest point of the day. The chartists also were mentioning that 22,300 is a key level for the Nifty to cross, and then it opens up further upside towards 22,500 and 22,600. So we'll keep an eye out on whether this up move will sustain. A bit of resistance to be seen at within that 100-point range. And the other big movers now there, Crompton is the other one that is surging after it delivered earnings that were in line with street expectations, which were aided by strong revenue. The management told CNBC-TV18 that they are guiding for a double-digit revenue growth for FY25. Listen to what they had to say.
The new baby in our portfolio, which is Butterfly, that we recently acquired about a couple of years back. It's still in transition. It's work in progress. We are looking at corrective actions that we have to take to ensure that it pulls its weight as a brand. As we move forward, we look at the business to grow at a double digit in the long run. And in the near term, probably whatever that the correction that we need to do and take the charge on margin, etc., by and large has been completed. As we look forward to next year, we want to make this business a very strong, solid leader in the categories that we operate in. We should be able to translate those learnings into Butterfly, make Butterfly grow at a double-digit business and get it on track to about 8 to 10% EBITDA in the long run. B2B is delivering strong growths. We expect B2C also to follow, and margins would remain strong as we have seen already in FY24. The idea was start with a double-digit revenue growth. We have achieved that in FY24 after many quarters and years. We expect that to continue and expand the revenue growth as we are looking at FY25. The summer has started positive. Let us see how does that move forward. So as far as margins are concerned, we called out that we would be focusing on absolute profits and ensure that the absolute profit growth is more than the revenue growth. This in the long run will help us to expand the EPS and create value for all stakeholders.
Okay, and Kaynes Technology is the other big mover, and the stock is up double digit. This is after reporting a solid fourth quarter. Upasna joins in with the key highlights from the Kaynes numbers and what's gotten the streets so excited. Upasna.
The company has reported a solid set of numbers with a revenue growth of 75% on a YoY basis. The growth was led by strong demand in industrials and EV, aerospace, outer space and railway segments. The EBITDA margin stood at 14.9% versus 16.3% on a YoY basis. And mind you, in FY24, EBITDA margin stood highest in Q4, that is at 14.9%. While the company is guiding for a 60% revenue growth in FY25, which is in line with the growth seen in FY24. And in terms of margins, the company is aiming to increase margins by more than 100 basis points in FY25. The company's order book stands at 4,105 crores with a sequential uptick of 9% on a quarter-on-quarter basis, providing strong visibility for growth for FY25. The average order inflow also of the company per month has increased from 279 crores per month to 321 crore per month sequentially. So all in all, we are seeing a strong set of numbers coming in from Kaynes Technology.
You know, this has been an earnings season that good earnings have always been disproportionately rewarded and vice versa, right? And one of Keynes is one of them, and we spoke about Crompton as well, and the other one
HAL
and
yesterday.
HAL also yesterday's trading session, absolutely. And the other one is Endurance Technologies, which we're going to talk about now. It's another double-digit gain there as well, another operationally strong fourth quarter earnings performance. And Sudarshan gets us up to speed with the earnings fine print and the management outlook going ahead. Sudarshan, what did the management say that got the streets so excited?
So before I start talking about that, so if from Nifty it's M&M, then from broader market it's Endurance Technology, which is now currently up 10%. And if we talk about the numbers, it was operationally beat. Profit was up 54%, revenue has increased 20%, and margin has increased almost more than 150 bips year-on-year. But more than numbers, what more heartening is the outlook. Total order book expected to be boosted further as company has 1,840 crore worth request for quotes that is under discussion with several clients. And in FY24, total orders have surged to 1,200 crore, and that is up almost 30% year-on-year. And if you talk about the ramp-up number of the new orders, it is seen rising almost 3 times by FY27. Currently, it is at 920 crore. Company expects it to increase to almost 2,700 crore. And if you talk about the brokerage views of all the brokerage coverage that we have from Bloomberg, more than 60% have a buy call on the stock, and target is as high as 2,375, and it indicates almost 20% upside from current levels.
Okay, thank you very much for that. Sudarshan, you've got your hands full with auto and auto ancillary this Friday morning. We'll get into a break. On the other side, we'll discuss commodities as always. Manisha Gupta joins in. Stay tuned.
Invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Well, how I wish this was a video interview that we had, but you know, you take what you get with the likes of Neville Nerona, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that, he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small, tiny audiences at very low cost. And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that, you know, the mix of DMart's sales actually deteriorated largely because perhaps, you know, there have been entries of a lot of these value retailers in the apparel space as well. To that, he said, yes, there is marginal impact and specific to a certain category such as apparel itself. And that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart is adding every year, whereas they worry about how well the stores
Back with us here on Trading Hour and onto the commodity space now. Manisha Gupta is joining in, and today we are focusing on wheat. Manisha, good morning. What are you picking up?
Morning. Well, yes, you can talk about everything, but the basic food definitely comes before and it's a priority. And wheat, yes, while we have seen prices rise and the reason that the government had to ban exports here as well. So now when you look at the government wheat stocks, well, they're lowest since 2008. This is as per the number. They're still higher than the buffer norm that the government has set for itself. But then remember, government has been procuring more and more each year. Now, the expectation is that with the kind of speed that the government is procuring wheat right now, where many of the states have actually started to give bonus to the farmers as well. Even with that, we are standing just at about lower than 26 million tons. Now, when you look at last year, it was 26.2 million tons of a procurement that the government had done. So the expectations are that the government will miss its procurement targets for this year. And this is after missing it in 2023 and 2022 as well. What we also are seeing that the government has sold a lot of wheat in the open market via Food Corporation of India. Well, this was to ensure that there was wheat availability for the private trade, that is the flour mills, biscuit and bakery, etc. So 10 million tons of a record wheat is what government already has sold into the market. And at this point in time, there's not enough procurement happening, and that might keep the prices on the higher side. Also, what the industry is reporting is that they are looking at a wheat crop of almost 6.5% lesser than what the government has put out at around 105 million tons. And they are expecting that the government will at most procure anywhere between 26 to 27 million tons, which is going to be way lower than 30 to 32 million tons of a target that the government has put out. So even with a good monsoon and the expectation that you have a good wheat crop, the fact or the expectation that you could be looking at exports opening anytime soon is something that the street is not working with.
Thank you very much for that, but not so great news for the Indians, considering we're big consumers of wheat. But thank you, Manisha, for highlighting this. Need to get into a break, and another big mover today is JK Paper. After their Q4 numbers, we'll invite the management to talk about the way forward. Stay tuned.
Actually managed, and that's the big dissonance. But having said that, they would like to add as many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces, and a lot more relevant for India, which is known for leapfrogging beyond different things as well. And on competition and of course digital commerce, he says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures, and as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about growth in the tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
In the auto sector, in our pecking order, we see two-wheelers having a higher single digit or lower double digit kind of growth rates, followed by PVs and followed by CVs and tractors. I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side, I think that's where you start scanning businesses from. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
On an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more than 1,000 wagons. This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. When we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year. We should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY 26, then our EBITDA margin should see an improvement.
Welcome back. Shares of JK Paper are surging in trade today on the back of the Q4 numbers. Revenue growth, though, was absolutely flat, practically flat on an annual and on a quarter-on-quarter basis. Their profits, the margins have contracted if you look at it on a year-on-year basis. We have with us A.S. Mehta, President and Director of JK Papers, to take a few questions. Mr. Mehta, in your press release, you say, and I quote, significant increase in raw material cost and lower realization across all categories have impacted performance during the quarter and the year as a whole. The selling prices continue to remain under pressure due to increase in imports. Tell us about the backdrop as you begin FY25 and what does it set you up in terms of volumes, in terms of value growth, in terms of margins across the various categories?
Thank you very much. In fact, when I was talking last quarter and last quarter results, also I said that 23-24 year is a challenging year. In the backdrop of 22-23 fiscal year, which was an outlier year for paper industry, domestic as well as the global paper sector. So, the drop in profit margin was bound to happen because 32% or 33% operating margin, I don't consider as a sustainable margin for a long run. So, in fact, in that given situation, when the raw material cost has gone up closely 30% or over 30%, and NSR drop in the different categories, like packaging board, it has dropped by almost 16 to 18% compared to the last year. The Maplitho prices have also come down by 7 to 8%. Coated paper, it has come down by almost 15%. So in view of this, the operating profit, the JK Paper could maintain this at 27%. That also credible, I would say. Going forward, I would say the demand for writing printing paper, the demand is likely to grow at 2 to 4%. The copier category also, we are expecting the same kind of a growth. But the packaging board, which we expanded our capacity, and now operating almost at 100% and will do better, that is growing at 9 to 10%, which is a very healthy scenario. But in view of the global price trend, the prices of packaging board remains under pressure. And I hope we could recover to some extent, but we will have to see what kind of import continues. In fact, we have filed an anti-dumping petition against the packaging board import and dumping. So hope the government acts fast and takes some action on this front. If that happens, we will have the advantage.
Okay, so assume there is no action on the anti-dumping, on imports, right? Assume that's still status quo as it stands. Give or take all the factors that you've maintained, what do you think margins could be in FY25? Will it be better than FY24? Can it inch up back to levels of 20-25%? And even on the top line?
See, it's a very difficult question, I must say that, because the raw material scenario, I would think that it will continue to be the same, more or less, for the year 24-25. Because the plantation, whatever we have done in last 2 years and current year 23-24, and also whatever we do in 24-25, that will give a result only after 2 years. So I am expecting 25-26, the raw material scenario would be shed better, and 26-27, it should be much better or back to normal. The prices, I would say that if the government does not take any action, only savior can be because the global pulp prices have already started moving. It has already touched $750. So if the pulp prices remain high at a global level, there would be better price scenario globally, and that would also reflect, or it will be replica in the domestic market also. So that will depend on the global, the demand supply as well as the prices.
Mr. Mehta, good morning. Thanks a lot for joining in. I wanted to know what's causing this sluggishness in demand for the printing paper. You're saying that it's about to grow at only 2 to 4%, the printing paper. I'm just reading a report which is saying that India is likely to contribute almost 20% to the overall growth of paper demand globally. What's leading this demand sluggishness? Is it just the excessive imports, or there are other factors as well?
No, when we are talking about the demand, it is not whether it is import or it is domestic. Demand is demand, whether it is met out of domestic production or an import. So the demand contraction, it is bound to happen because the digitalization and digitization, we factored this in our own demand projection. And in fact, it is bound to happen because Western world, writing, printing paper, the demand is degrowing by close to 15%. So when the Western world is degrowing, it is only Asia and Africa that it is growing. So the India, I would say that we should grow at 2 to 4%, depending on the year and depending on the category. Because like the year 24-25 and 25-26, the growth may be slightly better in view of the new education policy, printing and publication of the new textbooks, but that is going to be only a year or two. Thereafter, the growth would be 2 to 3%.
But then digitalization is happening even in school curriculums, right, Mr. Mehta? But now you're saying that it's 2 to 4%. If you expect that digitalization as a trend to continue, do you see that demand growth number from 2 to 4% going further lower?
I would say next 5 to 7 years, it should not go down. It will remain at 2 to 4% and maybe 0.5%, 1% higher also, because also it is seen that the digital and the online is impacting the eyesight of the children, the memory of the children, retention power of the children, concentration of the children. So that impact is also happening. In fact, globally, the online or the virtual books, e-books, it has degrown by 10%, then the physical books is growing back.
Mr. Mehta, thank you very much for joining in. As a mother of two, I can understand the cons of too much digitization on the kids. But thank you very much for joining in. In our next conversation, we'll talk about how you're planning to offset all this and the big strategy for the company, going forward. We will get into a break. On the other side, we'll discuss market technicals. Mitesh Thakkar joins in.
Between 13 to 15% EBITDA margins.
One of the big lessons I learned, in addition to what I learned from my mother and father, was the guru John Templeton. He was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. He was a very careful with money, and he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. I learned a lot from him regarding the need to be frugal and not to waste money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me. I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was the lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest holding. 14 other people found a mention on Monday evening courtesy of that hoarding. A mention in the list of the deceased. Blame games have begun, as is the case in most such tragedies. Additional Commissioner of the civic body told CNBC-TV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Back with us here on Trading Hour, the Nifty remains around the 22,460 mark, but the key point is that the Nifty Bank is above 48,000. That's the level it's facing some bit of resistance. So the question is whether this rebound from the Nifty Bank will sustain above these levels of 48,000. Good time to get in Mitesh Thakkar for a technical check of the markets. Mitesh, until a better part of yesterday, the Nifty felt like it will break 22,000 again on the downside. You take a coffee break and come back, it's back above 22,400. What's your call on the index now? Does it have enough legs to get to 22,600 now?
Yeah, Hormuz, I think you put it right. I think if you would have missed that crucial 15-20 minute kind of a time frame, you would have missed the entire move on the Nifty and then the Bank Nifty as well. My sense is, yes, I think, the intraday charts at least have turned positive with that yesterday's big move. And despite the fact that today the morning opening was slightly soft, I think the indicator bias was on the positive side. So 122,500 has got some options positions, so therefore that's a pivot. But I think eventually we are looking at 22,600 as the target area, and correspondingly, if the Bank Nifty can sustain above 47,850 zones, then I think it could also head towards 48,800 levels, which gives you about 800 point kind of an upside from current levels. So I think there's a good chance that we will see that upward drift, though it could be choppy in the middle. But I think the bias is on the positive side.
What about specific stocks, Mitesh? It's so much moving around in the broader markets. What's the call there?
On the stock side, Hormuz, I have a buy on Concord, Container Corporation of India. That's a stock, which has done well in the last few weeks. And even today, I think, the stock is trading near its previous highs. Buy here with a stop at 1,040 for targets of 1,120. And the other call is a buy on Grasim Industries, which I would recommend buying with a stop below levels of 2390 and a target of 2480 can be looked at.
Thank you very much for that. From technicals to fundamentals, we'll get into a break. On the other side, we'll invite Ashi Anand from IME Capital.
The heartbreaking tragedy took place in 2017 when at least 23 people were killed and another 39 were injured in the stampede that took place on the erstwhile Elphinstone railway station, now known as Prabhadevi. The army sprung into action soon after, building a new bridge just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced and we never heard about that incident again. Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of. A few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. from chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics.
Welcome back. On to the telecom space now, and the spectrum auctions will begin on the 6th of June. And yesterday, the Department of Telecom released the earnest money deposited by telecom companies. What does that signal? Rima is standing by with the details. Rima, over to you.
Thanks so much for that. So, in a nutshell, the 2024 telecom auctions are likely to be a subdued affair. 2022, the last ones, that was the big one when the government had put on offer 5G spectrum for the first time. But now, most of the 5G rollout is already done for the likes of Jio and Bharti Airtel, and Vodafone Idea is still emerging after recently getting recapitalized. So analysts are broadly not expecting big bucks to be spent this time. Maybe the auctions, the spectrum bidding will take place where the spectrum is expiring. So now what's new? What took place yesterday? Well, yesterday, the DOT, the Department of Telecommunication, released the earnest money deposited by the telcos. And this is how the numbers stack. Reliance Jio is the most at 3,000 crore rupees. Bharti comes second at 1,050 crore, followed by Vodafone Idea with a modest 300 crore rupees. Now, how does this work? 1 rupee of earnest money deposited allows the telcos to approximately bid for 11 to 12 rupees of spectrum, which means if you multiply 12 by the EMD, this is the maximum amount that telcos will be able to bid for. Reliance Jio again tops the most. They can bid for spectrum valued at close to 36,000 crore rupees maximum. Bharti Airtel at 12,600 crore and Vodafone Idea at 3,600 crore. Now let's get to what it means for individual telcos. Now, as I said, Reliance Jio has put in the most, EMD at 3,000 crore rupees, which means it can bid for spectrum up to 36,000 crore rupees. You know, this number comes in as a bit of a surprise because Reliance Jio has no spectrum coming up for renewal all the way till 2030. And the last time, Reliance Jio had already spent a whopping 88,000 crore rupees. So why have they put in such a high EMD? How much are they planning to bid? That remains to be seen. But one caveat is that Jio has always put in the most in terms of EMD, and it doesn't necessarily translate into very, very big spends. Now, moving on to Bharti. Now, Bharti has some spectrum expiring. If it looks to renew it, then at the reserve price, it will have to spend close to about 3,800 crore. But the question which analysts are going to be watching is, will they look to boost their sub-gigahertz spectrum, basically by buying 800 or 900 megahertz, because that's where Reliance Jio has an advantage over Bharti Airtel. Now, Kotak on the whole estimates Bharti to spend about 8,800 crore rupees. And finally, for Vodafone Idea, expect limited participation. In fact, you know, the company had 12 megahertz of spectrum, which is coming up for renewal, and they've already surrendered about 3 megahertz. So approximately, analysts are saying that maybe Vodafone Idea will spend about 1,000 to 2,000 crore of bidding. You know, just purely based on demand and supply, there is no reason for bidding wars to take place in this spectrum auction. You know, the industry is just emerging from tough price wars, and now the street is hoping that the focus of the industry shifts away from subscriber market share grab to monetization and improving the return ratios. But this high EMD, the earnest money which has been deposited by Reliance Jio, when it doesn't have any immediate need for spectrum, has again put analysts in a bit of a tizzy, and it's raising the prospects that one of the players will become aggressive, making this auction also a very interesting one.
Auctions are always interesting. Thanks a lot, Rima, for joining in. And let's pose that question to Ashi Anand, the founder of IME Capital. Ashi, good morning. Thanks a lot for joining in. The telecom space now is buzzing with the Vodafone Idea fundraise and a lot of these earnings also coming out. With this recent turn of events with Vodafone Idea, does it give you a confidence that this Indian telecom market is now going to remain as a 3+1 market? And also, what's your call on this space?
So I think one, just broadly with the Vodafone IPO going through successfully, yes, we are looking at a 3+1 market. This does have implications in terms of, earlier there were some hopes of it moving towards a 2+1 market, more from a specific company perspective. So in a three-player market, I think the core call is really what happens in terms of ARPUs and pricing discipline across different players. You've had an extended period where pricing in India was extremely subdued. Data rates in India are amongst the lowest in the world. Are you now going to move towards a period where players start being a little more kind of pragmatic in terms of pricing, and you really start seeing ARPUs moving up? I think the overall street expectations are that yes, given the fact that there are large 5G spends which have been kind of undertaken, you do need to generate ROEs on those spends, that you are going to see pricing continue to move up. Some of this is already being priced into overall numbers. But in terms of the actual pricing momentum, this is really something that we do have to see, because similar to what I think Rima was just talking about, Jio does seem to continue to be aggressive. And that has really been the key player which has been spoiling the market in terms of pricing. So how pricing evolves going forward is really the key call in terms of what is the overall outlook on stocks in the sector.
Ashi, hi. I know Zomato is a much-loved stock for you. It's one of your largest holdings, and every time you come, we ask you your view on Zomato. But this time numbers were very, very strong. There is no taking away. Blinkit turns EBITDA positive in Q4 at least at the EBITDA level. But the stock price reaction was fairly tepid. It looked like all the good news was already in the price. Your thoughts on Zomato? If someone has a 3 or a 5-year time horizon, is 200 rupees still an attractive entry level?
Yes, I think undoubtedly so. We continue to be very, very positive on Zomato. And it's important to understand the underlying fundamental reasons that actually make us so positive. So this is a company which has already been 3x for us in our portfolio. And we actually bought into this at the lows when I think our core call was that the street is underestimating the sheer pricing power and the number of levers these companies have to improve profitability once they decided to move into a monetization phase. What I think you've very clearly seen over the last 3 to 4 quarters is quarter after quarter, Zomato has actually been surprising on the positive in terms of profitability. And this is something that we believe as you go forward 2 or 3 years, this trend of positive surprises on profitability will continue. Now, to understand why that is happening, these companies tend to spend a tremendous amount in the initial growth phases, where they're just focusing on getting customers onto their platform. But once they have customers who are on their platform without other alternatives, is really when you can start tweaking a lot of monetization levers. So if you're just understanding how is Zomato moving towards profitability, it's the introduction of delivery fees, it's the reduction of counts. Something like a platform fee has a big swing in terms of overall EBITDA. There's a small nuance which both Swiggy and Zomato have introduced around saying that you could now have a slightly cheaper rate if you don't have a dedicated delivery partner, but you actually share the delivery partner. This is something that can improve costs significantly. There are multiple levers, and basically as Zomato keeps flexing these levers, consumers who have gotten used to delivering food or ordering food and getting food delivered don't really have a choice. So even as you end up paying a little more, you aren't going to let go of food or ordering food just because of this. So this is one element, and this is the core business. But the other very interesting part of Zomato is just how well Blinkit has been doing. A year and a half back, Blinkit was considered a major headwind in terms of spends, and is it going to be profitable? I think across the board, Blinkit has actually outperformed both in terms of growth, and you already achieved adjusted EBITDA break-even on Blinkit in the last month. This is a space where Zomato is actually indicating GMV could be higher than that of the food delivery business. So there's just multiple different elements of growth, of profitability. All of these are stacking up really well. And it's not just Zomato. We see this across multiple other digital platforms where we believe the street is going to be kind of a surprise on the upside, both in terms of underlying growth and profitability. And therefore, we believe the kind of good run will actually continue. Just a last point.
Go ahead.
Yeah, just a last point in terms of the subdued reaction to the result. When you've gone up 3x in a year, you are kind of factoring in some of the near-term momentum. So it is possible to see a bit of a breather, but I think the long-term story continues to be very strong.
You know, Ashi, all is well if you've bought in at the lows like you did, right? But would you recommend buying Zomato at current levels?
Yes.
Have you increased your weightage in this stock recently in your portfolio?
So it's already a substantial weight, right? So it is the top weight in our overall portfolio.
Yes.
But in terms of as long as you have a 3 to 5 year time horizon, we believe even from current levels, there is substantial money to be made, primarily because companies like Zomato are basically growing. See, there are not too many companies or industries in India that have an ability to compound revenues at 25% plus with an ability to also improve profitability. And our very clear call is that 3 to 5 years down the line, if you look at the levels of margins, the cash flows, and the overall profitability levels of these companies, they're going to be very high quality franchises. If you just build out 3-5 year models, look at the kind of growth which is coming in, both in revenues and profitability, we are very comfortable even at current levels.
Well, Ashi, there is another sector that has been the sector of the week actually a couple of them. One of them is capital goods, the other is defense, and you have holdings in both of them. I see your portfolio, you have ABB, Thermax, Bharat Electronics as well. What gives you this conviction to stay positive on both these sectors? As a matter of fact, there was a report recently that mentioned that HAL is likely to triple its order book by FY30. What about the other stocks like HAL, Siemens? What's your view on both these spaces?
So we are very positive, and just to kind of understand, we're coming off a decade of kind of weakness in this overall space, right? 2010 to 2020, you really had virtually no capital formation taking place in India. We believe that there have been multiple kind of underlying changes that have happened at an economy level. The reduction in corporate tax rates, various forms of PLI incentives, a very strong shift that you're seeing away from China in terms of a value chain migration. You are seeing an overall revival of the capital goods sector. And we believe this is actually a multi-year cycle. The amount of the value chain that exists in China that could potentially move towards India, the amount of global companies that are trying to de-risk their value chains, India becomes very strategic, both from value chain de-risking globally, as well as a very, very attractive local market for these MNC peers, etc. So we believe that across sub-segments of kind of capital goods, right? So be it electronics, be it clean energy, there are multiple
We seem to have lost the line there with Ashi. Try to reconnect with that, but it's time for a short break here on Trading Hour. But as we go into that break, UTI MF CIO Vetri Subramaniam is bullish on the BFSI sector. In the latest episode of Market Cafe, Vetri tells Surabhi Upadhyay why the RBI's heightened regulatory vigor is actually opening up a good opportunity for investors. However, beyond financial services, Vetri is quite cautious on the overall market given up the run-up in stock valuations. Here's an excerpt of that conversation.
Why you're cautious in general?
Cautious only because, Surbi, I think, a lot of the good news is in the price, and valuations are what gives me some cause for concern. If you start to extrapolate on an Excel sheet, you can pretty much extrapolate anything out for 24 years. And, obviously, there is every reason to believe that, the targets that we have, Viksit Bharat, so on and so forth, are things that can be achieved. But life is always a lot more cyclical. And I think people are ignoring the risks that are potentially cyclical and just focusing on that extrapolation of what can happen over 10 to 15 years. And to my mind, when people always ask me, what's the biggest risk? I've always told them the biggest risks are risks that even I don't know that they exist. Yeah. But valuations have actually proven to be the best way to prepare yourself rather than to predict when something can go wrong. And the valuations are telling me this is a time to be cautious.
Fair enough. Well, we promised you coffee, so here it is.
Thank you.
You've seen so many cycles. You've been in this market in various sort of capacities for over 30 years now. What we've seen since COVID, a near one-way run where everything you touch, almost everything turns to gold, and corrections are like 5%, 6% max. Is there a parallel that comes to mind? What do you think of this last 3-year journey?
Two ways to answer that, Surbi. I think if you actually look at the amount of distance the market has traversed, I would say, in my 30 years, I've seen a market traverse a lot more in terms of gains over a much shorter period of time. So it's not a mind-boggling rally in terms of the distance that it has covered or percentage gains it has delivered over time. You will find many more instances in the past where it's done more in a shorter time.
Okay.
But I think what's been unusual about this one is been, as you rightly pointed out, the lack of volatility. So it's sort of tended to be just up, up and up and nothing meaningful in terms of pullbacks. And actually, I would say it's not just the last 4 years. If you actually look at the last 8 years, we haven't had a single calendar year in which the market actually closed negative. But what is more tricky for people is dealing with a market which goes nowhere for a while. And people have not experienced that.
We've not seen
that is
that in a while,
something
yeah.
which, I worry about.
Of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new.
Welcome back. With FY24 coming to a close, we take stock of the 5-year performance of mid-sized private sector banks across various parameters. Abhishek is joining in with the details and he puts Federal Bank right on top of the league table. Abhishek is here to tell us why.
Under the leadership of Mr. Shyam Srinivasan, over the last 5 years, Federal Bank has given the best returns to shareholders among mid-sized banks. And this comes on the back of improvement that is seen in their financial performance as well when compared with peers in the mid-cap banking space. So here's a scorecard of Federal Bank's 5 years performance. Now, Federal Bank has seen a strong business momentum over the last 5 years. Its deposit base has grown at a CAGR of 37.4% when compared to 35.2%
for IndusInd Bank and 23.9% for Yes Bank. So its market share in deposits have increased from 0.88% in FY19 to 1% in FY24. A small note to the viewers, we have scored the companies based on their performance in each parameter, where 4 is the highest score and 1 is the lowest. Now moving on, the advances have grown at a CAGR of 38% when compared to 37% of IDFC Bank and Yes Bank at 18.7%. So advances market share has increased from 1.38% in FY19 to 1.5% in FY24. In terms of asset quality improvement, Federal Bank's gross NPA ratio decline has been the second best to Yes Bank amongst the peers. Gross NPA ratio of Federal Bank has reduced from 2.9% in FY19 to 2.1% in FY24. Now, healthy business growth and improvement in asset quality has enabled the bank to post the best profit growth amongst peers. IDFC Bank started its banking journey in FY19, which was a net loss year for them, hence they are not comparable. Under Mr. Shyam, in last 5 years, Federal Bank has grown its retail plus agri book at a massive CAGR of over 44%. The loan mix has seen changes from being a corporate lender to more of retail loans. So retail plus agri loan has increased its share in the loan mix to 45.6% in FY24 from 39.2% that they had in FY19. Now, corporate's book share has declined from 43.2% in FY19 to 35.15% in FY24. Now, shareholders have seen handsome gains on their holdings as well. If you compare mid-sized private banks, Federal Bank has given the best return over the last 5 years. But if you do a peer comparison with all private banks, ICICI Bank has given the highest return. Federal Bank has given the second best return. A simple aggregation of the scores makes equal weight to each parameter. If you take a look, clearly places Federal Bank as the best performer over the last 5 years amongst mid-sized private banks.
Abhishek, thanks a lot for that. And it's time on this edition of Trading Hour. Rima and I leave you with the Nifty at the highest point of the day. The Nifty Bank extending its gains and the small cap indices continuing to outperform. From us and the team that put this show together, thank you so much for watching. Halftime report comes up next.
Achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Well, how I wish this was a video interview that we had, but you take what you get with the likes of Neville Nerona, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that, he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small, tiny audiences at very low cost. And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that, the mix of DMart sales actually deteriorated, largely because perhaps there have been entries of a lot of these value retailers in the apparel space as well. To that he said, yes, there is marginal impact and specific to a certain category such as apparel itself, and that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart is adding every year, whereas they worry about how well the stores being added are being actually managed, and that's the big dissonance. But having said that, stocks continue to climb, riding on to some strong earnings. Consumer durables and autos are the big gainers, even as IT and healthcare trade soft.
Well, M&M's key automotive business head tells CNBC-TV18 that exciting new products will be the big growth drivers. He expects mid to high teen growth in SUVs in FY25, along with a recovery in tractor sales in the second half of the year. The stock climbs.
Crompton jumps after it gets back on the growth track and guides for stronger growth ahead. Keynes Technology leaps on a strong show and an equally strong sales and profit guidance, while Endurance Tech spikes on a sharp rise in profits and orders.
Finance Minister Nirmala Sitharaman at the CII annual summit says she is looking into what can be done in the budget, even as she calls out India's twin balance sheet advantage and its demographic edge, while nudging the private sector to push forward on manufacturing. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be a session where we are seeing follow-on buying in today's trading session, and all the magic started last afternoon and it's continuing today as well. So let's see whether we end up in the green or whether we maintain the gains that we're seeing on the screen as of now. But as of now, the market's looking good. We have the advanced decline ratio, which closed positively yesterday, and that continues to remain in positive terrain today. Lot of stocks in focus on account of price and volume action, and that seems to be the key theme. One, that the market's probably got its mojo back, let's see. And secondly, stocks in focus include the likes of Kiri Industries, Crompton, Keynes Technology. All of these stocks are gaining on the back of high amount of volume and price action. Hi, Mangalam.
Hi, Ekta. You said it. It was something that started last afternoon and continues even now. The Nifty closing in on that 22,500 mark. In fact, from yesterday's low, it's almost a 400-point rally going towards that 500-point rally mark. And as the metal stocks are rallying, small cap index doing a lot better. We're seeing some traction build back into the real estate space as well. Was doing well earlier, and now after a bit of profit taking has come back. So the Nifty Realty Index is at the high point as well. But as we speak, a lot of earnings to contend with. The first one on our show is Sansera Engineering. The First Management, the auto component manufacturer, reported a broad-based growth across all geographies, delivered the highest ever top line and EBITDA in the fourth quarter as well. So to discuss this and more, we do have with us B.R. Preetham, who's the Group CEO at Sansera, joining in. Thanks a lot, Mr. Preetham, for joining in. It's a 20% revenue growth that you posted in the fourth quarter with a 32% EBITDA jump. What really stood out was a sharp margin expansion that you did, not only on a quarter-on-quarter basis, but year-on-year as well. So the question then is, is this 20% growth run rate likely into FY25? And what sort of margins are you targeting this year?
Thank you, Mangalam. Thanks for having me here. We are very happy that we've been able to deliver consistently over the quarters last year. If you really look at our order book, we are very confident that going forward in FY25 and onwards, we would be delivering, we are aiming at 20+% growth as well. So this also is evident in our strong order book, which is also demonstrated.
Okay. Well, sir, I just wanted to actually get some figures with regards to the order book. The latest figures we had is that it's around close to 1,600 odd crores. Is that a correct figure? And what are you guiding for when you go into FY25 in terms of incremental orders? And which segments are you expecting the inflow to come from?
Yes, Ekta, look, when we say that every year we have been resetting our order book, removing the orders from the peak order revenue that we indicate, of the orders which have started commercial production. So we have removed approximately about 600 crores of orders out of the order book. And then after resetting, it is approximately about 1,600. This means that these are the orders which we are yet to execute, and this can result in a peak annual revenue of 1,600 crores when it is fully matured. So this is an annual process that we keep doing. Overall, we added about 800 and odd crores in the full year, out of which we have removed about 600 and moved it into the production this year. Primarily, if you look at our order inflows, this is coming from both auto ICE as well as non-automotive and XEV components. If you really look at our order book, it's a very good mix of, about 52% of our order book is coming from non-automotive and tech agnostic. And this is also primarily 60% of our order book is also from our international market. So there's a very healthy mix of both sector as well as geography.
Right. I remember, the last time you joined us, you did say that 17% of your business was non-auto and tech agnostic, even as most of your order book increase is coming in from that segment itself. You anticipated that this could go all the way up to 40% in the medium term. So just wanted your thoughts on by when does it go to 40%? And on margins, I didn't get your answer. You said, you would operate in a 17 to 20% band. You're at 17% right now. So do we see 20% in FY25?
No. We would be very happy if we are able to reach 20%. No, we are consistently improving our margins. And we are very hopeful that in this year as well, we will see margin expansion. Of course, as we are on the growth trajectory and a lot of our capex and resources are getting front-loaded into our growth, so you would have a certain effect of that on the margin, but we are very hopeful that and confident that our margin profile will keep improving. What was the second question, Mangalam?
That was autos and non-autos, basically the tech agnostic space.
Yes. So when we started this journey post our IPO, we were at 17% and we have set ourselves a target of moving it up to 40%. As we full year ended, it is about 25% now. 17 has moved to 25 on a much larger revenue base. Now, if you really look at our order inflows, more than 50% of our order inflows are in from non-auto and tech agnostic. So we are very confident that in the midterm, in next 2 to 3 years, we will move this to about 40% as we have guided.
Okay. Well, Mr. Preetham, it's been a great quarter for you. It's been a great year for you. But if you had to point out any kind of headwinds to growth that you could see going into FY25, certain red flags that certain parts of the business that you're probably worried about, segment-wise, say it could be the EV segment or even geographies such as Europe, which one would be a point of concern or something that you're probably tracking closely, and why?
I would not put any red flag, but I would say that we have been very cautious in our, we have been closely monitoring our business in Europe. Europe seems to be, we are very cautious on Europe business, both our exports to Europe as well as our Sweden subsidiary, which we are doing, as well as, there were some headwinds in our aerospace business last year because 1 or 2 projects approvals got delayed, so we could not achieve what we had anticipated. But we are definitely very positive on our aerospace and defense business. So this year we should be able to be doing a lot better in that. But we are also cautious on certain logistics related issues which are related to Red Sea, which could impact on freight movement in terms of time and also in terms of cost, because about 31% of or 32% of our business is to our international destination. So there would be some, we are keeping a close watch on this as well.
What about debt? Net debt, if I remember correctly, is a little over 700 crores at the end of FY24. You were looking to reduce it. What's this plan here? What's the scope of debt reduction in this year?
Mangalam, we are in a very high growth trajectory, and we are expanding our, as I indicated in my earning call as well, we are expanding our product portfolio. We are we have committed resources into our higher tonnage of presses, which would aid our both aluminium forging as well as forgings of higher engine category. So with all these things, we are quite hopeful that we will be range bound in our net debt. It would be take away 25 to 50 crores addition or deletion based on the end of the year numbers. We are quite hopeful that as our ratios keep improving, then the absolute amount may slightly go up, but then the ratios keeps improving. So we will keep an eye on this number and act accordingly as and when it is.
Okay, all right. Well, we're going to let you go on that note, Mr. Preetham. Thank you very much for joining in and speaking with us. So that's the word coming in from Sansera Engineering. Very close to its 52-week high, which is at around 1,100 odd rupees. So that stock doing well, just about marginally higher, but very close to its 52-week high. Well, we'll take a short break. But up next, we have another management on board. We have Medi Assist Healthcare. It's a recent listing, joining in to discuss their Q4 earnings. Stay tuned.
As many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces and a lot more relevant for India, which is known for leapfrogging beyond different things as well. And on competition and of course digital commerce, he says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures. And as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about growth in the tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
In the auto sector, in our pecking order, we see two-wheelers having a higher single-digit or lower double-digit kind of growth rates, followed by PVs and followed by CVs and tractors. I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side, I think that's where you start scanning businesses from. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
On an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more than 1,000 wagons. This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. When we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY 26, then our EBITDA margin should see an improvement, and we should be targeting between 13 to 15% EBITDA margins.
One of the big lessons.
Welcome back. You're watching us here on Halftime Report. Perfect time to get you up to speed with what's taking place in the F&O end of things. Actually, just as we speak, the metal stocks, which are doing well all through the day, have now extended their rally, have moved to the high point of trade. So decent traction is what we are seeing in the metals index. And ITC reports its numbers next week is higher as well. The market's rallying, no two ways about it. I mean, we've seen an up move on the Nifty, closing in towards that 22,500 mark, marginally above the 22,450 mark. Let's see where it goes whether it manages to sustain above the resistance of 22,500 or not. The Nifty Bank doing relatively better as well, though in the last few minutes has seen a smidge of a decline. The mid-cap index continues to rally. The India VIX is the index which has also seen a bit of a decline, now below the 20 mark for the second day running. Now we've seen two red ticks on the India VIX, so that's a positive. And as that has happened, we've seen some of these risk-focused stocks back again. We have real estate stocks which were surging earlier, saw some profit taking, and now back in fashion with Oberoi Realty up, Prestige Estates up. We've seen a decent traction on names like Brigade and DLF too. Where the market goes from here is now dependent on what the Nifty Bank does, because after the surge yesterday, the Nifty crossed both the 20 and the 50-day moving average. The Nifty Bank crossed the 50-day moving average, and the 20-day moving average is about 100 points from where it is right now. So if the Nifty Bank can cross the 20-day moving average, then maybe there's case for further short covering on that index, and as a result, an up move on the Nifty as well. For the Nifty, yesterday's low of yesterday's congestion zone of 22,300 now becomes an important support zone, largely because we've seen a lot of headwinds between 22,300 and 22,330. And as that becomes a support zone, the 22,400 put writers are equally active, pocketing a premium of about 100 rupees. But on the way up, 22,550 to 22,600 could be a bit of a resistance zone, and that explains the kind of action that we're seeing in the 22,400 call. Just a couple of stocks which are doing extremely well in today's trading session, backed by a lot of long positions being added in the F&O space, are Dixon Tech and Crompton Ekta.
Okay, all right, Dixon Technologies and Crompton, so that's what's taking place. I want to point out that on a week-to-date basis, there are a couple of gainers as well. So MOIL stands out because it's gained around 20% this week. Aarti Pharma too has gained around 20% in terms of its market cap addition this week. It's down today, but nonetheless had a great week as of now. We'll take a short break, but up next, we'll get to that promised conversation with MediAssist Healthcare. Stay tuned.
In addition to what I learned from my mother and father was the guru, John Templeton. He was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. He was a very careful with money. And he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. I learned a lot from him regarding the need to be frugal and not to waste money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me. I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was a lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest holding. 14 other people found a mention on Monday evening courtesy of that hoarding. A mention in the list of the deceased. Blame games have begun, as is the case in most such tragedies. Additional Commissioner of the civic body told CNBC-TV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Another heartbreaking tragedy took place in 2017 when at least 23 people were killed and another 39 were injured in the stampede that took place on the erstwhile Elphinstone railway station, now known as Prabhadevi. The army sprung into action soon after, building.
Welcome back. Well, we do have one company which is in focus. MediAssist Healthcare is the next management that we're talking to. The profit zoomed around 61% on a year-on-year basis, and the total premium under management jumped by more than 30% to over 19,000 odd crores. To discuss this and more, we have Satish VN Gidugu, who is the Chief Executive Officer and whole-time director at the company, joining in. Satish, hi, welcome to the show. Well, let's start with the group segment market share, which was up over 200 basis points in FY24. How much does the group business contribute to the overall revenue, and what can we expect in terms of incremental market share in FY25?
Thank you so much. Thank you for having me here. So we've had a great year, both between the same store growth for what we already had, plus the acquisitions that we've concluded, allowed us to move overall our market share by almost 186 bips at the overall health insurance market level. Of course, group has been our mainstay and has grown at almost 33%, which half of it came from the same store growth and half of it came from the acquisitions. And we continue to hope to maintain our market share and the leadership in the group business.
Right. If you could give us a sense of the revenue that you got from government, because that mix has been changing, right? FY21 it was 15.5%, fell to sub 10% in FY23. Now FY24 it's a little over 11%. What are the kind of spreads that you get from the business that comes in from the government? And what's your outlook on revenue? 23 to 25% CAGR that you had guided for stays?
No, thank you for that. On government, I think we've always said that we've always evaluate the opportunities at the government to make sure that they're margin accretive and also cash accretive. And we've been relatively flat, and with the new kind of government schemes coming in, especially with Ayushman Bharat and Pradhan Mantri Jan Arogya Yojana, the quality of government schemes has substantially gone up. So there's a marginal increase in our government business size, but we are largely been around that 10 to 11% on the government side of it. And on the revenue side, I can't comment on what will happen in the future, but I think historically this is the third year where we've grown at a 25% CAGR over 3 years. So, hope to continue that momentum.
No, the reason why I ask you is because when we had spoken during your IPO, you had said that you're looking at around 23 to 25% sort of growth that you have done in the past that may sustain as things pan out in the future. So, which is why I thought I'd put that question.
Absolutely. Thank you for that. And I think we've delivered one more year of that growth. So, hope to continue that momentum.
Okay. All right. Well, we spoke about your group segment. I wanted to actually speak a little bit about your retail segment, where the market share incrementally was up, I think, only around 50 basis points. What is the share of revenue right now when it comes to retail? And again, why was, is 50 basis points in line with what the street, in line with what the company was expecting? And what are you guiding for?
So on retail, I think historically we've been a fairly group-heavy organization. And retail now we work with 14 different insurers on the retail products as well. We have about a 5% market share on the whole. We've grown 30-odd% just in the last year in retail, and added a couple of more insurers. So we continue, and retail continues to be a focus, and we continue to see that kind of growth rates on retail. We don't have a revenue split publicly available on group and retail for the simple reason that from an accounting perspective, for every single policy, these are hundreds of thousands, we recognize revenue over 1 by 365. So I think it's best to look at the premium market share and the overall revenue from a corporate retail perspective.
Right. Just from a business understanding standpoint, I wanted to know the common shaded area between members, payers, and networks is you get a spread from each of the parties here, right? So how should we look at, your revenue growing in line with the growth of claims or gross premiums increasing?
So just as a correction, within the India TPA business, we recognize revenue only from the insurers. No other stakeholder pays us anything in this business. That's also as per the regulation. Of course, that's not true for our international business where others pay us. I think for the India business, it's best to look at us from a market share of the premium serviced perspective between corporate and retail, and how we are growing our market share vis-a-vis the market gross premiums.
Okay. All right. Well, this is just a larger question. We did have the management of Krishna Institute of Medical Sciences, KIMS, on earlier in the day, and he did indicate that his average revenue per occupied bed has actually risen because of the kind of insurance payer mix, the rise in the insurance payer mix which is taking place. So I just wanted your sense in terms of the incremental or say a 5-year growth chart, just based on the fact that there will probably be much more of insurance penetration, or which hospitals are pushing for at this point in time.
So we continue to be a fairly underpenetrated country from an insurance perspective, right? And I think two ways to look at it. One, clearly our out-of-pocket expenditure as a country continues to be among the highest among our peer countries. So there is an acute need for people to buy and be insured on the health insurance side. The second thing that has happened significantly, especially since COVID, is even in the group segment and retail, the benefits have significantly expanded. People are no longer buying a 1 lakh rupee or a 2 lakh rupee sum insured. There's a significant understanding that the coverage that they need has to be far higher than they have today. So of course, which also improves the affordability, and hence it also translates to your revenue increase for the hospitals, right? But coming back to your question on how insurance should think about it, see, we've historically seen the industry grow at 20% CAGRs. Typically, half of that growth came from inflation adjustments, and half of that growth came from adding new lives and new premiums. And I think that's been a fairly standard rule of thumb over the years.
You've grown faster than that. Final question before we let you go. You're currently at sub 20% share of the gross premiums that are written. What's your target for FY25?
We hope to continue to maintain our current growth rates and grow faster than the industry.
All right. We will speak to you once the year ends, and we'll speak to you during the quarters as well to get a status check on how that pans out. Thank you for joining in. With that, we'll slip into a short break. On the other side, don't miss this conversation with Peter Bains, who's the Group CEO of Biocon, discussing their fourth quarter earnings.
Just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced, and we never heard about that incident again. Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of a few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com.
Welcome back. Well, let's put the focus on Biocon now. The company's revenue and margin were above estimates, while margins were maintained sequentially. The generic segment was impacted by pricing pressure in the API segment. I did catch up with Peter Bains, the Group CEO of Biocon, to discuss the quarter gone by. They began by asking him about the healthy sales biologics segment saw this quarter.
I mean, we're very happy, I think, with the performance of the biologics coming out of the transformational transition with the acquired business from Viatris, and it's very encouraging to see the kind of growth momentum building in the last quarter following that. And you've pointed out the highlights in the United States where, all the 3 major products, pegfilgrastim, trastuzumab, and Glargine grew market share quite substantially, and in some cases were the leading performer in their class. So we're very pleased with that. The growth momentum isn't just in the United States. The rest of the world markets had the best quarter ever, with growth around 50%. And in Europe, where we're just weeks out of the transition, we held very strong market share positions. So the underlying base business now with a fully acquired Biocon Biologics commercial engine is firing, and that's really encouraging as we look forward. Now, as we look forward, the new product flow is now on the horizon. It falls into two categories, the Aspart and bevacizumab, which, as you know, are currently still on FDA hold. But we've completed all the submissions and requirements to the agency. There are no further outstanding requirements on our part, and now we're waiting for the agency to come and inspect. Subject to those inspections, of course, we have a line of sight of product launches toward the end of this year, but the impact would only be seen in fiscal 26. And then behind that, we have product assets like ustekinumab and aflibercept, where with ustekinumab, we now have a settlement with the originators and a path to launch in January next year. And that will be amongst the first wave of biosimilars to enter the market. And that's a very substantial opportunity, 11 billion globally and 7 billion of originator sales in the United States. With aflibercept, we settled for Canada. That's a $600 million opportunity, and we're working through the settlement with the originator to get access to other markets as well. So we're encouraged by both the underlying momentum and the opportunity that exists there, and the line of sight we now have to the next wave of product launches.
Well, the opportunity from liraglutide, the approval that you've received for this GLP-1 drug in the UK, we do understand you do have a first mover advantage. Give us a sense in terms of the opportunity, considering that the market is also moving to other molecules such as semaglutide.
That's an important point, and the first thing for me to say here is that our generics group have a comprehensive pipeline of GLP peptides, so it's leading the way with liraglutide, but behind that we have semaglutide, tirzepatide, and in fact an extensive pipeline of GLPs and indeed GIPs behind that. The scale of the market opportunity is enormous. Market estimates would suggest that the GLP market will, reach and exceed 100 billion by the end of this decade. That's a very, very significant strategic opportunity. We're extremely pleased, with the first file in the UK, which was the first file of a GLP in an advanced market anywhere, positions us well in the UK. But signals our strength in technically and in our development capabilities to advance these complex drug device GLP products to market. So we're positioning ourselves not just for liraglutide, but for semaglutide and for tirzepatide and beyond.
So can you quantify or can you give us a sense in terms of when you say you're positioning for other opportunities such as semaglutide as well as tirzepatide, what do you mean by that? Can we expect any kind of filings in regulated markets in India? What is the opportunity for Biocon when it comes to these kind of molecules?
So the opportunity in dimension, I've given what the market estimates are of up to and beyond 100 billion in terms of originator sales by the end of the decade. Our position on that is that we want to be able to compete across that entire market and in all geographies. So we to submit for these molecules over the coming years.
Okay. You mentioned that GLP-1 drugs could probably start reflecting in terms of an opportunity for Biocon by FY26. Could you elaborate on that? Will we see it in the P&L?
Yes, I think all goes well. You'll see a little bit of it in fiscal 25, but the impact won't be materially seen until 26, and we'll build from there.
Will it primarily be liraglutide that you're talking about?
Yes, it will. Initially, it will be in liraglutide, and then we'll follow on in the years to come as we submit the files for sema and tirzepatide.
Okay. Debt management continues to be a priority. How much is the consolidated debt on books as of now, and the plan to reduce it on the Biocon Biologics book in FY25?
Sure. I mean, debt is clearly a management priority, and you've seen management take action in fiscal 24, allocating $250 million to acquisition-related debt reduction. We will continue that focus in 25. We consolidated debt around 1.1 billion. We will look to pare that down further, and we have a fairly wide range of options and instruments that we could elect to do that.
How is the company looking to reduce that debt? Will it be via a stake sale in Biocon Biologics or even Syngene?
Well, I mean, there's a wide range of options. There are bank and debt-related options and instruments. There are capital-related options and instruments. There are hybrid instruments. We're looking at all of them, we will look to select the appropriate instrument at the right time, but we will be looking to pare debt down.
How much stake does Serum hold in Biocon Biologics, and are they looking to probably invest more?
I can't comment on Serum's position on that, Icta. That's for Serum to comment on.
Okay, but is there any talks underway in terms of a possible increase in terms of key shareholders' stake?
No, Icta, there are no ongoing discussions there.
All right, interesting conversation there with Biocon. The stock up about 0.6%. We'll take a short break now, get you more on the markets and individual stocks on the other side. Well, how I wish this was a video interview that we had, but you take what you get with the likes of Neville Nerona, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that, he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small, tiny audiences at very low cost. And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that, the mix of DMart sales actually deteriorated largely because perhaps, there have been entries of a lot of these value retailers in the apparel space as well. To that, he said, yes, there is marginal impact and specific to a certain category such as apparel itself. And that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart is adding every year, whereas they worry about how well the stores being added are being actually managed, and that's the big dissonance. But having said that, they would like to add as many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces, and a lot more relevant for India, which is known for leapfrogging beyond different things as well. And on competition and of course digital commerce, he says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures. And as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about welcome back. A bunch of stocks doing well, but Container Corp, that's been one of the stocks of the day. It's up around 9% from the lows. And there you have some interesting commentary coming in from the company's conference call as well, which started at around noon time, just when we started the show. And that's when we saw a bit of a spike in the stock. What are the things that the management is saying in the conference call? Our team is putting it out at the bottom of your screen. They're saying that they will be able to maintain the 25% EBITDA margins for FY25 as well. No different from what the management has said to us this morning on the air. But this is for the land license fee rates that the company has been speaking about. They said that, the LLF payout in FY25 will not exceed 420 crores. This compares with 424 crores what the company had paid in the last fiscal. It may fall further if it enters into Gati Shakti for Tughlakabad. Now, why is this important? Because rates for Gati Shakti are 1.5% of the land value as against 6% of the industrial land value which the company pays right now. So if the company does go under Gati Shakti for Tughlakabad, the LLF will actually be down by about 100 to 220 crores, increasing their EBITDA directly by that much amount. And this current 6% rate of the land license fee will come down to 1.5%. That has been a big trigger in the past for the company. There has not been any clarity on that. But here's what the management says, that if it goes into Gati Shakti for a lot of these terminals that the company operates on government land, then maybe the land license fee that they pay would fall down from 6% to 1.5%, saving them a net 100 to 220 crores, and which explains why the stock has moved higher itself. But another stock which is doing well is Crompton Consumer, delivering good quarterly numbers in the fourth quarter, aided by strong revenue. The management told CNBC-TV18 today that they're guiding for double-digit revenue growth in FY25. Let's hear him out.
The new baby in our portfolio, which is Butterfly, that we recently acquired about a couple of years back. It's still in transition. It's work in progress. We are looking at corrective actions that we have to take to ensure that it pulls its weight as a brand. As we move forward, we look at the business to grow at a double digit in the long run. And in the near term, probably whatever that the correction that we need to do and take the charge on margin, etc., by and large has been completed. As we look forward to next year, we want to make this business a very strong, solid leader in the categories that we operate in. We should be able to translate those learnings into Butterfly, make Butterfly grow at a double-digit business and get it on track to about 8 to 10% EBITDA in the long run.
Okay, well, the other stock is Kaynes Technology. It's one of the big movers today, trading with gains of around 15%. This is after reporting a good fourth quarter. Upasana is here with the key highlights.
The company has reported a solid set of numbers with a revenue growth of 75% on a YoY basis. The growth was led by strong demand in industrials and EV, aerospace, outer space and railway segments. The EBITDA margin stood at 14.9% versus 16.3% on a YoY basis. And mind you, in FY24, EBITDA margin stood highest in Q4, that is at 14.9%. While the company is guiding for a 60% revenue growth in FY25, which is in line with the growth seen in FY24. And in terms of margins, the company is aiming to increase margins by more than 100 basis points in FY25. The company's order book stands at 4,105 crores with a sequential uptick of 9% on a quarter-on-quarter basis, providing strong visibility for growth for FY25. The average order inflow also of the company per month has increased from 279 crores per month to 321 crore per month sequentially. So all in all, we are seeing a strong set of numbers coming in from Kaynes Technology.
That's Kaynes Tech. Let's talk about, the FY24. With that coming to a close, we took stock of the 5-year performance of mid-sized private banks across all parameters. Abhishek joins in with the numbers that he ran through, and that put Federal Bank actually at the top of the table. And he joins in to tell us why. Abhishek.
Under the leadership of Mr. Shyam Srinivasan, over the last 5 years, Federal Bank has given the best returns to shareholders among mid-sized banks. And this comes on the back of improvement that is seen in their financial performance as well when compared with peers in the mid-cap banking space. So here's a scorecard of Federal Bank's 5 years performance. Now, Federal Bank has seen a strong business momentum over the last 5 years. Its deposit base has grown at a CAGR of 37.4% when compared to 35.2% for IndusInd Bank and 23.9% for Yes Bank. So its market share in deposits have increased from 0.88% in FY19 to 1% in FY24. A small note to the viewers, we have scored the companies based on their performance in each parameter, where 4 is the highest score and 1 is the lowest. Now moving on, the advances have grown at a CAGR of 38% when compared to 37% of IDFC Bank and Yes Bank at 18.7%. So advances market share has increased from 1.38% in FY19 to 1.5% in FY24. In terms of asset quality improvement, Federal Bank's gross NPA ratio decline has been the second best to Yes Bank amongst the peers. Gross NPA ratio of Federal Bank has reduced from 2.9% in FY19 to 2.1% in FY24. Now, healthy business growth and improvement in asset quality has enabled the bank to post the best profit growth amongst peers. IDFC Bank started its banking journey in FY19, which was a net loss year for them, hence they are not comparable. Under Mr. Shyam, in last 5 years, Federal Bank has grown its retail plus agri book at a massive CAGR of over 44%. The loan mix has seen changes from being a corporate lender to more of retail loans. So retail plus agri loan has increased its share in the loan mix to 45.6% in FY24 from 39.2% that they had in FY19. Now, corporate's book share has declined from 43.2% in FY19 to 35.15% in FY24. Now, shareholders have seen handsome gains on their holdings as well. If you compare mid-sized private banks, Federal Bank has given the best return over the last 5 years. But if you do a peer comparison with all private banks, ICICI Bank has given the highest return. Federal Bank has given the second best return. A simple aggregation of the scores makes equal weight to each parameter. If you take a look, clearly places Federal Bank as the best performer over the last 5 years amongst mid-sized private banks.
Okay, important information there. Well, thanks Abhishek for that. We'll take a short break. Manisha Gupta joins in next on our commodity segment.
Tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
In the auto sector, in our pecking order, we see two-wheelers having a higher single-digit or lower double-digit kind of growth rates, followed by PVs and followed by CVs and tractors. I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side, I think that's where you start scanning businesses from. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
On an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more than 1,000 wagons. This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. When we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY26, then our EBITDA margin should see an improvement, and we should be targeting between 13 to 15% EBITDA margins.
One of the big lessons I learned, in addition to what I learned from my mother and father, was the guru, John Templeton. He was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. He was a very careful with money, and he was a billionaire. I mean, in fact, he now after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. I learned a lot from him regarding the need to be frugal and not to.
Welcome back, and joining us on the show now is Uwe Wong. He is Manager, Asia Oil Analytics at S&P Global Commodities Insights. Mr. Wong, hi, thank you so much for joining us. First of all, the crude oil prices seem to be taking in a lot of support from geopolitical tensions and then potential disruptions which are impacting crude, whether it has to do about inventories or supplies or even the Atlantic hurricane season, which is just about 2 weeks later now.
Thank you, Manisha, for having me. Regarding the geopolitical tensions, indeed, it's causing a lot of the volatility of the oil prices in the past few weeks. But for now, we do not remains uncertain regarding the potential disruptions of the supply because the geopolitical tensions. But indeed, there are a lot of wild cards now in the market. Starting actually from the 1st of May, we already see the Israel and Iran tensions, not to mention the Red Sea tensions, started to already play a role in terms of the price volatility starting from the beginning of this year. But overall, we think that we need to watch out for the geopolitical tensions in the upcoming weeks. Remains very uncertain, but we need to watch out for the potential escalations of those conflicts.
What also are you looking forward to in sense of the OPEC meeting in the first week of June, and also the output cuts, the world demand, the kind of reports that we've seen come in this week itself from OPEC and the IEA?
For the OPEC Plus, indeed, right? So our S&P Global Commodity Insights view is regarding the upcoming June the 1st meetings will be very important and will determine the production quotas as well as the voluntary cut. For now, we think that OPEC Plus will continue to embrace the restraint principles, and that means the outcome of June 1st meetings will highly likely to be extending the quota as well as to extend the voluntary cut. So that is our house view for now.
All right. Well, that's something that the market seems to be anticipating as well overall. But what's your sense on the crude oil prices now for this quarter and demand and the summer driving season? Do you see that in sense also supporting prices going forward?
For the prices, I think we talk about prices, right? So it's not only about the quota, but it's also regarding with the supply and demand balances. I think starting from the demand side right now, we actually are standing at the beginning of the summer drive seasons. And that means from the seasonal patterns, we will see some ride of the demand drive ups from now until the end of third quarters, which will be kind of bullish for the oil prices. And on the supply side, right, we will also see some emerging trend. Actually, we already see an emerging trend starting from last year. That is the non-OPEC plus productions growth is already higher and will likely be higher than that of total demand growth of the oil liquids. So that actually has been, putting down a lot of pressure and also the responsibility of the rebalancing upon the shoulders of the OPEC plus. But at the end of the day, right, when we talk about prices, it's also related with the inventories. So based on our supply-demand balances, now we are forecasting that starting from May throughout the July or the August, the global oil inventories will likely be gradually drawing down, and that will be providing some upside pressure and upsides for the oil prices in the upcoming month.
Mr. Wong, I'm still going to push you for that number then. So with all what you said in sense of fundamentals, are we looking at a $90 a barrel coming back in this quarter for the Brent prices?
We are looking at, I should say that our house view is that the oil prices will be going higher than the current level. And it will be range bounding between the 85 to 94 US dollar barrel in the upcoming month.
Another important point when we look at commodities clearly comes in from China. I mean, we've seen a $1 trillion yuan bond issuance there. And then, of course, there is Chinese data, which seems to be uneven at best. But even then, there are more positive cues now coming in. What's your sense on Chinese demand and the crude price impact?
I think there's a lot of mixed messages and pictures about China's oil demand. On a positive note, for now, we actually are seeing more determined stimulus packages announced by the central government and actually will be translating into more push into the infrastructure, and therefore will be translating into more the demand in the transportation sector as well as the industrial sectors. However, at the same time, right, we're seeing that, for example, the real estate sector are still struggling with the high debt levels. And this not to mention that we're also seeing some potential structural changes in China's oil demand. That is the energy transition impact to the oil demand in the transportation sectors. One of the very most important examples, I think, is about electric vehicle penetrations in China, which is very severe now. I think will be posing more downward pressure upon the gasoline demand in China in the upcoming years.
Well, that could be the cue coming in from China. But when you look at towards India, what is the kind of demand growth that you're seeing there? I get your point when you say that there are elections in many countries this year, and that is something that would keep the crude oil prices perhaps slightly under pressure. But when it comes to the GDP numbers, when it comes to demand for this year and the next as well, what is your house view?
For the overall India demand as well as for the economy shape, we still think India's economy will still remain very healthy. We are forecasting the total GDP growth for India during the fiscal year 24-25 will be still around 5.1%, and it will be still at around 5% next year. And in terms of oil demand growth, we are also seeing similar trend. That is, the total oil demand growth in India will still be very resilient this year as well for next year. So in terms of percentage-wise, we think that oil demand will still be growing at more than 4% this year as well as for next year.
Okay, all right, Manisha, thanks very much for taking us through that conversation. Well, that's on the entire commodity space. Well, we need to, in fact, just focus a little more on the markets, because that seems to be picking up pace, at least for the mid-caps, up around 0.7%. If you talk about stock-specific action, it is M&M all the way, which deserves mention, considering that it's gained 15% on a week-to-date basis. It's at a record high. It's really been a week about that auto stock. That stock has just gone from strength to strength, now over 2,500 odd rupees. The other one which is really garnering attention is Adani Enterprises. That one too has gained around 9% on a week-to-date basis. It's just about marginally higher today. Well, it's a wrap on Halftime Report. Business Lunch up next. Stay tuned.
It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me. I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was a lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest holding. 14 other people found a mention on Monday evening courtesy of that hoarding. A mention in the list of the deceased. Blame games have begun, as is the case in most such tragedies. Additional Commissioner of the Civic Body told CNBC-TV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Another heartbreaking tragedy took place in 2017 when at least 23 people were killed and another 39 were injured in the stampede that took place on the erstwhile Elphinstone railway station, now known as Prabhadevi. The army sprung into action soon after, building a new bridge just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced and we never heard about that incident again. Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of a few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
What does it take to build India's largest startup platform? It takes a journey of Stocks continue to climb, riding on some strong earnings. Realty and auto are the big gainers, even as IT and healthcare trade soft. Rajesh Jujurikar, the Executive Director and CEO of M&M's key automotive business, tells CNBC-TV18 that exciting new products will be the big drivers of growth. He expects mid to high teens growth in SUVs in FY25, along with a recovery in tractor sales in the second half of the year. The stock surges. And Crompton jumps after it gets back on the growth track and guides for stronger growth ahead. Kane's Technology leaps on a strong showing and an equally strong sales and profit guidance, while Endurance Tech spikes on a sharp rise in profits and orders. And Finance Minister Nirmala Sitharaman at the CII Annual Summit says she's looking into what can be done in the budget, even as she calls out India's twin balance sheet advantage and its demographic edge, while nudging the private sector to push forward on manufacturing. Good afternoon. Welcome to Business Lunch. I'm Sonia Shenoy, and the market is doing very, very well as we speak. In fact, no problems at all, no complaints either way. The bulls have it this afternoon, and it's almost a 200-point rally that we're seeing on the index right now. The good part, almost a 60-point rally rather on the Nifty, and on the Sensex, if we just pull it up, there is steady state move that we're seeing on the index as we speak. Now, remember, we are building on to our gains that we've seen over the last couple of days, and the good part is that the market, at least the Nifty Bank, is holding with gains of around 0.5% or so, and lots of PSU names are the big movers in trade. MOIL, as you just saw, is up almost about 16% as we speak. Crompton is up about 15.5%. Dixon Tech is really the big mover. And yesterday, when we had a chance to speak to the management of Dixon Tech, they told us that the mobile phone business is something that's really surging for them, and they have big investments going over there. So Dixon Tech up almost about 9%. Of course, M&M is your other big mover as well. We'll talk about that in greater detail. But for now, there's nothing stopping this market. It's steady state for now, holding on to gains of around 0.5% for key indices. But let's begin Business Lunch by focusing on the big stock this afternoon, which is M&M. It's the top Nifty gainer after reporting strong fourth quarter earnings and the subsequent positive commentary from brokerages. My colleague Sudarshan has put together the numbers and the commentary. Sudarshan, over to you.
So good part is that after opening with healthy gains, M&M has managed to hold on to those gains of more than 6%. This comes after company has posted strong earnings, even guidance is healthy. Now talking a bit more about the stock, it's currently at record high and is up 45% this year, and market cap of the company has almost doubled in last 1 year. And talking about the guidance, FY25-26 SUV exit capacity is seen at 64 to 72,000 per month, and by 2030, companies plan to bring 7 new battery electric vehicles and 9 ICE SUVs. And FY25 tractor industry guidance is at 5% as per the company. On the brokerage views, GS has a buy rating with a target of Rs 2,700 per share. It says core auto, farm revenue and EBITDA have come in 5 to 9% higher than estimates. And going forward, catalyst will be XUV 3XO, Thar 5-door and recovery in the tractor segment. Jefferies has upgraded the stock to buy and target is increased to 2,910 per share. It says tractor industry is now in the late downturn and SUV portfolio continues to strengthen. And Q4 EBITDA has come in 13% higher than Jefferies estimates. And following all this, Jefferies has upgraded FY25-26 EPS estimates by 16 to 21%, and it believes core FY25 PE is at 23 times, which is still 20% below blended peer average. MS has an overweight call and it has increased the target to 2,665 per share. It expects company to remain fastest growing PV OEM in FY25, and as per MS, re-rating potential is for auto business and farm business sentiment continues to improve. Last is CLSA, which has downgraded the stock to sell, but target is increased to 2,312 per share, and the reason of downgrade is the recent run that stock has seen.
Okay, thanks a lot for that. So big moves coming into M&M this afternoon. The auto segment performance was very strong for the company. The SUV segment market share has been moving up as well, but the tractor segment was under pressure. In fact, the management spoke about the loss of market share over there, but they did sound confident of a turnaround in the tractor segment in FY25 as well. Is the worst over? Let's find out. Listen in to some excerpts of that conversation.
Firstly, the SUV growth expectations we've put out for F25 is mid to high teens. That's on the back of what we believe has been a good 3XO launch and also a new Thar which will come later in the year. So we do have 2 new products which will help us get to mid to high teens. So we think this will be a much higher growth than what the industry will have in the year F25. We would aim to gain market share. In fact, in April, the tractor market share gained significantly and was at a level of over 46%. We expect the second half to start picking up growth momentum. So you did talk about elections. We don't think elections fundamentally disrupts demand. It's just aberration and there's a deferment. We have improved our EBIT margins significantly over the last few quarters, and the tractor EBIT margin continues to be strong in spite of a volume downturn. We would keep the balance right between growing margins and keeping demand, market share, and volumes intact, and that's really, what we would aspire to do.
Okay, that's M&M, the big mover today. The other stock in focus is Crompton. It surged after delivering its Q4 earnings that were pretty much in line with street estimates, aided by a strong revenue. The stock is now up almost 16%, and the management told CNBC-TV18 that they are guiding for double-digit revenue growth for FY25. Listen in.
The new baby in our portfolio, which is Butterfly, that we recently acquired about a couple of years back, it's still in transition. It's work in progress. We are looking at corrective actions that we have to take to ensure that it pulls its weight as a brand. As we move forward, we look at the business to grow at a double digit in the long run. And in the near term, probably whatever that the correction that we need to do and take the charge on margin, etc., by and large has been completed. As we look forward to next year, we want to make this business a very strong, solid leader in the categories that we operate in. We should be able to translate those learnings into Butterfly, make Butterfly grow at a double-digit business and get it on track to about 8 to 10% EBITDA in the long run. B2B is delivering strong growth. We expect B2C also to follow, and margins would remain strong as we have seen already in FY24. The idea was start with a double-digit revenue growth. We have achieved that in FY24 after many quarters and years. We expect that to continue and expand the revenue growth as we are looking at FY25. The summer has started positive. Let us see how does that move forward. So as far as margins are concerned, we called out that we would be focusing on absolute profits and ensure that the absolute profit growth is more than the revenue growth. This in the long run will help us to expand the EPS and create value for all stakeholders.
Okay, well, let's move on to some macro issues now. Speaking at the annual CII Business Summit, Finance Minister Nirmala Sitharaman was confident of the BJP's returning to power for the next term and eyed more engagements with business leaders ahead of the July budget. She also highlighted the importance of increasing manufacturing in India. Take a look.
We look forward to a more pointed engagement with the CII to see what best can be done in the July budget, which will be the full year's budget, because what happened on 1st February, as you all know, was a vote on account. It just takes care of the expenditure for the first quarter till such a time the new budget is presented. And for the new budget, therefore, a lot of consultation can begin with the CII team as well. So I'll lay before you some fundamental indicators which you can use for co-creating the future responsibly, not just for India, for also for your partners elsewhere. I also want to underline, much against the advice given by some economists that India should no longer be looking at manufacturing or ramping up manufacturing, I like to highlight the fact that manufacturing must increase. India must also increase, with the help of policies, its share in manufacturing in global value chains. So we need to have greater sophistication in our product manufacturing. We also need to see how best this can be given policy support.
Okay, that's the finance minister talking about India increasing its share in the manufacturing pie globally and getting a larger seat at the table, which is happening, by the way, with a lot of companies. That's what you get to hear in this quarter's earnings as well. But moving on, Niti Aayog CEO BVR Subramaniam argued that agriculture needs a whole range of intervention for India to emerge as a global agricultural power. Speaking at the CII summit, he also emphasized the need for the country to get into global value chains. Listen in.
Agriculture has to be focused on, pushed through so that it reaches the next level. That's the very important part of the economy because it sustains, in a way in India, it is the sink which absorbs a huge part of the population which is not in other sectors. So I think agriculture requires a whole range of interventions so that actually India becomes a global agricultural power. We can become the food basket of the world. There is no doubt about it. The question is, how do you take it there? And there are a whole set of things to be done. We need to get into global value chains. And to get into global value chains means a fundamental change in a lot of things. It means low tariffs. It means low procedures. It means no protectionism. Because if people want to be part of global value, if I have a phone in my pocket, this is probably, every part in this phone is probably gone through about 30 countries before this phone is made. I mean, this is not going to happen if you're going to have border issues in terms of tariffs, in terms of paperwork, etc. We are not a part of the global value chain in electronics. We are not a part of the global value chain in automobiles. We are not a part of the global value chain in a whole host of other areas. We look back and we get very happy about our performance. But if you look left and right, you see our performance can be much better. That's it. We think auto components is a great story in India. We account for 2% of the global trade in auto components. 2%. That just tells you, let's not be proud. There is a lot to do. You probably won an Asian Games medal. Winning an Olympic medal requires a lot. And I think a lot needs to be done by the government on the GVCs. I think a lot of things are being thought through. How do you, make life easier for GVCs to function, for industry to set up factories in India, to trade, to move stuff in and out. And I think that's there. And I think scale also matters there. That brings to the third sector of the economy, which is services. I think we have an advantage in services largely because of our manpower, also because of our good education system at particularly the higher levels. And we are punching far above our weight in services globally.
Okay, well, let's slip into a quick break on that note. When we come back, we'll take a deep dive into the telecom spectrum auctions that begin on the 6th of June. Stay with us. An unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Welcome back. You're watching Business Lunch on CNBC-TV18. It's not a bad day for the market at all. In fact, we're building on to our gains a little bit. So the Sensex is now up about 0.3%. It's not a big move, but at least there is stability in the market, something that this market has been devoid of in the last couple of weeks and months. But the telecom spectrum auctions are to begin on the 6th of June. And yesterday, the Department of Telecommunications released the earnest money deposited by telcos. What does this signal? Reema is standing by with the details. Reema, over to you.
Thanks so much for that. So in a nutshell, the 2024 telecom auctions are likely to be a subdued affair. 2022, the last ones, that was the big one when the government had put on offer 5G spectrum for the first time. But now, most of the 5G rollout is already done for the likes of Jio and Bharti Airtel, and Vodafone Idea is still emerging after recently getting recapitalized. So analysts are broadly not expecting big bucks to be spent this time. Maybe the auctions, the spectrum bidding will take place where the spectrum is expiring. So now what's new? What took place yesterday? Well, yesterday, the DOT, the Department of Telecommunication, released the earnest money deposited by the telcos. And this is how the numbers stack. Reliance Jio is the most at 3,000 crore rupees. Bharti comes second at 1,050 crore, followed by Vodafone Idea with a modest 300 crore rupees. Now, how does this work? 1 rupee of earnest money deposited allows the telcos to approximately bid for 11 to 12 rupees of spectrum, which means if you multiply 12 by the EMD, this is the maximum amount that telcos will be able to bid for. Reliance Jio again tops the most. They can bid for spectrum valued at close to 36,000 crore rupees maximum. Bharti Airtel at 12,600 crore and Vodafone Idea at 3,600 crore. Now let's get to what it means for individual telcos. Now, as I said, Reliance Jio has put in the most, EMD at 3,000 crore rupees, which means it can bid for spectrum up to 36,000 crore rupees. You know, this number comes in as a bit of a surprise because Reliance Jio has no spectrum coming up for renewal all the way till 2030. And the last time, Reliance Jio had already spent a whopping 88,000 crore rupees. So why have they put in such a high EMD? How much are they planning to bid? That remains to be seen. But one caveat is that Jio has always put in the most in terms of EMD, and it doesn't necessarily translate into very, very big spends. Now, moving on to Bharti. Now, Bharti has some spectrum expiring. If it looks to renew it, then at the reserve price, it will have to spend close to about 3,800 crore. But the question which analysts are going to be watching is, will they look to boost their sub-gigahertz spectrum, basically by buying 800 or 900 megahertz, because that's where Reliance Jio has an advantage over Bharti Airtel. Now, Kotak on the whole estimates Bharti to spend about 8,800 crore rupees. And finally, for Vodafone Idea, expect limited participation. In fact, the company had 12 megahertz of spectrum, which is coming up for renewal, and they've already surrendered about 3 megahertz. So approximately, analysts are saying that maybe Vodafone Idea will spend about 1,000 to 2,000 crore of bidding. Just purely based on demand and supply, there is no reason for bidding wars to take place in this spectrum auction. The industry is just emerging from tough price wars, and now the street is hoping that the focus of the industry shifts away from subscriber market share grab to monetization and improving the return ratios. But this high EMD, the earnest money which has been deposited by Reliance Jio, when it doesn't have any immediate need for spectrum, has again put analysts in a bit of a tizzy, and it's raising the prospects that one of the players will become aggressive, making this auction also a very interesting one.
Okay, thanks a lot, Reema, for putting that into perspective for us. Let's take a short break now, but when we return, the Deputy Chief Minister of Bihar has promised to make Bihar the best state in the next 5 years. We get you more excerpts from his conversation with CNBC-TV18 on the other side.
At exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Well, how I wish this was a video interview that we had, but you take what you get with the likes of Neville Nerona, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small tiny audiences at
Welcome back to Business Lunch on CNBC TV18. Well, Bihar is one of the most important states in the Hindi heartland from an election perspective. And as we enter the latter phase of this year's Lok Sabha elections, our colleague Santya caught up with the Deputy Chief Minister Samrat Chaudhary. She spoke to him on a host of issues, including unemployment, the Agniveer scheme and the jobs guarantee. Listen in.
लालू जी 1990 से 2005 तक सरकार में रहे, 1 लाख लोगों को भी नौकरी नहीं दिया, सरकारी नौकरी। नीतीश कुमार जी जब आए 2005 में, तो 2005 से 2020 तक उन्होंने 7.5 लाख लोगों को दी। और 2020 में हमारा कमिटमेंट है, 2025 के जाने के पहले, चुनाव के पहले, हम 10 लाख सरकारी नौकरी देंगे और 94 लाख परिवार को सीधे उद्योग लगाने के लिए 2 लाख रुपए तक की राशि हम देने जा रहे हैं। और अभी तक लगभग लाखों बच्चों को बिहार में उद्योग लगाने के लिए 10 लाख रुपए का लोन हम लोग उपलब्ध कर रहे हैं, जिसमें 5 लाख हम सब्सिडी दे रहे हैं और 5 लाख ही उनको मात्र 3 से 4% के इंटरेस्ट पर उपलब्ध। बिजनेस खड़ा करना, क्योंकि आप ठीक कह रही हैं, जिस तरह के अराजकता लालू जी ने फैला दिया था, कोई बिजनेसमैन बिहार नहीं आना चाहता था, कोई बिहार में काम करना नहीं चाहता। अभी हम लोगों ने 14 जो हमारे यहाँ गन्ना आधारित उद्योग थे, जो चीनी मिल्स थे, उसमें हम लोगों ने 9 में इथेनॉल प्लांट शुरू कर दिया, 5 में प्रोसेस चल रहे हैं। अगले 5 वर्षों में आपको बिहार वन ऑफ द बेस्ट स्टेट देश का होगा।
रोजगार की बात थी, अग्निवीर को लेकर के बिहार के युवाओं में बहुत रोष है, अब भी है। 2022 में बिहार में अलग अलग जगह बहुत ज्यादा प्रोटेस्ट, विरोध प्रदर्शन वगैरह भी हुए थे। ठगा सा महसूस कर रहे हैं युवा अपने आप को अग्निवीर के चलते, जो कि हम देख रहे हैं, वो बात कर रहे हैं। मेरा मिलना हुआ है कई सारे युवाओं से।
तो उसमें राजनाथ जी ने बहुत स्पष्ट कर दिया कि इस पर यदि पुनर्विचार की जरूरत होगी तो होगा, इसमें कौन बड़ा बात है।
तो आप अश्योर कर रहे हैं देश के युवाओं को?
देश के रक्षा मंत्री ने कहा तो इसके बाद तो कुछ बचता नहीं है। देश के रक्षा मंत्री ने कहा कि यदि युवाओं को ऐसा लगेगा तो जरूर विचार किया जाएगा।
नीतीश कुमार ही साथ रहेंगे अब या फिर अगला कब फेरबदल कब हो जाएगा?
2025 के चुनाव होंगे तो आपको नाम भी बता दूंगा।
नहीं, लेकिन क्योंकि नीतीश कुमार जी सिर्फ 15 के बाद की बात करें तो 4 बार तो अलट फेर हो चुकी है, खेमे बदले जा चुके हैं।
देखिए, कुछ समय और वक्त का निजादत होता है, चलते रहता है, राजनीति है, पार्ट ऑफ ए पॉलिटिक्स है, लेकिन बिहार के विकास के लिए सब एक होते हैं।
और भाजपा रीजनल पार्टीज को कम करके उनके
आज तक तो इतिहास में कोई ऐसा नहीं होगा जिसको हमने तोड़कर अपने पार्टी में मिला लिया।
सर, शिवसेना महाराष्ट्र से आती है,
नहीं मिला। आप तो दीदी बताओ, वो तो अलग इंडिविजुअल पार्टी है दीदी।
आप ही ने कहा कि जिसको
वही तो मैं कह रहा हूँ। अरे भाई, शिवसेना, बाल ठाकरे जी ने कहा था कि यदि हिंदुत्व को छोड़ देंगे तो इससे अच्छा पार्टी का दुकान बंद कर देंगे। वहाँ 2 पार्टी हो, वहाँ 2 पार्टी हो,
तोड़ के भाजपा में शामिल
कहाँ किया?
सर, भाजपा देखिए एक
शिवसेना का विलय नहीं कराया दीदी। ये हमने कहा कि आपस की लड़ाई 2 पार्ट हुआ, उनकी पार्टी वो नहीं बचा पाए तो हम क्या करें?
Okay, well, that's all the time we have on Business Lunch this afternoon. But don't go anywhere. Midcap Radar takes up all the action ahead. Stay tuned.
And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that, the mix of DMart sales actually deteriorated largely because perhaps, there have been entries of a lot of these value retailers in the apparel space as well. To that he said, yes, there is marginal impact and specific to a certain category such as apparel itself. And that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart is adding every year, whereas they worry about how well the stores being added are being actually managed, and that's the big dissonance. But having said that, they would like to add as many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces and a lot more relevant for India, which is known for leapfrogging beyond different things as well. And on competition and of course digital commerce, he says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures. And as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about growth in the tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
In the auto sector, in our pecking order, we see two-wheelers having a higher single-digit or lower double-digit kind of growth rates, followed by PVs and followed by CVs and tractors. I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side, I think that's where you start scanning businesses from. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
On an average, we did 900 wagons in the last quarter. We did 2,700 wagons, of course.
Good afternoon. You're watching us here on Midcap Radar. Is the midcaps which have a lot of fire in today's trading session, up nearly 400 points for that index. And we have the frontline indices doing pretty well as well, closing in towards that 22,500 mark for the Nifty. I'm Mangalam Malu, with me Vivek. Hi Vivek.
Good afternoon, Mangalam. It's a good session, especially as far as the mid-cap is concerned. In fact, post 2:30 p.m. yesterday, we've been doing quite well. But lots lined up on the show. We have management, a lot of stock-specific action as well. So let's start with the headlines. Crompton Greaves surges in trade after delivering a strong set of Q4 results that were in line with the street estimates, aided by strong revenue growth. Management guides for double-digit revenue growth for FY25. The stock is up more than 15%.
Keynes Tech rallies over 16% on the back of its fourth quarter numbers. Revenue climbs 75% year on year. The company guides for 60% growth in FY25 as well. Info Edge surges over 6% for the second straight day. After upbeat brokerage commentary, Nomura issues a buy call with a target price of 67.50 rupees a share. Says they see strong billing growth across all segments. Endurance Tech also gains over 8% on the back of strong fourth quarter earnings. Revenue and net profit rise 20% and 54% respectively. The total orders also surged by 28%. Right, so you're watching us here on Midcap Radar. As we pointed out earlier, the Midcap Index, which is doing a lot better. A lot of the Midcap stocks are actually now moving towards the high point of today's trading session. And a bunch of them include the likes of NMDC, NBCC and Shree Cement. All of them have spiked just a little more in the last 15 minutes or so and have moved higher. Astral too, from the frontline space, is doing well. The frontline F&O space, that is, I'm talking about. And in the Nifty, we have Asian Paints that has picked some pace. So just pull up the intraday chart of Asian Paints and you'd see that that stock was in the red for most part of today's trading session and now has moved to the high point of trade. But it's the mid-caps that we're talking about, mid-cap movers. Well, we have Nigel today to talk us through all the mid-caps that are moving and shaking. Nigel.
Well, let's start off with some result reactions. Keynes is flying away in today's trading session. From the word go, it's moved up and in fact is still holding with solid gains. So good results out there. Crompton, just take a look at the way that stock is building on. They're saying that Butterfly, well, it'll break even this year and margins will gradually scale up. So that one as well has been building on to gains all through the trading session, up 16%. Alicon Castor Loy, that auto ancillary stock, well, the numbers are very good. Margins came in at around 14% and solid revenue growth. So that one as well is up and about. A few more volume buzzers. You have MOIL and ISMT. Remember, ISMT numbers are a little bit disappointing, but the stock is moving on very, very large volumes, up close to around 20%. And all cargo terminals as well as up close to around 10% as we speak. Let's stick with the gainers then and pull up a few more stocks. Dixon Technologies, the numbers look good. A couple of brokerages are quite positive. And when they spoke to us here on CNBC-TV18 as well, they sounded quite optimistic. BML Land, well, that's a stock that's moved up and about. It's up close to around 10%. And Endurance is still holding in the green, but from the highs of the day, that stock has come off. Let's wind this down with a few losers, though. Nava Limited came out with a set of numbers. They look a little bit disappointing. That explains why the stock is down close to around 6.5%. Sangvi Movers as well is down close to around 8%. And Aadhar Housing Finance, well, that stock is down close to around 4%. Back to you guys.
Nigel, thank you so much for giving us all the list of stocks which are moving and buzzing around right now. As we speak, a decent traction in a couple of these defense names continue from yesterday afternoon itself. Ever since HAL reported their numbers, the stock moved higher. But now we have Mazagon Dock as well, which is up 11% as we speak. Hindustan Aeronautics taking a bit of a breather today, but Mazagon Dock is up around 11%, giving it company Garden Reach Shipbuilders. Also an up move that we're seeing on Solar Industries, up around 8%. But the one that's literally smoking hot is Godfrey Phillips, up nearly 9%. It's a 17% mover this month. And in this week itself, it's gained about 16 odd percent, with a gain of 85% in the year of 2024 itself. A record high for Godfrey Phillips. So good time to get in Hemen Kapadia of KR Choksi Securities for a quick technical check on the market. Hemen, we saw a big up move in the market yesterday that continues. In fact, as soon as your face popped on the screen, we saw 22,500 on the Nifty as well. So looking pretty good, almost a century in today's trading session. Do you think this extends, or maybe 22,500 to 22,600 faces some sort of congestion?
Well, yes and no. Looks like continuing, but like you said, Nigel, very good afternoon. There is some congestion over there. That's it. The technical situation, which was precarious in the near term, has been rescued, and we've seen almost parity being restored. The VIX, which was 21 plus, is slowly coming below 20. I don't think till the results are out, we'll see it go significantly below 18. Even if 18 comes, I think that would be some sort of a respite for bulls. The setup is decent. Many of the mid caps, not many, the mid cap 250 select has posted a fresh all-time high. Auto posted a fresh all-time high index. So frankly speaking, it's like a lot of sector specific, and if mid caps are moving, I think the market breadth is positive. So frankly speaking, one would be more positive than negative, and yes, but we need 22,769 has been a major bugbear. We need to take that out. That doesn't look like happening in a jiffy, but it does. We're going straight to 23,300 Mangalam. So everything is fine, but we need that final push. That needs to come from only two places: Reliance Industries, which is frankly speaking, a sector in itself, and the Bank Nifty. So these two behemoths need to move, and then we see that final thrust past 23, which we've all been waiting for.
Good afternoon, Hemen. So Reliance as well as Bank Nifty is what you expect would propel the markets higher. But in terms of individual stocks, which are the ones that are on your radar, what is it that you're recommending today?
IT, Vivek. IT has been down for 4 months, deeply oversold. Downside appears limited. There's positive divergence, base formation being made. As of now, we're playing for a recovery. Too early to label it a rally, despite the Nasdaq posting a fresh all-time high, Vivek. So bounce on IT coming in across the sector. So firstly, a buy call on Infosys. Infosys is around 1445. One would say a buy at 5 rupees lower at 1440. Stop loss of 1400, target 1520. It's seen a 4-week sideways movement. Indicators are turning positive, have given a crossover buy. It looks set to post a higher top, higher bottom. Simply put, Infosys looks good for a trading buy. Secondly, I would go for Reliance. Reliance has the daily MACD has just given a buy today, Vivek. We've seen a 14-week consolidation, and 2780 has held. So right now it's in a bounce. I believe this should convert into a rally. But yes, buy on Reliance at around 2860. Stop loss of 2810. Target of 2960. Higher top, higher bottom is being made. Indicators have turned positive. stock looks good. And after 14 weeks of a consolidation, I think Reliance could just be setting the stage for a takeoff. But yeah, that looks like happening. Vivek.
All right, interesting there. Hemant, thank you so much for joining in. Buy on Infosys as well as Reliance. Though, just keep an eye out on the markets once again. While we were speaking to Hemant, while the Nifty did hit the 22,500 mark, swiftly went below once again as well. So now, currently as we speak, it's been led lower by a couple of these IT names. TCS has moved to the low point of trade. And alongside that, we have Wipro 2, which has moved to the low point of trade. So just keep an eye out on that. Take a short break. Come back. We'll be joined by the management of Pokarna Engineering Stone to discuss the quarter gone by, but more importantly, the year ahead.
More than 1,000 wagons. This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. When we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with the propulsion, which should happen in FY 26, then our EBITDA margin should see an improvement, and we should be targeting between 13 to 15% EBITDA margins.
One of the big lessons I learned, in addition to what I learned from my mother and father, was the guru, John Templeton. He was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. He was a very careful with money, and he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. I learned a lot from him regarding the need to be frugal and not to waste money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me. I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was a lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest holding.
Welcome back to Midcap Radar. The Midcap Index continues to outperform. One specific stock, that reported a good set of results and has seen a couple of brokerage upgrades has been Crompton Greaves Consumer. Look at the stock. The stock is up over 16% in the trading session and has seen further upside, in the last half hour or so. But let's now put the focus on Pokarna. The granite major reported a muted set of Q4 numbers, and even FY24 was quite muted for the company. EBITDA margin and PAT came under pressure, but the commentary for FY25 is quite encouraging. To discuss this and more, we have Paras Kumar Jain, the CEO of Pokarna Engineering Stone, which is a subsidiary of the company, with us. Good afternoon, Paras. How are you doing? The first question for you is FY24 seems to have been a difficult year for the company. You've also gone ahead and hived off one particular segment of your business. So give us a quick highlight of how FY24 panned out, and why did you decide to do away with that particular segment?
Thank you for having me on the show. So for FY24, if you look at our numbers, on the revenue side, we did 688 crores versus 725 crores of the last year. However, the EBITDA margin actually on a full year basis increased 22% from 181 crores to 221 crores. Similarly, our PAT margins also actually increased from 66 crores to 87 crores, which is about 33% jump. Primarily, our market for engineered stone products is America. In America, due to the economic headwinds and the related demand conditions, the markets in last 3 quarters have been relatively subdued for us. But for FY25, we see the markets to be very optimistic and promising. And in line with our strategy of introducing new design and innovation-driven products, we feel that FY25 would be more promising than FY24. Now, coming to your other question on the apparel division of Pokarna Limited, which was hived off. So March 24, board took a decision to discontinue the operation of this business because we feel that our current energies and the way we are currently organized, our energies are more focused on our stone side of business, which is granite and engineered stone. So we decided to actually discontinue the operations of apparel division.
So two-part question here on that. Paras, you said that you are optimistic about FY25. So let's put that optimism into numbers. What's the kind of revenue growth that you target in FY25? You've done margins of almost 30% in FY24. Does that sustain? The second part, since you spoke about the apparel division, are you going to sell it off? What are the assets there? What is the monetizable value of, the business that you've discontinued?
So we believe that the margins, what we have reported on the consolidated basis for the year, will definitely improve over those margins. In our quartz business, our guidance has been that we'll always maintain an EBITDA of 30 to 35%. And we think that we'll be able to maintain that as well going forward. So we expect that the revenues also will grow in line with that. May not necessarily be 30%, but definitely the focus currently is on the bottom line. So we expect the bottom line to be stronger than what we have reported in the last financial year. So the apparel business, typically, we have largely is land and building. So we are looking at how we can redeploy those assets for our other businesses. And the current assets are relatively less there. So we are not really too much into the current assets there, because over a period of time, we have been scaling down the business and brought it to a level that we can actually close it down in a very smooth way.
So there is no monetizable value from that, and also no debt that goes away or anything of that sort, right?
So actually, apparel division is almost debt-free at this time. So we don't have much challenges out on the debt side for the apparel business as well.
Okay. Paras, now let's come to the export market. What we understand is, please correct us if we are wrong, almost 90% of your exports are going to the US market. While you have said that, you expect FY25 to be slightly better, you've also mentioned that, you expect demand headwinds across the US market still. So FY25, in terms of export revenue, what will be the contribution of US? Do you expect it to grow this year? And which are the other countries that come into the picture FY25 onwards?
So US has been traditionally our primary market. Over 90% of product goes to US. And we believe that US will continue to be one of the largest markets for FY25 as well. We've made inroads into certain markets like Canada, Mexico, France, Russia. And we believe that these markets like last year also have performed better. And we expect that as the markets, the full cycle of marketing and product establishment happens in those markets, our contribution from the new geographies will also increase, while the America will continue to be our prominent and important market.
So you're talking about two new technologies, Creos and Chromia. Can you quantify, what you'd be able to deliver on the top line in terms of exports, with these two incremental products coming on stream?
So actually, I can give some brief about the product technology right now. So one is that Chromia is a high definition printing technology. So either to the quartz, unlike porcelain or glaze tiles, could not be printed. So now you can actually ornamentally decorate the quartz full body with certain high definition printing. So we are bringing in this new technology from Breton of Italy that is going to be commercialized by end of FY25. Currently, that's what we foresee. And Creos is a new mixed distribution and extrusion system, which Breton has introduced to make ultra-thin slabs, make slabs with more exotic and unique patterns, which we have not seen before in the quartz industry. So these two technologies will help us to increase our value realization. They may not necessarily contribute to the volumes because these are more ornamental and design driven. So I think R&D is currently in progress, so I will not be able to give you exact number as to how incremental we are expecting, but we are expecting that these two technologies will also help us to get a higher realization on products.
Could you give us a sense of, the Krios line, which you said will be commercialized in the second quarter of this year. Chromia will be in the fourth quarter of FY25, that is. So this will obviously be a story more of FY26. How much incremental can you get from over and above what you're doing right now from these two particular products?
See, basically, Chromia would be, as you said, commercialized in the Q2 of FY25. And with the R&Ds and all, we expect that another quarter or so would go in getting the plant trial R&Ds done. So we expect around 10% contribution from Krios product in a 12 months period. So it would be too early to really look at contribution largely coming from Krios and Chromia this year. So this year our focus would be actually getting the contribution from our existing technologies, what we have, and the new customer bases, what we are adding, and the new geographies where we are reaching. So I think, as you said, FY26 is the where Krios and Chromia would typically contribute larger to our line.
So you said FY25 you will focus on revenue. It won't obviously be 30%. So what should a reasonable estimate be? 20-25% or 25-30%?
So I think we would say between 15 to 25% is what we have internally set as our target. And depending upon how the markets pan out and the headwinds pan out in the US, these numbers can be in that range.
Thank you so much for your time, Mr. Paris. The market clearly likes what you're saying, and also the market seems to realize that FY25 is going to be better than FY24 for you. We wish you all the best, but that's all the time we have with you. For Q4, we'll bring you once again for the first quarter of FY25. Now, moving ahead, we'll take a quick break. We'll get you more on the markets and put focus on restaurants brand Asia and Dixon Technologies on the other side. Stay tuned.
Mention on Monday evening, courtesy of that hoarding. I'll mention in the list of the deceased. Blame games have begun, as is the case in most such tragedies. Additional Commissioner of the Civic Body told CNBC-TV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Another heartbreaking tragedy took place in 2017 when at least 23 people were killed and another 39 were injured in the stampede that took place on the erstwhile Elphinstone railway station, now known as Prabhadevi. The army sprung into action soon after, building a new bridge just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced and we never heard about that incident again. Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of a few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most.
Time for Midcap Spotlight now, and the spotlight is on restaurant brand Asia, earlier known as Burger King India, on the stock exchanges. It's a good set of numbers that the company reported last evening. 16% growth in the revenue, and because of high operating leverage and a favorable base, the EBITDA actually increased by 150 basis points. As those numbers come up for you on the screen, the margins at around that 11.6% mark. On the bottom line, the company remains loss-making, but that's largely because of depreciation, which is extremely high, and a non-cash expense. If you look at the geographies, India, 20% revenue growth year-on-year, EBIT grew by 30% and margins improved out there. And Indonesia, a business that they recently acquired, also showed a bit of a turnaround at the bottom line, with a 15 crore loss turning into a 14 crore EBIT profit itself, and that's reflected in the overall performance. The key highlight, however, was the same-store sales growth that came in at 1.9% in the fourth quarter. And if you compare it with all the other companies that have reported their numbers so far, be it, KFC India or Pizza Hut coming in from Devyani or Westlife Food, all of them have reported negative SSSG. That makes Burger King India the only positive SSSG reporter in the fourth quarter so far. We're still to hear from Jubilant Foodworks on their numbers. They've added 14 outlets of Burger King. Burger King Cafe or BK Cafe is around 351 out of the 455 outlets. And for the next couple of years, they have a strong outlook as well. Gross margin target of 69%, 700 restaurants from 455 where they are right now. And Indonesia is a target of crash break-even in FY25 itself. So all these factors doing well for them. The stock holding up in today's trading session. Let's see where it goes from here as well, Vivek.
Well, thank you so much for bringing us the internals. So Triple SG actually growing versus a decline for its peers. That's the key takeaway. Now, the other stock in focus is Dixon Technologies. The stock surges in trade after Morgan Stanley has upgraded the stock to an equal weight rating from the earlier underweight. Upasana is here with more details.
Morgan Stanley has upgraded the stock to equal weight from underweight and also raised the target price to 8,696. It says that in the last 6 months, Dixon has onboarded large mobile customers and is looking to invest almost $30 million for manufacturing display modules for the mobile segment. It has also forecasted an earning CAGR of 42% from FY24 to FY28. Now, what are the key concerns highlighted by the brokerage? It says that the company's ability to win large customers is a key concern. It has also highlighted the lack of appetite to invest in the backward integration and the street's assumption that negative or very low working capital days would continue perpetually. Now, looking at the brighter side, what are the key reasons that the brokerage has highlighted for the upgrade? It says in its earning conference call, the company has highlighted few important pointers, starting with that in the last 6 months that the company has seen strong customers and brands come on board. Dixon's also investment for backward integration is one big positive. Additionally, companies also highlighted that it is in the advanced stages of its tie-up with a global technology partner. Given these changes, brokerage is more constructive on the earnings progression of the stock and hence has gone and upgraded to an equal weight.
Thank you so much for that, Upasana. Let's also now put the focus on a company, Nava, earlier known as Navbharat Ventures. They just declared their results around 45 minutes ago. So what's actually happened this time around is that, while revenues have gone up 5%, EBITDA has gone up almost 10%, margins too quite strong. A couple of key factors. Number one, the other income this time around much lower. Also, there's been a lower deferred tax benefit that the company has. But looking at the internals, what's actually worked for the company, which has been the trend across the last 3 quarters, is the fact that the power segment revenues have gone up quite well, almost 10% higher on a year-on-year basis. But again, the ferroalloy segment and the mining revenue segment, both of these are down quite significantly. In fact, the mining revenue segment is down almost 14% on a year-on-year basis. However, this particular year has been quite good for Nava, given the fact that there has been significant debt reduction that the company has seen, and also quite a lot of worries in terms of its overseas subsidiary actually going down. The stock is down almost 6% after these results. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.
And influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day which is where we are seeing follow-on buying from yesterday's rally. So that's definitely a good thing. We have the mid-cap index, which is holding with a gain of around 0.8%. We have an advanced decline ratio, which has been positive through the trading session as well. Lot of queries in what is quite a choppy market on a net basis. And as we move towards the election outcome on the 4th of June. Joining us today, we have Shaina Mukaddam, independent market expert, to take all of your fundamental questions. Vaishali Parekh, head of tech research at Prabhudas Leeladhar, to answer all of your tech questions. Afternoon, ladies. Well, Vaishali, I'm going to start with you. Hygiene check on the markets. It's looking good. Where do you expect the Nifty to go, and your call on the broader markets as well?
Very good afternoon, ladies. Yes, so it is a good surprise. I mean, yesterday we saw a lot of volatility in the market, but we closed very well. And today also the momentum continues. So for this week, of course, we were waiting for 22,350 to be crossed. And now we are looking forward to the next target of 22,600. So view is a positive, buy on every decline. Likewise, even Bank Nifty, after a very long time, we saw a move past 48,000. So that implies there is going to be good participation from the frontline banking stocks, and we would be now looking at 48,500.
Okay, all right. Well, let's get in some queries now. We have Ashwin Kimani, who writes to us from Mumbai, who's 2,000 shares of PNB, which is bought at 35. He's a long-term investor and wants to know what to do, whether he should hold or sell at these current levels. So he's a long-term investor. He's bought the stock at a good price. Shaina, let's go to you on this one first. 35 rupees is the buy price. What would you recommend? Do you expect further upside or maybe some profit taking?
He can continue to hold. Basically, valuations are not expensive, with a price to book 1 year forward just about 1 time. And the results also, fourth quarter numbers were largely in line. And I expect FY 25, FY 26 to continue to do well in terms of, lower provisions, better margins. So one can continue to hold.
Okay, continue to hold. What about you, Vaishali? Done very well from the buy price. What would you recommend?
So, well, we saw a bit of a dip right now. I would say keep a stop loss of 115. But I think it's the way we are looking at the market, it's ready for further price projection up to 140, 145. So my view also remains that yes, hold with a stop loss of 115.
Okay, the view is hold on PNB. That stock, as you can see, is rallied around 155% in the past 12 months. Well, we have one more query now. This too is on the financial space. Ashish Thakkar writes to us from Mysore, holds 2,000 shares of IDFC First Bank, which is bought at around 40 odd rupees. He wants to know what to do, whether he should stay invested or sell his holdings. Sitting on a profit at this point in time. Vaishali, you go first on this one.
Well, so IDFC First has really not participated, but only hope is that technically very well placed. 75 is the level where double bottom formation is taking place. So I would say hold, because once the stock picks up momentum, the first target we would look at is 82 to 88. Above that, there would be a confirmation of further high. So for now, it's a hold.
Okay, and what about the fundamentals on IDFC First Bank?
The stock was consolidating and likely to consolidate a bit because fourth quarter numbers were a bit subdued. Having said that, I think the NI growth was pretty strong at 24%. And I believe that, going forward, they have guided better second half of the current year rather than the first half. So you could see some bit of consolidation. But here again, the price to book is very attractive. It's just about 1.7 times. The book is improving. So might as well just hold it.
Okay, well, a very good reaction coming into the GSK numbers, where the stock, I think, is up in around 8 odd %. If I'm not mistaken, GSK Pharma, that stock should come up for you. It's been a good revenue growth of around 18 odd %, which has come through for GSK, almost 10% move on the stock. And you generally don't see that for an MNC post its numbers, because the numbers are generally tend to be quite subdued. But this has been a very good quarter for them. Net profit up around 46 odd %. They have their revenue growth, which is around 18 odd %, and the EBITDA, which has grown in double digits as well. I think it's around a 50% growth. Margins have expanded all the way to 27%. So very good going for GSK Pharma. As you can see, that stock is spiked up to a gain of over 10% at this point. Well, China, would you have a view on GSK Pharma?
I have not looked at the numbers lately, so I would let this pass. But I think being an MNC, they always attract higher valuations. But somehow now I think the focus is shifted for quite some years now to domestic companies. So I'll just let this pass.
Okay, all right, fair enough. And Vaishali, any call on the technicals for GSK?
Definitely. So actually the long-term trend is very good. Even on a technical level, currently, we have just seen a very strong bullish candle with very high volume, but we need a follow-up buying in days to come. So I would say this, yes, with the support of 2,000, the stock is ready to do 2,500. And above that, I think 2,800 levels are also open. So it's a bullish view, but to be bought in decline because support is quite far, 2,000 levels.
Okay, all right. Well, there's a one-time gain, but it's marginal as compared to the kind of growth that you've seen in terms of the overall numbers this time. But now we do have Sasikala Chidambaram, who writes to us from Chennai. She holds 500 shares of Bandhan Bank, which she's bought at around 409 rupees, so sitting on a loss there, and 10 shares of Whirlpool, which she's bought at around 1,000 odd rupees. She wants to know the future prospects of both these counters. Whirlpool sitting on a profit and Bandhan Bank sitting on a loss. In fact, Bandhan Bank comes out with its numbers today as well. You go first, Vaishali, on the technicals of both these stocks, Bandhan Bank and Whirlpool.
So Bandhan Bank continues to show a weak trend, and I think, well, if she's holding, keep a stop loss of around 170 levels, because she's held on for quite some time, and might as well wait till 170, because the way the chartical formation is, there is no pickup. The confirmation of a reversal comes only about 190 to 193. So this is how she should be holding. Keep holding with the stop loss of 170. And if there is a move above 190, she can probably add more to average out the price. That would be my view for Bandhan.
Okay, all right. So that's your view for Bandhan Bank. And what about you, Shaina? You know, on both these stocks, Bandhan as well as Whirlpool, fundamentally, how would you be placed? And Bandhan comes out with its numbers today.
Yeah, I think they have given us an indication that both their advances as well as the deposit growth has been pretty strong for the quarter. So I think numbers should be okay. And also management, there seems to be some, I think going forward, some stability that will come in. At the same time, I believe the stock has not really performed, and it is likely to, continue to underperform in the overall banking space. So I would prefer that one switches from Bandhan Bank. There's something like a federal bank which looks more interesting. In terms of Whirlpool, again, there I would suggest a switch. That has again been a non-performer for quite a few years. And if you see both in terms of financials as well as stock performance, and if you look at valuations and compare it with a peer group, like let us take, for example, IFB. IFB is much cheaper than Whirlpool. And in terms of the way they have managed, the current slowdown, IFB has done it better than Whirlpool. In terms of valuations also, I think Whirlpool is expensive. So it would be better to switch.
Okay, all right. Better to switch from Whirlpool. That's the view coming in. The next query is on Devyani International. Jatin Shah writes to us from Gujarat, holds 130 shares of the stock, which he's bought at 187. So he's sitting on a loss right now. And he wants to know what to do, whether to stay invested or book his losses at this point. Well, Vaishali, the 52-week high is over 220 odd rupees. So that seems to be a way off. Do you recommend staying on or maybe booking his losses and moving out?
I would say better to switch because it's all wishful thinking only unless and until if the stock moves above 169, 170. So if he's ready to hold on and see the reversal, that's okay. But for now, in the current scenario, it's a weak trend. I would say give it a miss and switch to a stronger stock.
Okay, well, what would you recommend on Devyani? You know, this KFC operator did report what was a net loss this time. What would you recommend, Shaina, on Devyani?
There again, I would also agree and I would recommend a switch. In fact, from the overall sector looks very expensive, though Devyani is the cheapest of the lot. And this quarter loss was more because of they acquired the Thailand, the franchise. But at the same time, even if you normalize it, the overall sector has not really done well, including Devyani. If you saw the numbers, they've shown a decline on the same store sales. And both in both their segments, you have Pizza Hut also that showed a decline. So I think to an extent, and valuation is extremely expensive. So the market is not going to reward in such a volatile scenario. So I would suggest, better to switch to some other sector for now. Of course, you can relook at it maybe 2 quarters down the line.
Okay, all right. Well, on that note, we'll take a quick break, but lots more queries on the other side, Shaina as well as Vaishali. Stay tuned. We'll be back in just a jiffy.
Trailers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Welcome back. Well, definitely a lively market when it comes to a lot of, result reactions. Like we pointed out, GSK reacted very strongly to its numbers, and now we have GPT Infra projects where the margins have expanded and that stock is up around 5% post numbers. Maybe the other one which should come up for you is Poly Medicure also. So let's see how Poly Medicure is reacting to its numbers. It just came out maybe a couple of minutes ago. So that is basically a medical device manufacturer, just about flat post its release of Q4 numbers. But nonetheless, we do have a lot more queries lined up. So let's get to that. We have Rahul Taneja, who writes to us from Kanpur, holds 20 shares of State Bank of India, which is bought at around 190 odd rupees. He wants to know what to do with this particular counter, sitting on a good profit there. Do you think there's further upside on SBI, Shaina, post the Q4 numbers? One, what are you expecting in FY25? And two, any upside?
Yeah, the numbers were very healthy, much better than what, in fact, the street had expected. And I think in terms of valuation, there again, State Bank, despite its size, it's pretty attractive. If you look at it on a one-year forward basis, as you asked, FY26, it's just about 1.4. If you include all the subsidiaries, the valuation of the subsidiaries, I think it's a bank that will do well over the longer term. So one definitely needs to be continue to be invested in State Bank.
Okay, all right. So in the past 1 year, that stock has rallied significantly, but it was an underperformer last year. What about you, Vaishali? What would your recommendation be on SBI? How does it stack up as compared to the others?
So I would say, of course, the leader of the PSU and doing very well. Technically, I would say 790, 780 acts as a support. In fact, I would rather say keep adding in decline, because once we see the stock moving above 835 levels, I think this is ready for a target of 880 to 900. So it's a buy at every dip, 780 as support.
Okay, all right. So it's a buy at every dip, and your targets are over 850 odd rupees. Well, Amandeep Singh writes to us from Amritsar. He holds 150 shares of Happiest Minds at an average of around 1050 odd. So he's sitting on a loss there since the past 2 years. He wants to know whether he can hold these shares for the next 1 to 2 years. Well, interesting question there, because generally, Shaina, we get a lot of queries that somebody's held on and they've made profit in what has been such an exuberant market. But in this case, the person's been holding on patiently, hoping for that upside to come through for Happiest Minds, but it hasn't. So what would you recommend in that case? Would you ask, for an exit, or maybe even build on these levels, considering that you're bullish on the fundamentals?
I would recommend a switch, because, while the stock has underperformed, if you look at the last couple of quarters, I expect this likely to continue, or at least it will underperform some of the other, IT stocks in the peer group. Like, for example, if you look at pure valuations, the fourth quarter numbers were pretty disappointing. And based on those numbers, if you really look, even 1 year forward, it's about 32 times 1 year forward P. Also, if you look at it from the turnover to market cap basis, there again, if you compare it to, say, a peer group, like, for example, Birlasoft is much cheaper than Happiest Minds. They are similar market caps. So I would suggest, it is better to switch from Happiest Minds to something like a Birlasoft. So you'll make better money, because I don't see too much downside from the stock price for Happiest Minds, but I don't see too much of upside also. So I think it is better to switch.
Okay, all right. And what about you, Vaishali? What would your view be on the technicals of the stock?
So I think it is gradually now getting into a trend. And I think currently it has just been consolidating. So with 780 as support, not in a hurry, I think this stock can take off and may retest the previous levels that he has bought. I think 1,000 levels you said. So I would say hold for some time. You'll get your price, and then perhaps you can switch over to the other stocks.
Okay.
Rishabh Gupta writes to us from New Delhi. He holds 10 shares of IREDA, which he's bought at around 100 odd rupees, and wants to know what to do, whether he should hold, sell or buy more shares of IREDA. The stock is doing well today. It's up around 2.6%. Rishabh's made a profit as well. Vaishali, you go first on this.
So I would say if he wants to buy, of course, statically, I don't have much of a data, but whatever I have, it shows a lot of trend. So 150 acts as a very prominent support. So buy at every decline with 150 as support, because the way the chartical formation is, it's quite likely that it will retest 200, 215 and perhaps go higher. So if it's 150 as a support, keep buying.
Okay, well, yes, absolutely. Listed in November 2023 and listed with a over 56% premium to its IPO price. So that's the kind of gains that we're talking about for that particular counter. Shaina, what would your view be?
Well, it's a strong PSU. At the same time, if you look at it in terms of the near term, let's say next 6 months, there are going to be issues. We'll have to look at the impact that the new norms that RBI has has put across for provisioning, how it is going to impact their balance sheet. While of course they say profits will not be impacted, but the balance sheet may be impacted. They may have to raise further funds, I don't know. So we'll have to wait and watch. Their net NPA is about 1%. So I think, one time. So I think it's better to not add as of now. You can wait, relook at it maybe a couple of months down the line.
Okay. Pooja Malik writes to us from Mumbai. She holds 20 shares of RVNL, which she wants to know what to do with, whether she should stay invested or exit at current levels. She's sitting on a profit at this point. Her buy price was 200 odd rupees. Let's go with you, Vaishali, on this one, RVNL.
I think it's doing very well. Most of the rail stocks are doing so well, and it's on the verge of a breakout. So about 295, I would say that this stock is ready for a target of 350. So continue holding. But yes, keep a trailing stop loss, since she's holding since a very long time. Continue holding with the trailing stop loss, but look for higher targets.
Okay, all right. And fundamentally, it's been doing well. For example, it just won an order from the Southern Railway just a couple of days ago, I think on the 13th of May. So fundamentally, it is in this upswing. What would you recommend in that context, Shaina?
Absolutely. I agree both with you, Ekta, as well as Vaishali. It is better to continue to hold. Railways accounts to about 50% of their revenues. And in fact, order book is very strong. They've already had an order book of about 65,000 before the orders that you're talking about. And they've got some additional, they're shortlisted. So order book is strong, and that is likely to, enable them to report good growth. We are seeing railway stocks doing pretty well. So it's better to continue to hold, for the medium to longer term.
Okay. All right. So that is basically on RVNL. We have another query now. We have Indrani, who writes to us from Kolkata, holds 100 shares of Home First Finance, which is bought at around 921. Wants to know what to do, whether she should hold the shares or book her losses and exit from this particular counter. Shaina, what's your view on this one?
It's a small cap housing finance company. I would suggest she exits from here. Basically, the valuations are expensive. It's about 2.5 times book. And we have RBI that has, again, now put in certain provisioning norms for housing companies. I think it is expensive. So it's better to exit.
Okay, all right. So that's on Home First Finance. What about you, Vaishali? Your view on it?
I would agree with China, because there's nothing really happening. It's in a downtrend. There's no clarity. So better get into a better stock.
Okay, all right. Quickly, we have Shivani, who writes to us from Pune. She holds 20 shares of Yes Bank. She's bought it at 30 rupees, asking for the prospects of this investment. China, you go on this.
Well, Yes Bank actually, in terms of valuations, it's now starting to get, it is expensive, but at the same time, there is a potential for M&A, because we don't know exactly what SBI is going to do with its holding, because some of the other large investors have sold part of their shares. So I would, and they're doing pretty well in terms of performance, if you saw the fourth quarter numbers. So I would continue to hold and, wait and watch what happens.
Okay, all right, fair enough. Well, Vaishali as well as Shaina,
Well, that's all the time that we have on the show. You have a great weekend, and we'll see you on back on Tuesday. That's because Monday it will be a holiday for the markets, but we do have trade tomorrow. Well, that's all the time that we have on the show, but do remember to email us your questions. We'll address them with our experts. Closing bell up next.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Well, how I wish this was a video interview that we had, but you take what you get with the likes of Neville Nerona, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small tiny audiences at very low cost. And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that the mix of DMart's sales actually deteriorated largely because perhaps there have been entries of a lot of these value retailers in the apparel space as well. To that he said, yes, there is marginal impact and specific to a certain category such as apparel itself, and that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart is adding every year, whereas they worry about how well the stores being added are being actually managed, and that's the big dissonance. But having said that, they would like to add as many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces and a lot more relevant for India, which is known for leapfrogging beyond different things as well. And on competition and of course digital commerce, he says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures, and as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about growth in the tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
Let's first take a look at how the Asian markets have opened this morning. It's a bit of a mixed picture.
Most recently, Karthik Gupta, the Chief Financial Officer of ANI Technologies, which is the parent company of Ola Cabs, stepping down from his position.
And on the way down, the 40-day exponential is 22,273. And hopefully that should not break. That's about 100 points away from where we are yesterday.
As we look forward to next year, we want to make this business a very strong, solid leader in the categories that we operate in.
Absolutely flat start. 19 points lower is what you have on the Nifty.
Because look, honestly, you don't need 400 seats. It is not that you need such a large mandate to change anything.
Recently, on the 29th of April, launched the XUV 3XO.
Actually, we have not lost market share.
60% import substitution
has been achieved in the telecom sector.
And this has been the comeback week for the bulls. 1 rupee of earnest money deposited allows the telcos to approximately bid for 11 to 12 rupees of spectrum.
So we're positioning ourselves not just for liraglutide, but for semaglutide and for tirzepatide and beyond.
And we have the frontline indices doing pretty well as well.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Oh, well, that is the day so far, and it's turning out to be a pretty solid day once again. It's a Friday afternoon, it's the last hour. I can't say this week because there is 2 hours of trading tomorrow. I was about to say that, but well, this is the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surbi, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. I guess this whole week has been about grinding along and somehow trying to clutch on to the highs, the green side of the screen, barely with the skin of the teeth. I think that's been the bull's case this last 5 sessions.
Absolutely, and I think finally, I think Surabhi, we're starting to correct some of the underperformance, right?
Yeah.
Because actually, we should do that. I mean, just put, say, for example, the Nasdaq and what it has done in May so far, and look at what the Nifty has done. And I think you'll see, or maybe just stretch that timeline a little bit longer, and you'll see that the market, which we are most correlated with, by the way, I mean, the Nasdaq, there's been a fair bit of underperformance, which we have seen. We're not down that much. I mean, at the low point, the market was down about 5.5%. But the fact is, the other market actually is higher. So we're starting to correct some of the underperformance. And Nifty, I mean, just a couple of points. Nifty is now above the 61.8% retracement, which is 22,422, which means that, you're basically now looking at but it's a tight range, and it sounds funny, but the fact is that you're now looking at beyond this level, you're looking at all-time highs. All right, I mean, the prior all-time highs. There's nothing really between where we are and what the market can do. Bank Nifty needs to close above the 20-day. It's not yet done so, but we're very close. I mean, 48,189 is that level, and we're about 70-80 points on a 48,000 index, so perhaps should come through. Advanced decline 2:1. At this point, market breadth is pretty solid. It's a very vibrant screen with lots of participation. And if you want to go sectoral, it's metals and autos which are outperforming, of course, with that big outperformance in, Mahindra and Mahindra, which I think is easily at least the large cap of the day. Rima.
Well, indeed, M&M is up close to about 4%, but it's been a good week, right? Even though we've been grinding on a few days, we had a big day yesterday and we've managed to hold on to all those gains. For the week, the Nifty is up nearly, 2%, while the mid-cap index has seen a gain of close to about 4% for the entire week. In fact, 4.1%. Metals has been the star sector with a 6.5% rally. Realty has moved up nearly 6%. And PSUs, it's been a comeback week for PSUs after the drubbing of the prior week. And the PSU stocks are up at the index level, close to about 5.5–6%.
Oh, absolutely. And this time around, it's actually, while the Nifty has been grinding pretty much throughout the last 5 trading sessions, the weekly gain now about 2%. The mid-cap index has been actually doing well. Even today, 0.8% higher. And for the week as a whole, I mean, in all this grind up, slow and steady, we've still got a 4–5% gain on the mid-cap index. Anyway, let's just talk about some of the major movers and shakers right now. And we have quite a few high flyers out there. You've got, of course, the PSUs, as Rima's pointing out, the stocks like IRCTC, Concor, really, I mean, the stocks of the day. But even beyond, there are many other names that stand out. InfoEdge is having a dream session. Remember, we were hearing from the management yesterday on the same show, 6% up today. Dixon has taken off in a big manner. It's retaining a bulk of that gain that started in the morning with a flight of almost 7% right now. That's Dixon. And then some of the names from the industrial side of the market. Schaeffler, for instance. Schaeffler is up about 4–5% right now. We've been talking about names like GE T&D for the better part of this week. Smaller auto ancillary stocks like an Endurance rallying on good numbers. So basically, it's a very vibrant, bright and very lively screen on the mid-cap and small-cap side. Nigel.
Well, that's right, Surbi. And, the PSU metal pack has come back into shape today. You have NMDCs at the high point of the day. Nalco is doing well. Hindustan Copper, some of these stocks a little bit under the weather, but they are pulled back in style. You have the global tailwind, and if there is continuity at the center, then obviously these PSUs, they have seen a bit of a re-rating, and they could be due for more. So explains why all those stocks are up and about. Well, how do you position yourself, though, in the final hour of trade? Mitesh is back with us. Hi, Mitesh. Good afternoon, and good to see you win. Well, tell us, how would you trade this index? You've made a good money if you went long, say yesterday midday. What would you do? Would you carry that position? And also your individual stocks.
Yeah. So, Nigel, the understanding is that, with the last few days, the market has turned positive, and we suggested that getting past 22,200 was the key, and that could extend the pullback to about levels of 22,500, and in a good case scenario, even 22,600. So, we touched 22,500. The structure is still positive. So, I think I'll keep holding onto long positions and suggest a revised stop loss at about 22,430. Having said that, I think the bank Nifty is also, now on the verge of giving a breakout once it starts getting past 48, 200, 250 zone. There's a minor price gap over there, but above that, I think the bank Nifty could enjoy momentum. So both the indices look good to me. Only thing is that once we cross 48, 250 on the bank Nifty, you might see renewed momentum for at least in the short term. Coming to the stock-specific calls, IRCTC has come on the radar. It's made a fresh high. So I hear the stop at about 1,064. Look for targets of around 1150. And the second stock is ITC, which is being very sideways and underperformed, but now is showing signs of that consolidation could be coming to an end. These are early signs, but I would still want to take a trading bet with a stop at about 430 for a target of 445 to begin with.
Okay, thank you very much for that. EMS stands for Electronic Manufacturing Companies like Dixon, Keynes. They're all surging on the back of the Q4 earnings. Dixon came out yesterday, but overnight we had Keynes Technology reporting numbers and very strong numbers. The stock is up close to about 20% now. Upasana joins in with the key highlights and how the valuations stack up for this entire pack.
It was a mixed quarter for majority of the EMS players. Starting with Dixon Tech, it reported a slightly below estimate numbers, but the growth commentary stands strong. The revenue was up 52% on a YoY basis, majorly led by mobile segment, which saw a growth of 119% on a YoY basis. Coming to margins, the margins were down about 119 basis points at 3.90%, which was majorly due to share of low margin mobile and EMS segment, which increased from 46% to 66%, impacting the overall margins. Now, one of the most important con call highlight is the company's announcement of potential of signing up one more global mobile client and backward integration of almost $300 million into mobile display manufacturing. Next up is Keynes Technology. The company reported a strong set of numbers. Revenue up 75% on YoY basis. EBITDA margin stood at 14.9%, which was highest in FY24. And company has also given a guidance to achieve 60% revenue growth in FY25 and also aiming to increase margins more than 100 basis points in FY25. The order book stands healthy and strong at 4,115 crores with an uptick of 9% sequentially. And mind you that the Keynes is the only EMS player to foray into outsourced semiconductor assembly and testing business. And lastly, Syrma SGS. The performance was below the street estimates, revenue up 67%, and the strong revenue growth was mainly led by healthcare and consumer segment. EBITDA margins were down 210 basis points at 7.2%. This was mainly because of the unfavorable business mix. That is the higher share of low margin consumer business. Now, company has given a guidance that it is confident of maintaining 40% revenue growth going ahead. Now, looking at the valuation picture at a glance, Dixon Tech is the most expensive, standing at 80 times FY25 PE and FY26 at 60 times. Next is Keynes Tech at 53.2 times FY25 and 36.6 times FY26. And lastly, Syrma stands at 28.9 times FY25 and 22.3 times FY26.
All right, Upasana, thank you very much. That's very helpful data and comparison over there. Let's take the question now to our first guest on the show. Prakash Diwan is joining in. Prakash, happy Friday to you. EMS, it's a big buzzword on the street, right? But the question is, I mean, who can keep riding this the best? Keynes came out, it was probably one of the most watched listings of last year. And look at the numbers and look at the reaction to the stock today, 20% circuit going on it. So how would you play this EMS space? What's your favorite?
Good afternoon, Surbhi. So first and foremost, they are expensive for sure. There's absolutely no doubt on that. So it's not something which you need to kind of, if you're a value investor, it's going to be extremely difficult to get, garner the gumption to buy something which is so growth oriented and top of the momentum list. But, out of the three names that we saw on the screen when Upasana was explaining, I think Keynes has a very positive right to win of sorts, which is emerging much more sharply than even Dixon. Dixon, of course, has been around, has been doing a lot of things before their focus on EMS became sharper. But Keynes is exclusively focused on some very niche segments, and especially, the testing part, which they've collaborated with some very marquee names globally, actually will mean that they will be able to convert all of that proficiency and prowess into business revenue. And from that perspective, 50% is something which you would still live with. 50 times FY25 earnings, you could still live with. But the estimates which we have today could be very debilitating in case there's a delay in some of the project implementation. So then you'll probably see a P multiple getting very stretched. So if that's the case, then you probably have to wait longer. But I would definitely buy Keynes out of the three, given where it is. It made a high of 324 some time back in anticipation of some good news. But this time around, it looks like, if the momentum continues, it could probably cross those 3,500 levels as well. But from a longer term perspective, you would need to give it time to realize all the potential that it has.
Keynes Technology is also the smallest in size compared to peers. So Keynes' top line was about 640 crore, which compares with 4,600 crore of Dixon Technology and about 1,150 crore for Syrma SGS. So Keynes,
in many of these cases, right, like we're talking about valuations, I think what people are also starting to do is looking at, because you can't look at FY25 and FY26, you need bigger and bigger numbers, right? So I heard someone saying, well, look at India's share of outsourced electronic manufacturing. Right? I mean, with the share of EMS basically, which is outsourced electronic manufacturing, which OEMs give out, it's about 2 or 3%. And now with the, so can that become bigger? Can that become 15%, 20%? So, you kind of need to stretch the story a little bit. You got to make it bigger to be able to, I think, justify some of this. It may happen, it'll happen, but, it's of course into the future, and you can only kind of look ahead, if that too, a year, 2 years down the line. And from that perspective, I mean, I think these are nosebleed valuations in many cases, especially of course the leader, which is Dixon.
Oh, absolutely. And I guess it's also a question of the margin profile you want to play, right? If you want to be with a mass producer of mobile phones, and it's all about scale for a Dixon, add a margin of 4.5%, or whether you want to play the niche sort of offerings that Keynes is into. Now they're talking semiconductors, as Prakash was saying. So it's pretty high-end stuff, to each their own. I think Keynes margins as of last count Q4 onwards, we were talking about mid-teens margins for Keynes versus a 4-5% for Dixon. So different profile targeting different segments. Well, let's quickly move on. Prakash, just want to talk about some of the other movers and shakers of the day. I mean, Crompton, for instance, since we're talking electricals, now let me come to consumer durables, consumer electronics. Crompton's numbers have been very well received by the market. What do you think works so well for them?
So, if you look at the numbers, I mean, while the internals were strong, there's nothing very spectacular in terms of growth in margins or in terms of the overall revenue. But it's just that, there is this anticipation of a corporate action, an M&A action possibly, which we've been hearing for some time on this counter. And I think these numbers are probably what they were waiting for, because they do touch, they do cross some of the threshold levels which were placed as part of the milestone transaction in the making. So, this is just a conjecture. To be honest, there's nothing else from the numbers that kind of warrants this kind of exuberance. But it's just that it was waiting for this kind of a milestone, as I said earlier. And the numbers are actually delivered on that. So that's a count. I just want to add to what Prashant said about this percentage of, India business on the EMS side. The only thing is that it's such a fragmented industry right now. I met so many people who haven't yet IPO'd, but there's lots of lead merchant bankers who are doing rounds with these companies in Bangalore, in the north, in Gurgaon and all, who are probably ripe for IPOs, but they've not come into the listed space. So that's the reason why most of the attention that these companies get and the valuations keep on chasing the scarcity premium that is attached to it is the reason why you have this 50 and 70 and 80 kind of multiples on the EMS names.
All right, Prakash, are you looking at any of the pre-IPO placements in these companies?
No, so as I said, all you need to do is keep tracking what's promising, and at some point, companies will need capital to grow, especially if we have to cater to that large global market that's available.
Okay, all right. Prakash, I wanted to ask you about Concord. Earlier today, the stock started off on the back foot. There was some uncertainty, so to call it, about that land leasing fee. Because they put it in their notes that, around 700 crores, or the street got a little bit nervous. And then we posed this question to the management. We said, is it resolved or not, this license fee that you talk about with the railways? And they said there's no issues with that. And from there, the stock has recovered. Besides that, they're also guiding for good volume growth of high teens. And they're saying that margins will hold at around this 25% and not losing any market share. At around 1,100, the stock is not cheap, mind you, even if you compare it with the historical averages. But what's your view on it?
So, Nigel, look at this in the backdrop of what we've been hearing the finance minister talk about, what the Honorable Prime Minister has been talking about, what a lot of industry captains have been indicating, that India is likely to continue being an export hub, and especially for things that we've never participated in within the manufacturing value chain. The second thing is that the way commodities are today behaving globally, there is no reason why the development that we have in the infrastructure side will not accelerate the kind of volumes that a Concor can manage. The DFC, once it's come into play, I can tell you, and I've seen it being built in corridors. A lot of the corridor, almost 60% of it is done, and a lot of the corridors will triple the volumes that Concor can do, of course, over a period of time once this DFC gets completed. So, look, if you connect all the dots, there's no reason why Concor won't. In fact, my target for Concor is about closer to 1,500. And we're talking about it from the 780, 800 zones when there are a lot of discussion around, the divestment part, which doesn't matter at all. Because there was expectation that they could lose market share, which has not happened. In fact, the management is reassuring that they will continue to gain market share and control, the kind of footprint that they have, which is fabulous with these kind of margins and volume growth. So yes, but it's a secular long-term story, Nigel. It's not something which you need to kind of worry about on a quarter-on-quarter basis. But if you hold on for the next couple of years, 40% upside, 50% upside is definitely not unreasonable.
All right, Prakash, since you have a fair idea about the space, what about Gateway Distriparks? That's the only other listed player in the similar space, and it's trading at less than half its valuations. Stick to Concord, or do you think, at these valuations, maybe Gateway Distriparks as well deserves some allocation?
That's an interesting question, Nigel, because every time you look at Concord, you try evaluating the rich valuation that you're paying. But then Gateway Distriparks has got absolutely no scale as compared to Concord. And the ability of any of the players in this business to be able to scale up rapidly as demand grows is not something which you can ignore for too long. So from that perspective, Concord has the right to win, not just market share, but in terms of the premiums that it would get. Gateway Distriparks will do well on a secular basis, but if it does 20%, Concord would do 30% upsides. So that's where the relativity is much higher for Concord. There's nothing wrong with Gateway Distriparks, but it won't fetch you the same alpha which Concord possibly can deliver from here on.
Got that. Prakash, before we let you go and start enjoying your weekend, unless you're trading tomorrow, then you don't have a weekend immediately. Have to get your view on Mahindra and Mahindra. And I keep going back to a conversation that you and I had. I think it was almost a year back, right? You were the very, very early on bull. The stock was around 1,400 back then, a year ago when we were discussing it. And you were saying this is the dark horse. Look at this one for in the sort of medium term. And what a story, what a turnaround. But the question is now what? I mean, is there more runway? I'm sure you heard the management in the morning as well. What's the sense?
No, so I think, the anticipation that we had a year back in terms of a lot of the, vectors working towards making it a much bigger, much more resilient player is actually happened. And, news like the government's probably indicating that hybrids won't get any concessional tax treatment. That's great news for Mahindra, which is just unleashing its electric vehicle portfolio. So in fact, the people who are getting worried are the Marutis and the Tata Motors of the world, because they haven't yet launched too many electric vehicles. The gaps that they had, they're filling. And I can leave you with one thought. So in end of this month or probably next month, you'll probably have a surprise launch of the Thar petrol version, the 5-door. Now that is something which is already a blockbuster and could just give it more wings. So, when you have these kind of triggers, automobile is a very funny business. You could probably, see a few things happen, and that changes the trajectory of the company's business dramatically. So a lot of that has happened to Maruti when the Swift was launched, when the Baleno was launched. So I think Mahindra & Mahindra is definitely set for a very spectacular growth. The farm equipment side will also start delivering if the monsoon happens to be the way we are anticipating or we are told. But you would of course have to add on diff, because between the results and today it's already run up quite a bit. And of course, in anticipation of the good numbers also, we've seen that. But if it crosses 3,000 by the end of this year, I would be surprised.
Okay, thank you, Prakash, for joining in. Enjoy the rest of your Friday. By the way, some more stocks are moving up. So Somani Ceramics, it was up, I think, double digit yesterday. It's followed it up with another 7% move on the back of its Q4 numbers. Remember, there was a big expansion in margins on account of lower gas prices. So Somani Ceramics continues to, go from strength to strength. Info Edge came out with numbers yesterday, a pickup in IT hiring. So billings have improved, and Info Edge too has added on to yesterday's rally. And Vodafone Idea investor call is currently underway, started at 2:30 p.m. Some details are up for you on your screen. Vodafone Idea has moved up 1.5%, stable numbers, and Industars too is seeing some buying. We will get into a break. On the other side, we'll get chatting with the management of Embassy Group on the back of a recent downgrade coming in.
Mr. Jeetu Veerwani.
Yeah.
क्या पूछना?
Sector in our pecking order, we see two-wheelers having a higher single-digit or lower double-digit kind of growth rates, followed by PVs and followed by CVs and tractors. I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side, I think that's where you start scanning businesses from. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
On an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more than 1,000 wagons. This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. When we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY 26, then our EBITDA margin should see an improvement, and we should be targeting between 13 to 15% EBITDA margins.
One of the big lessons I learned, in addition to what I learned from my mother and father, was the guru, John Templeton. He was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. He was a very careful with money, and he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. I learned a lot from him regarding the need to be frugal and not too...
Okay, welcome back. The market is up 70 points, so it's a pretty healthy screen out there. Now, real estate developer Embassy Group is in focus. The ratings agency Acute has downgraded the long-term rating for the entity to PPMLD Acute C from where it was earlier. The firm says that the rating comes due to past delays in servicing of term loan obligations. We have the promoter of the company, Jitendra Virvani, is chairman and Managing Director of the Embassy Group. Mr. Virvani, great to have you with us here. Good afternoon. Thanks very much for your time. Prashant this side. Could you tell us where this is at now and what steps are you taking to sort of try and rectify the situation? And if you could sort of tell us some numbers. I mean, what's the total debt outstanding and what is the amount which is sort of past due? And the second part is, from a listed stock perspective, this transaction, as far as Indiabulls real estate, does that get into a bit of a question mark?
But firstly, let you know that the MMLD which we're talking about has never been delayed and has always been up to date paid. So there's never been a default on it or never delay on it. So, and I think the rating agency is talking about some past issues, but as far as we are concerned, all our loans are up to date paid. And this report probably is based on some of the past transactions. But especially when you mention the MMLD, that is complete, never been ever delayed or has been any issue on that loan itself. Just to let you know that we've actually cut down our debt by about close to 2,900 crores last year. And between this April and May 30th, also we're paying down another 3,000 crores. And the idea is to pay, we have track and visibility of paying another 1,500 by December and bringing our debt down substantially. So as far as the company is concerned, we have no issue and all our loans are up to date paid. This won't affect Indiabulls in any way. But unfortunately, it's very unfortunate, which the rating agency, I think, in spite of bankers also intervening, this has happened. But that's why I thought I'll come on your channel, which I normally avoid doing.
This rating is downgraded. Is 3 days old. I mean, this opinion. So,
yeah, 3 days old opinion. But our records are records, right? I mean, that's something which you can't change. If we've paid, we've paid. Right? It's not.
So what?
That's something that you can change.
So how much is outstanding now? What's the debt outstanding?
So outstanding after May would be close to about 8,900. But also, please understand, we're a construction group which has several partnerships with PEs like Blackstone, and there are a lot of projects which have like joint debt in these kind of companies. So it's not only debt which belongs to Embassy, but anyway, as far as the market is concerned, all our loans are up to date paid, whether it's any of our subsidiaries or any of our SPVs, everything is on track.
Ani, just a question. You said the current debt as of now would be 8,900 crores and you're planning to, keep reducing it in tranches. End of the current fiscal year, 31st March FY25, what's your target? From 8,900 crores, where will that debt level come down to?
Please understand our business. Our business is mostly commercial real estate. So we have LRD loans, which LRD loans are serviced by rental income from different marquee companies, which are income which is not part of the REIT, not part of any other company, but still held by us. And I think out of the 9,000, about 1,500 are just LRDs. Then another 2,000 crores is against our REIT units, which are fairly well covered in terms of valuation as far as the collateral is concerned. And other of our debt is against finished inventory, which is residential inventory, and most of our loans have a huge cover. So we have far excess of properties in compared to the debt we have, and these are all each project linked debt at different SPVs. So, I mean, if a company has to grow and you want to be progressive and ahead, of course we have to take debt, but they're all each project-wise service, so they're not independently separate in the company.
No, I understand. I understand, Mr. Virvani, that this is all backed by different forms of different types of projects, and perhaps a lot of it would be secured backed by collateral. But just to understand the number, what do you think will be the net debt position by the end of the current fiscal from 8,900 crores right now? Just so that we have numbers clear with us.
So, like I mentioned earlier, we are paying down close to 3,000, which brings it down to the 7,000 number. By end of the year, I think it'll be close to 7,000.
But you do acknowledge that this report may be referring to some past dues, some past delays.
Right.
What period are they referring to?
So they're referring to last year, April, May onwards. So I think, which I agree, there was a little bit of fluctuation, but now we've made good all our transactions and all our bank loans are up to date. So I don't see any reason, but it's unfortunate, but we will probably have to bear with it.
Of last year, April, May of 2023, there was some delay on your parts in making the loan repayments.
Yes, that's true. But there was never any NPA situation, and all these debts are only cash flow linked. So there were some delays in certain deals being closed in or delayed.
So what was the reason for the delay and the extent of the amount that was delayed? What amount are we talking about?
There are certain government clearances. Most of our delays are linked to government clearances. Right now also we are doing a transaction where we are awaiting CCI approval, but some things take time, and it's really not much of a... And basically there are interest delays. That was in 23. But since mid of 23, we've been updated with all our accounts, and as today when I'm talking to you, just particularly April, May, we actually paying down 3,000 crores just between these 2 months.
Okay. Mr. Virwani, thank you very much for that clarification. That's the word coming in from Embassy Group. Let's move on and get back to the market. Still holding on pretty much to all its gains. 65 points up on the Nifty, up 0.3%, mid-caps up 0.7%. Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, is now with us on the show. Thank you, Rupen, for joining in. First, what have you made of the big sell-off that we had over the preceding few weeks and the recovery which has ensued this week? And the consistent FI selling, what does it tell you about the market that we're in currently?
Yeah, hi, good afternoon, Rima. So, yes, in last 2 months or so, the Indian markets have seen bouts of volatility, and the India VIX has gone up significantly. And probably, I think all of us were expecting. So, some amount of volatility was linked to the potential outcome of election results, which led to some volatility. But I would say the FPI outflow is more linked to global factors, particularly in last 2 months or so. I think the big global trade till beginning of this year was ABC, that is anything but China. And what has happened is that Chinese market probably in Jan or Feb reached that level. Probably the PE of Chinese market was lower than the price to book of Nasdaq. So a lot of other factors were there. So a lot of money tactically has moved to China, while it might not be a structural trade, but clearly there's a tactical opportunity. So a lot of FPI went there. And in India also, after the big run up in last 2 years, market required a breather. So probably we are witnessing that. But again, between now and June 4th, you will again see huge bouts of volatility, basis the noise level around elections. But that is the way, that's the nature of the market, and we have to live with that.
Hi, Rupen. Good afternoon. Good to see you in ABC, right? Earlier it was anything but China. That seems to be reversing a little bit, and maybe that's what's causing the outperformance in the Chinese market. But let's focus on the auto space. Today, one of the big gainers is Mahindra & Mahindra. We spoke to the management earlier today. They are saying that they're going to increase their market share in the SUV segment, which is already at 18%. And they're saying their dominance in the tractor segment will continue as well. You have been fairly bullish on autos, right? At current reckoning, how are you positioned and what's your preference?
Yeah, hi, afternoon, Nigel. So auto, in fact, for now, last 6 quarters, if I'm not mistaken, on a consistent basis, I have delivered very strong numbers. If you recollect, almost say 18 months or 2 years back, the narrative was chip shortage, commodity prices, high oil prices, and auto sector probably was at its multi-year low from a valuation perspective. And today, as we speak, it's a complete 180-degree change wherein, the momentum has picked up. The PVs sale in India, if I were to take for the last financial year, is at its all-time high. Two-wheeler volumes are up, but still the two-wheeler volumes are up 7 to 8% lower than its all-time high volumes of 2019. So in the current scenario, probably last 2 quarters, 3 quarters, what we have seen, the margins have gone up, and also the mix has been fairly good. We are seeing higher amount of premium vehicles getting sold. So the numbers are pretty strong, and stocks have done pretty well. From here on, what we have done, what we believe that some of the auto sector will take a breather for this year, that is financial year 25, and some of the tailwinds which they have will no longer be there. So in the current juncture, amongst the pecking order, we prefer two-wheelers, the PVs and the other segments. While the narrative is very strong, but we have taken some profits out there because as they say, the good news and good price is seldom there. So while the news is good, but probably now the price and valuation of some of these are at its all-time high on a valuation level. So we have taken some profits, but as a pecking order, we still prefer a two-wheeler to a PV at this juncture.
Okay, Rupen, hi. Great to have you on the show with us today. So, the other area of the market that has had a pretty good run at the end of the earnings season, or almost getting to the end of the earnings season, is the entire capital goods space, right? And here we've been trying to understand how market participants are viewing valuations for stocks like ABB or Siemens or some of the other large conglomerates. Because Q4 has been great, but the stocks have also rallied. Most are up 80, 90, maybe even 100%. What are your thoughts on the sector?
Yeah, hi, afternoon, Survi. So whenever a sector comes into reckoning, with both earnings as well as a strong future earnings, we have historically seen, be it in any market or be it in any sector, the sector gets into a valuation, sometimes in a bubble valuation, and probably that is what, to some extent, we are seeing there. Having said that, if you see the entire, you're right, the entire capital goods pack, if you see, if I want to compare it with, say, 2003 and 2007 cycle, wherein on an average, their margins doubled, their profitability was up 3x, the stocks were up anywhere between 5x to 10x. I think something similar is happening as we speak, and wherein the numbers are pretty strong, and all of these commentary has been pretty strong. So right now, not only strong numbers, but the order book is very healthy. And assuming the current rate of execution, the growth will be pretty strong. So that's the way it is. And I would say, while valuations are definitely very high, but it will continue to remain high till such time we see some earnings which the street gets disappointed and they decide to derate the sector. But at this juncture, it's a very strong momentum. But we have to be also mindful that we can't keep on paying endlessly a very high valuation to that. So at every level, we are also taking some money off the table. But I would say we also want to be a party to this sector, because this sector, at least for next 3 to 4 quarters, will have a very strong momentum of earnings.
Okay, let's get to the big stock of the day. The big story is M&M and the subsequent positive commentary coming in from brokerages. Sudarshan joins in with a roundup of the numbers and the comments. Sudarshan.
So it's been a strong showing by M&M, and even apart from earnings, even guidance is strong. And on the back of both these cues, M&M is today top Nifty gainer, and it has gained almost up to 8%. And if you talk about 2024, it has been the biggest outperformer in the auto pack and gained almost 45%. And in the last 1 year, market capitalization of the company has almost doubled. Now, talking about the guidance, FY25-26 SUV exit capacity is seen at 64,000 to 72,000 per month, and company is planning to bring 7 new battery electric vehicles and 9 ICE SUVs by 2030. And for tractor, company expects the growth for the industry at 5%. Now, talking about brokerage views, GS has a buy rating with a target of rupees 2,700 per share. It says core auto farm revenue and EBITDA have come in 5 to 9% higher than its estimates, and catalysts going forward will be XUV 3XO, Thar 5-door and growth in tractor segment.
Jefferies has upgraded the stock to buy and target is increased to 2,910 per share. It says tractor industry is now in the late downturn and SUV portfolio continues to strengthen and Q4 EBITDA has come in 13% higher than estimates. And considering all this, it has upgraded FY25-26 EPS estimates by 16 to 21%. MS has an overweight call and target is increased to 2,665 per share. It expects company to remain fastest growing PV OEM in FY25 and re-rating potential it sees for auto business and farm business sentiment has been improving as per Morgan Stanley. Last is CLSA, which has downgraded the stock to sell and target is raised to 2,312 per share, and this downgrade is because of the recent run that stock has seen.
Got that. Thanks very much. I think CLS is a bit of an outlier, so thank you for that. They are bearish, but most of the other brokers on the street very, very optimistic on Mahindra and Mahindra. Ruben, I wanted to discuss this whole aspect of the rural recovery with you because there's been very consistent management commentary. M&M is talking about recovery in tractors. A lot of FMCG companies have seen either in this quarter itself, their rural growth has been better than urban, or they're pointing towards better recovery on the rural side. What do you make of it? I mean, are you finding this believable? Do you think rural's time has come? And if yes, then how would you play the rural recovery?
So, this rural recovery is something which, probably a lot of management were expecting to happen, beginning of the years in the run up to the election, but it has not yet played out. But clearly now we are seeing visible signs. And as you rightly pointed out, a lot of management commentaries alluding to that. And the sales numbers and volume numbers of rural of some of the companies are definitely picking up. And to some extent, they are also even better than the urban area. So what we believe post-elections, we have already seen green shoots. So we will see that picking up in the second half of this year. And to play the sector, if you see, within two-wheeler, I have said we have been constructive on the two-wheeler segment. So two-wheeler, while the volume growth has been strong, good amount of replacement demand, we are clearly seeing it. And if the rural recovery comes through, we will see that picking up significantly, leading to a better volume growth for them. So that's one way to play at it. Some of the consumer names, staple names, have already seen, some bit of uptick in their stock price basis, the commentary of the management. So that's the another way to look at it. But I would say staples would be more a defensive sector. If there is a huge amount of global uncertainty, if there is any election-related uncertainty, I think staple will also act as a cushion in the portfolio. So probably these are the couple of ways in which one can play rural, and we believe probably second half should be better for rural as compared to what we have seen in last 1.5 years.
Okay, all right, Rupen, thanks a lot for joining in. Indeed, rural has made a comeback, and they've made a comeback in style. So maybe the near-term things look up. Appreciate you joining in, Rupen, and filling us in with all those sector analysis that we just did. Well, the markets are seeing a follow-through session, so good time to get in Nimesh to tell us what is he picking up. Nimesh, what's the buzz?
Well, Nigel, today will look like a very quiet day, what we saw compared to what we saw yesterday, right? Massive volatility was there yesterday. It's a trending day, so to speak, today, but the good part is that the broader markets continue to outperform. And this is backed by FI buying as well. For the last few days, I've been constantly getting a feedback that there is delivery-based buying in, say, like mid-cap names from larger institutions. So the outperformance in broader markets is backed by some bit of FI buying as well. I guess the big reactions to earnings continue. So a lot of earnings-related stocks are buzzing in trade, whether it's M&M, whether it's Crompton Consumers, or for that matter, Info as well. So that trend also seems to be pretty much on track. I guess technically too, we are just about that crucial resistance of 22,400. If that sustains, the feedback is maybe you'll see further short covering in the days to come. So that's something to track going forward. But I guess from a flow perspective, again, it's a mixed day. But a bit of selling in the technology names, no specific reason. Looks like it's more of a sector churn. But I guess the trend seems to be purely on the PSU side and a bit of momentum in the broader market stocks.
All right, Nimesh, on yesterday's session, you had various reasons that people were attributing to why we did see the bounce. And there were so many reasons out there, so you could pick and choose why the markets did bounce up. But individual stocks, what are you picking up?
Sure, in terms of individual names, the first stock on my list is restaurant brand Asia, RBA. That stock is buzzing into it after a large block, nearly 40-50 lakh shares got changed hands. I understand it's a clean out trade from a leading FI fund, and some domestic mutual funds were buyers. So maybe the disclosures could be quite interesting in RBA today. The second name is Navin Fluorine. Some bit of rebound is seen in the chemical names. Navin stands out in terms of good buying interest, But for Naveen, the next big trigger to watch would be the appointment of the new MD, which can potentially come very soon. So that's something to track going forward in that. The third name is Bharti Airtel. Well, the focus seems to be on Vodafone and the conference call. Bharti Airtel is well bid by larger institutions for the last many days. And even in today's trade, there is good delivery-based buying happening. So expect high delivery volumes in that particular stock. And the last is BPCL. Within the PSU names, while it's consolidating, it's pretty much quiet, but there is accumulation happening in BPCL. I understand a leading long only fund is an active buyer, and hence expect high delivery volumes in BPCL as well in today's market.
All right, got it. Thank you very much, Nimesh, for all the action from the street. We do have to take a quick break on that note. Come back on the other side, and as always, we'll get you some final trades with Mitesh.
Money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me. I would say number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was a lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest holding. 14 other people found a mention on Monday evening courtesy of that hoarding. A mention in the list of the deceased. Blame games have begun, as is the case in most such tragedies. Additional Commissioner of the civic body told CNBC-TV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Another heartbreaking tragedy took place in 2017 when at least 23 people were killed and another 39 were injured in the stampede that took place on the earth.
Welcome back. Well, the market's managing to hold on to most of the green for what it's worth. 70 points higher. It's not a bad looking screen. In fact, closer to 20,500 on the index. There we go. A little bit of a dip from the higher levels, but the bulk of the gains still intact. Mitesh is with us for a final check. Mitesh, so what do you think? It's been not easy for the bulls, and we were discussing how everybody's getting whipsawed all over the place, but slow and steady, almost 22,500. What's the final advice now?
So, Sumi, I think, I would still maintain a positive bias purely because of the fact that while it's been choppy and volatile, the drift has been on the upside. And ever since we've managed to stay about 22,200, I think it's been a positive market. JSW Steel is a BTST. Keep a stop below levels of 899. Look for a 925 as the target area. And the other one which I like is Lalpath Labs. That's a BTST with a stop at about 25.25 for targets of 2,600.
Mitesh, just a few more, stay with us. I just want to ask you one more sort of question. Look at some of these names, if we can have these introduced. So shipbuilders, right? Big move. Mazgaon, Cochin, Garden Reach, all three are spiking. And how? I mean, it actually started in the morning with just Mazgaon, but it's never won in that space. The other two, of course, are also participating. Cochin and Garden Reach will come up. Then a lot of, of course, they're all government companies, but more government companies, right? There's Container Corporation, Bharat Dynamics, BEML, some more names which looking good, which are up and about. There is NLC India. Again, government, Moil, which is doing well. And then you can look at something like a IRFC and RITES as well, which are doing well. So this is, I mean, 9, 10 very strong volume-led gainers from the government space. Sobha and Brigade are the other two real estate names which are running up for the second day in a row, apart from what we've kind of already sort of mentioned and discussed here. And SKF India, which is the bearings, which makes bearings, that is also up. Yesterday, of course, you had, all three, Timken and SKF, the biggest bearing companies doing well. Today, I can spot SKF, which is continuing with another 5.5% pop. Mitesh, anything here from the list which stands out?
So I think Prashant have taken too many names. In fact, all the bearing companies, came onto my radar as well. I think you were discussing them and highlighting them in the morning also. Most of them have, broken into fresh highs and they are clearly showing signs of continuation. So SKF, I think, again, you can't buy them because the kind of run-up they've seen this week. SKF, for example, I think it's already up by about 20% or so in this week, and Timken is about 22% up. But if you look at the chart structures, I think they are clearly suggesting much higher levels from here. So I would not be surprised to see a 5,000 kind of a number on Timken if you hold it for about next 8 to 10 weeks. Similarly, SKF bearings, you look at the price targets, I think it's already done about 6,000, and I think it's already heading towards the initial target of 6,250, but I think eventually it's heading towards 6,800 plus level. So very, very positive. Just stay put over there. Wait for some kind of pullback and consolidation, and then once you get that low of that consolidation, that becomes your trailing stance.
Mitesh, Brigade has broken into a fresh high, fresh all-time high today. I mean, it's just a 5, 6, 7 day kind of a fall, but today it's back at a new high.
So, very positive pattern, Prashant. In fact, we had a buy on Oberoi Realty, and that is the FNO stock. And while I was tracking Brigade as well, we didn't fire a buy, but I think the pattern is very good. See, if you look at the stock price, it made a high of 1108, I think way back in 7th of February, and then a high of 1150. Join those two tops and you got a rising trend line, which the stock has broken out today. So buy with a stop at 1140 here, and I think 1350, 1360 should be a trading target, but eventually the positional target could be in excess of 1500.
We have Hemang Jani also with us on the show. Hemang, afternoon, and thanks so much for joining in. First, what have you made of this resurgence, this strength in... Okay, before we get to Hemang, do hold on. Mumbai votes in the fifth phase of the polling on Monday. The traditionally maximum city has been known for a lower voter turnout. Hormuz Patakia is now going to take a look at the 6 seats on offer and what history shows about how Mumbaikars vote.
Mumbai. We call it the city that never sleeps. But it would not be wrong to say that it can also be called the city that barely votes. The famed spirit of Mumbai takes a back seat when it comes to showcasing that at the polling station. It's unfortunate that citizens of the maximum city show bare minimum turnout on polling day, which for some is just another holiday. In 2019, the 6 seats of Mumbai saw a turnout in excess of 50%. Nothing much to write home about such a turnout, but the fact that the turnout in the earlier elections was even more poor, that became a talking point. But a lot of water has flown under the bridge between 2019 and 2024. We've seen 2 horrific years of the pandemic, the collapse of the MVA government in the state, the split in the Shiv Sena and the NCP. There is way too much at stake for everybody involved. Let's take a look at all of these 6 seats individually, and starting up with Mumbai South. And it was the first time in 25 years when the overall voter turnout crossed 50% in 2014. The figure stayed constant in 2019 as well. In between, it fluctuated between 40 to 50%, even dropping below 40% in 1991. If Mumbai South has seen poor turnouts, Mumbai South Central has been equally poor, if not more. Similar to Mumbai South, the turnout in 2014 crossed 50% for the first time after 1989, and the 55% turnout seen in 2019 was the highest seen by the seat in 30 years. Known to be a traditional Shiv Sena bastion, it will be interesting to see which faction does the electorate vote for this time around post the split. From the south of the city, we move northwards, and Mumbai North Central saw a 50% voter turnout in 2019 for the first time after 1998. Now, since 1989, the total electorate in this constituency and in fact across all constituencies of the city has increased substantially, but sadly has not translated to the polling stations. The electorate of this seat have given opportunities to MPs from almost every political party, including the RPI, when Ramdas Athavale represented this seat between 1998 and 1999. Now, Mumbai Northeast is, as they call it, the OG swing seat before 2014. It is also the only seat in Mumbai which had seen a 60% voter turnout in an election in 1989, a record it managed to hold on to until 2019. Now, besides that 60% turnout in 1989, the turnout in general in this seat has been slightly better compared to the other seats in the city, as the turnout had crossed 50% in 1998 as well, before being repeated in 2014. Another interesting aspect of this seat is that Subramaniam Swamy is the only MP to have won this seat back-to-back in 1977 and 1980. Now, even the BJP, who has won this seat both in 2014 and in 2019, has not repeated its sitting MP and is continuing with that trend this time around as well. On to Mumbai Northwest, a traditional Congress bastion till the time the late Sunil Dutt contested on this seat, winning 5 times between 1984 until his death in 2005. Here too, the 54% turnout in 2019 turned out to be the highest in 3 decades. This seat will also see a Sena versus Sena contest, with both the Uddhav Thackeray faction and the Eknath Shinde faction fielding their candidates to woo the electorate. And lastly, to Mumbai North, the only seat to have given a 60% voter turnout in Mumbai after 1989, and that happened in the last election in 2019. Now, this seat is a seat that has traditionally voted for the BJP for 5 terms for Ram Nayak before picking Govinda and Sanjay Nirupam from the Congress party in 2004 and 2009 respectively. However, Gopal Shetty of the BJP wrested back this seat with record margins in both 2014 and 2019. Shetty, however, has been replaced this time around by Union Minister Piyush Goyal. Aside of the seats, there is one key deciding factor in this election, and that is the female voter. While the total number of female voters has consistently increased since 1989, that figure has not translated to the polling stations, even falling below 40% on 2 occasions in the last 3 decades. It is only in 2014 and in 2019 that the number crossed 50%, and the hope is that the female electorate will not only surpass the 2019 tally, but also break the 1989 record of 56.5%. Interestingly, the 2019 turnout saw an increase compared to 2014, even as the absolute number of female voters saw a decline. This time, the citizens of Mumbai have not one but 2 chances to change this perception of treating the voting day as a holiday. One on the upcoming Monday and the other being later this year for the state assembly polls. So, the date is drawing closer, the ball now lies in the court of the voters, and it is for them to ensure that the maximum city does not end up seeing the minimum turnout.
Thank you very much for that. Guys, go out there and vote. Use your Monday wisely. It's not just a holiday. Get into a break. 5 minutes left for markets to close.
Railway station, now known as Prabhadevi. The army sprung into action soon after building a new bridge just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced, and we never heard about that incident again. Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of. A few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com.
Welcome back. Well, we have a final conversation lined up for you with Hemang Jani to take us through the close this Friday afternoon. Hemang, great to have you on the show. So I want to start with some of the key themes of this week. And one of those themes has been PSUs, specifically railway stocks. And even today, I mean, many of them are still surging. The weekly gains could be 9-10%. Tell us, what do you think of this? Is this a resumption of the rally? And would you buy any railway stock now?
Yeah, good afternoon, Surbhi. So two triggers I could think of. One is that the overall capex when it comes to railways continues to be on a higher side, 2.52 lakh crore. Secondly, when you look at some of the companies which have delivered numbers and where, specifically the companies which are catering to the railways. So whether it is BML or Timken, some part of, let's say, Siemens and ABB, all these companies are telling you that the order inflow from railways continues to be very robust. So I think that is what has triggered off some sort of action across these names. And if I have to choose some of the companies when they've already moved up, I would go with RVNL, BEML, IRCON, and Titagar. These are the names where we still have a positive view and we think that there is a case for a 18 to 22% kind of an upside.
Hemang, afternoon. Info Edge was a bit of an underperformer while IT hiring had slowed down substantially and it showed up in Naukri's billings and numbers. Do you think the tide is turned and is there upside in Info Edge from current levels?
So I think in case of Info Edge, the numbers were okayish, but the fact that the Naukri part, the outlook is turning a bit better. And when you look at the 99-acre, there is a significant improvement in the operating performance and people have started valuing that vis-a-vis the platform companies like Zomato and PB Fintech. So I think a combination of these two has kind of brought some attention. We do like Naukri in the wake of the fact that the traditional IT services companies, you will not have too much of an excitement. But for something like Naukri, you have a positive delta and the re-rating in case of the 99 acres.
Okay, all right. Hemang, unfortunately, really short on time, so it's not as long as we'd like, but we'll have a longer conversation with you next time. Enjoy your weekend. And yes, I know you're going to go and vote. We're urging all of our fellow citizens to go and do just that.
And not to forget, we're going to be here tomorrow as well.
Absolutely. We'll remind you again tomorrow to go vote on Monday. Yes. But yes, tomorrow is a truncated trading session and we're going to be here tomorrow to take you through it. But first, today's close. And the close is not too bad. The market, as we've been saying, has managed to grind and inch its way higher through the course of the week. So the Nifty, as of final count, with a gain of about 60 odd points today. M&M is the big star with a gain of almost 5.5–6%. It's got some company in the form of a Grasim, JSW Steel ahead of numbers, looking quite smart as well. You've got Maruti on the upside and some of the heavy hitters like Reliance, SBI, all contributing on the upside. So all in all, a good tally. On the downside, I mean, just not too many names. Bajaj Auto and Hero Moto from the two-wheeler space seeing some profit taking. But the bigger story, Reema, obviously in the mid-cap today.
Oh, absolutely. 4.1% gain for the mid-cap index this week and 4.5% for the small-cap index. The big winner today includes an MOIL, Crompton, Keynes Technology, a couple of PSUs like IRFC, IFCI, NLC, Gale. So these stocks continue to see buying. Concord too was up close to about 5%. Throw in a Cochin Shipyard, which gained close to about 4.5%. On the way down, some softness visible in Aadhar Housing Finance after yesterday's big gains. But it's the wrap of the day, but not of the week. We'll be back tomorrow for the special trading session. But before that, we'll after the short break, we'll get you our special editors roundtable. Stay tuned.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with Despite seeing a bout of volatility, the Nifty and the Sensex ended with gains of over 2% for the week. The mid-caps outperformed frontline indices this week, ending over 4% higher. On Editor's Roundtable today, we'll discuss if the worst is behind for the chemical space. We'll also do a deep dive into CG Power's success story. That's not all. We'll also take a look at all of the stocks in focus due to India's manufacturing push and lots of big, news that took place in the week gone by. I'm Sonia. With me, there's Prashant, Anuj, Nimesh, and today we have a special guest in our studio. There's Kenneth Andrade, the founder and CEO of Old Bridge Capital Management. Kenneth, thank you so much for joining us. But folks, it's been an interesting week, right? One up day, one down day, but by the end of the week, the market managed to stay above that 22,000 mark.
Absolutely. I think, Sonia, this week was very interesting technically because the market had signs of some kind of breakdown in between, but then especially from the 20-day exponential moving average, which is very crucial level. And then the kind of bounce that we had yesterday on the expiry day, and that sort of continued today. And keep in mind, the market's trading tomorrow as well. So in that sense, it's been a good week. It's still not over, of course. But yeah, I think all the boxes were checked as far as the bulls are concerned.
Towards the end, actually, there was a little bit of interest which came in, right? Otherwise, every day you wake up, the market opens 50 points higher, and by close, you're down 100, 200 points. Yeah. And this especially when US markets have been doing well. Exactly. The rates in the US have repriced aggressively lower.
Correct.
Dollar is down into 104, 105 or so dollar index. But we're starting to respond, correct some of that underperformance.
I think the overarching theme is whether the current government comes back to power with a thumping majority or not, right? That's been a little bit on the market's mind.
Absolutely. I tell you, in fact, I'll go through what actually happened this week, Sonia, and in that I think I'll point that out as well. This was a week of stock parties, so much that, market's trading tomorrow as well because we want to have one more day of party. Of course, tomorrow, keep in mind, all the stocks will have maximum of 5% circuit, even if you are F&O stocks. The mid-cap index was up 4% this week. The small-cap index was up 5%. But within that, look at what happened. Realty index up 7%, metals index up 7%, capital goods up 8%. And earnings reactions were extremely volatile. M&M rallied 15% this week. Bulk of it actually happened post-earnings. Tata Motors, on the other hand, was down 10%. The other big talking point this week was really the return of PLI stocks, EMS stocks, the way today, stocks like, Dixon and Keynes rallied, despite not so spectacular numbers. What's that telling you? That is telling you that till last week, the market's fear was whether the BJP or NDA is coming back or not. I think the market is now pretty sanguine about that. I think that this week, that question got more or less answered in terms of what the market believes. Right or wrong, we'll know on the 4th June. But I think at least the risk factor that that was opening up, I think that's now slowly but surely disappearing from the table. That's my sense.
The other big trend for this week was the return of the manufacturing stocks. Like a lot of capital goods stocks were buzzing, and one of the reasons explained was that maybe the new NFO money is getting deployed. Nobody knows whether they've put in any money, but the stocks are up 10-15% and on large volumes as well. So looks like the retailers have parted earlier than what even the fund would have started participating. But that was one big sector which has seen a big outperformance on just an hope that the new NFO money will just get deployed very fast and very sharply into this capital goods stock.
Actually, let's bring Kenneth into the picture. Kenneth, what's your sense? You've seen so many market cycles. We all know that the election result impact is there for a month or so. After that, the market just moves on. But what's been your sense this time?
I must say, corporate earnings are much stronger than people anticipated, right? And over a broad spectrum, the macros look absolutely good because, simply put together, India is running out of capacity. So the much talked about private capex that we were talking about, I think that's around the anvil. And the credit growth that will go to manufacturing, I think you'll see that coming through in 2025 and 26, and that will be the first year of that happening. I think that all optimism is boiling down to what's happening with capital goods at this point in time.
I think back in 2021, I met Kenneth and he was running some numbers on Excel, and exactly what we were talking about. Her capacity utilization is going to come to a level where you need to start to put up capacity. And I think on the industrial side, as Nimesh said, I mean, they're all adding capacity. But on elections, as Anul said, let me frame that question differently. Fair to say markets, I mean, their collective wisdom, right? And how they go into the election, they'll get the verdict right? There is the odd 2004, but that's once in a while. Otherwise, they usually get it right.
You get it a number of times. I mean, I've been stopped out on volatility both ends. Over-invested at points and under-invested at points in time. So you get it at both ends. So that volatility is going to be in continuation at least for the first couple of
but the broad direction that gets right. That's what I'm saying. I mean,
from an economic standpoint, there's so much of tailwinds that there's so much of momentum within the entire economy that's going to move right. Now, whether it's a thumping majority or whether it's a majority, I don't think that's going to be that's going to change the situation quite dramatically there.
But is it like a situation where the market is just waiting for this event to move out of the way and then sort of chug along on the upside? Is that a good way to look at it?
Any environment or any large event, the market will wait for it to get out of the way. It will trade in a particular direction, and that's what's happening.
So if this uptrend is intact, right, just assume whatever the outcome of the election, if the uptrend is intact and we resume the uptrend post-elections, then what are the spaces that you think where still there is some valuation headroom?
That's a difficult one. Okay, because I mean, let me break it down into a number of segments of the market that is there, right? First, you take capital goods, right? We had a brilliant run last entire month or last entire quarter. Now, the strange part of that, or every market throws out different statistics. This market's thrown out quantitatively a very different set of numbers. If you take all the large MNCs that are trading in India, right? If you take the bearing guys, all the bearing companies, they are trading close to between 20% and 30% of their global market capitalization. All of it is sitting in India. Right.
You mean the global market, 20% of the global market cap is trading here?
Yes, yes. And if you, except for one company in India where the domestic market cap is bigger than the global market cap is Maruti.
So there's Timken, there's Schaeffler, there is SKF, right?
Yeah. So Timken and SKF is almost 30% to 40% of their global market capitalization. I mean, even larger companies like ABB, you already hit that number.
Yeah.
Okay. So like in any expectation of momentum-driven environment, stock prices always represent the momentum first. Earnings have to be back-ended.
Correct, correct.
I think that's what's happening as far as one segment of the marketplace is concerned. Now, everything that was there in momentum in say, the private banks at the end of the last decade.
1 minute, let me just complete that point. Are you saying 20-30% is kind of a ceiling? Is there a takeaway from that?
There's no takeaway from that, but those businesses are significantly larger and have all the technology with them.
Okay.
Okay, and they trade between 10 times and 15 times multiple at the global cycle. So if I complicate this argument a little bit, and if I take the terminal value of these businesses trading at 10 to 15 times multiple, I think a lot. These companies have to do a lot to justify where they are standing today.
Okay. Maybe Prashant, that explains why Timken Global had to sell 24% in Timken India, and he explained, right? It was an arbitrage trade between the global company and the Indian company. So that's pretty much
that was, I think, Whirlpool. But it's the same kind of
thing.
Large transaction happened.
So in the previous cycle, you had Whirlpool and the domestic appliances.
But the takeaway is that it's pricing in a lot. That's a takeaway.
It's pricing in quite a bit.
Okay. Well, there's a big theme that we're tracking, right? And Nimesh is going to talk about that, which is the chemical space. There have been some brokerage upgrades on some stocks, but the key question that we're asking is, what is the future trajectory of the chemical stocks? Nimesh, you have some details that you fished out for us?
Well, Sonia, the key reason I'm putting this out is because most of the chemical companies' results are out, and the big question or the debate in the minds of the investor is the worst over for the chemical sector. So let me just go to the wall and put some data and explain as to why I'm saying this. So the big question that we're asking is the worst over for the chemical sector? Is the worst behind? Now, there has been few brokerage reports in the last few days where they've turned a bit bullish on the chemical sector. But if you look at the management commentary post Q4, most of the managements do believe and they have a mixed feedback, and they expect the recovery to be in the second half of FY25. And even when there is a recovery, it's going to be volume-led and not price action. So the margins could still be under pressure even in the second half of FY25. That's a management commentary. But look at the chemical as a space. There has been short-term pain for the chemical sector stocks, but over a longer-term period, they've been massive wealth creators. The next table will show you what I'm saying. Over the last 2 years, most of the chemical stocks have been under pressure. Aarti is down 12%, Atul is down 28%, Navin Fluorine is down 14%, and so is Vinati down 12%. But over a 10-year period, they've been massive wealth creators. Same is with UPL. The stock is down 35% in the last 2 years, but it's gained 15%. But there has been some notable winners as well in the last 2 years. PI Industries has been the best performing chemical stock over the 2-year period, up 54%, despite the fact that it's been a 30% CAGR over the last 10 years. Deepak is up 25%. Again, that's a big wealth creator. So is Tata Chemicals, and SRF marginally up in the last 2 years, but there's been a big recovery over a 10-year period. But look at the valuations now. The 1-year picture, 1-year forward earnings will show up for you. SRF is trading at close to 37 times. PI is trading at close to 30 times. UPL is trading at close to 19 times versus 5-year average of just 12.5 times. Deepak is at 32 times. And so is Tata Chemical trading at close to 27 times on 1-year forward. Even if you look at the other names like Aarti, Atul, Navin and Vinati, all are trading between 35 to 45 times on a 1-year forward. So earnings-wise, so in terms of valuations, they're still not very cheap. Purely going by the valuations, looking to the 10-year averages. But as I said, some of the brokerages have turned positive on the chemical sector. UBS put out a note on the chemical sector. They say that the investors may be ignoring some strong niche positions and growth opportunities within the sector. They are seeing some modest volume recovery for many of these companies, and hence they initiated a buy report on PI indices as well as on Navin Fluorine. Interestingly, even Morgan Stanley put out a note on Deepak Nitrate a few weeks back, and they've actually double upgraded the stock to overweight now. They have a target price of close to 3,000. They see a potential 20-25% upside from here. But the key is that they believe that the earnings can double for this particular company by the next 4 years. So it's been a mixed feedback from a lot of analysts. But from a long-term perspective, chemical companies in India have been big wealth creators. So the question is, are we close to the bottom? If Kenneth, you can have if your views on whether the chemicals is the worst behind for them.
The worst might be behind for them. Okay, the pricing pressure that was there in the segment, it's moderated quite significantly. So obviously you've got to stabilize here first, build an entire base, get your volumes back, go and mine more customers, and then just wait for a recovery.
Yeah.
I mean, key to all of this is what kind of capital investment has gone in this entire segment, and all of that will start coming on stream over the next 2, 3, 4 years, and that's, I think, will what's contribute to it all. So the huge optimism probably is off the table. There's a little bit of hope creeping in because a lot of these companies have not done too much over the last couple of years. But I think the big upside that we've seen in the past 10 years, it may not be replicable. Okay. So I'm a great believer of reversal to mean, right? And these valuations necessarily have to correct. Okay, businesses have to consolidate themselves, balance sheets have to get into place, and then they have to optimize capacity. So I'm not too sure about 2025, but maybe in a year or two you will definitely see this segment recovering.
Just to sort of carry on Sonia's question to you, where are the opportunities? We started talking about the capital goods and the bearing companies, but identify 2 or 3 spots for us. Where are you putting money to work?
You see, when the entire world is in this large capex explosion, right? There are 2 segments that is driving capex globally. One is obviously defense. You take any part of the world, any country that is out there, including us, the focus on defense is up there. The second one is power and the shift into new energy, and that's driving the second large leg of capex. So if you put these both together, okay, all of this is capital intensive. All of this is it needs capital. It's hugely capital intensive, and more or less it's very commodity intensive. So what we don't have in India is a lot of these mining businesses that are directly listed, or most of them are owned by the government. So at the baseline, our preference is largely commodities. Okay. I think that's where valuations are reasonable, not cheap. That's where the balance sheet structure, okay, is completely different from what it was in the last decade. I mean, just steel companies have doubled domestic capacity and halved their debt on book. Okay, and that's a space that I think it does offer a reasonable amount of comfort, volume growth, and more importantly, the pricing of this product that is there, or any commodity pricing that is there, is somewhere at the averages of the last decade. So you're not even sitting at an all-time high in terms of prices of commodity prices out there. So I think that's where our preferences are consolidating around at this point in time.
So steel, basically. I mean, if one has
it's steel, it's aluminium, it's zinc, it's you put it all together, whatever you can get your hand on in India.
But it's not the defense of the power companies. That's, I mean, direct place. That's not the.
I'm not too sure there's a way to price any of these. Everything is like 6 times and 7 times price to book.
Yeah.
Or rather, should I put it differently? It's not in our comfort zone.
Okay.
It's not in our comfort zone.
That's a good way to put it. But let's talk about CG Power now, because investors have received over 20 times returns from the stock in the last 3 years. Prashant, tell us more about the growth trajectory of CG Power.
Sonia, it's just a sort of softish feature piece, but I think it makes sense because, incredible what the Murugappa group has been able to do with CG Power. So let me just actually go across and explain what has happened. And the reason why I'm doing this today of all days is because it's hit a 1 lakh crore market capitalization, right? That is just incredible. Now, it is obviously not just one thing. It's many things which has contributed to this. It's not just the sort of leadership of the Murugappa group and the person in charge, which we'll get to in just a bit. It's, of course, also the fact that the businesses it operates in has had a huge tailwind. Transformers, switch gears. I mean, the space has boomed. And of course, the company has taken advantage of it in a very big way. So, a lakh crore in market capitalization. But let's just quickly tell you a brief history of the company. And, we'll start in 1878, about 150 years ago, and end up in 2024. So, it was actually founded as a business in 1878. So, that's how old the company is. Just a few milestones, really. Was taken over by the Thapars, the founder of the present-day Thapar group, Mr. Karamchand Thapar. That was in 1947. In 1966, the CG Power as a business, as an entity came into being. Between 1960 and 2005, I mean, basically it used to do motors. Then it bought into transformer technology. It forayed into switch gear, etc., etc. So this is that 40-year period. Between 2005, 2012, I mean, the company started actually spreading its wings outside of the country, outside of India. It actually bought 5-6 companies. It started with that Belgian-based Powell's Group, which it acquired, and of course later over the years it also started selling a lot of these companies. In 2016, there was a demerger of the Consumer Products Division, which is the Crumpton Consumer, the other name, which of course did very well this Friday. In 2019, then there was trouble, right? There were reports of unauthorized transactions, siphoning of funds. There was a forensic audit, a forensic auditor who was appointed, and of course NCLT stepped in, lenders sort of stepped in, and things went south very, very fast. And then in 2020, Tube Investments, which is part of the Murugappa Group, bought controlling stake. This happened on, the transaction finally was completed on the 26th of November 2020. So late that year, this is of course COVID time, and they infused 800 crores into the company to begin with. Now that's the history, right, and how it all really began. I'll get to what the stock has done in just a bit, but the turnaround sort of person really here is the MD and CEO, Mr. Natarajan Srinivasan, who took over as MD and CEO in the depths of COVID in 2020. Think about it, a company which is going through that kind of stress, you take over, there is a global pandemic going on, and you can't obviously do face-to-face meetings, and everything has got to be on Zoom. All of that stuff is happening in the background, and you're trying to engineer a revival of the company, right? Mr. Srinivasan, of course, is a corporate veteran, nearly 40 years of experience, started his career at BHEL, been with the Murugappa Group for 20 years, served as a director in Murugappa Corporate Board, and of course was also MD Cholamandalam Investments and Finance. So a pretty illustrious career overall. And, what he's done, of course, him and of course his team has done is quite remarkable. Look at this. This is, a quick snapshot. These are the latest numbers we have, right? FY20 is the last figure. Before, of course, ownership changed hands, and that is, I've taken one more year, so you don't see exactly the worst of the numbers, but you take 1 year before as well, when, trouble really hit home hard. FY19, FY20, and if compared to FY24. You can see what's happened. Look at revenues, look at EBITDA, and look at adjusted profit loss, 850 crores in profits, as compared to, of course, the prior year numbers are up on your screen. This is the stock price trajectory, right? All the way back from, I've taken last 24 years, year 2000 to year 2024. And, you tend to compare these figures from, the stock had gone down to $5, from 5 rupees, it's come to 600, 700 rupees. I'm not doing that. I'm just looking at where it was when the Murugappa Group took over. That was 25 rupees a share. From 25, of course, it's gone up to, at the high, of course, it hit almost 700 rupees and it's sort of closed slightly under it. Before the takeover and before there was none of this trouble with the Thapar Group, with the Thapars who were the earlier owners, the high, of course, was about 100 rupees per share. So kind of even from that level, it's actually gone up about 6 times or so. So it's just absolutely been a stellar rally. What next for CG Power? That's, of course, the story. The management is confident of doubling the size of the existing business, both sales and profit after tax, in the next 4 to 5 years. The existing businesses, of course, are switchgears, transformers, motors. They're expanding capacities across all of these categories, actually. And they're, of course, also foraying into the semiconductor testing space, the OSAT space, towards which they've actually committed some amount of money. So this is the story, right? 26 times from the 25 rupees in the last 3.5 years. And that's what sort of, stable leadership and turnarounds can look like. Any point from that 25 rupee journey you could have gotten in, and this is, of course, this would have been a big multi-bagger. Let me actually put this to Kenneth. Kenneth, your thoughts on CG Power? I don't know if you bought it at any of those points, but your thoughts now.
That's a difficult one. If you're asking me right now, you mentioned that it'll double turnover over the next 5 years. Yeah. And if it doubles profitably in the next 5 years at a 1 lakh crore market capitalization, you can do the numbers. Okay.
No, I'm actually more keen on Kenneth to know from you what could be the next CG Power. I know it's a cliche. No, there is nothing called a next CG, but still.
CG Power, as they say, right? It could be. What are you saying that it could double? You could do the number. Or does it have to do that to justify the current market cap?
No, I'm saying neither. I'm saying that today the business reports about 1,000 crores of profitability. It trades at 1 lakh crores of market cap. So even if it doubles or goes up, multiplies its profitability 3x over the next 5 years, it's 3,000 crores of profitability and 1 lakh crores of market cap.
Right.
So that works out to about a 33 times earnings. Now you got to be comfortable with that, buying that stock 5 years forward in that format. So you can do the computation. I mean, like I said some time back, this is not our style of investing. So probably stay away from what.
So
what's
now
just
to wrap it up, I know they're asking us to wrap up, but the next CG Power, one name, Kenneth, and we won't hold you to it. And just for educational purpose, what do you think?
So find an industry without pricing power, or is at the bottom end of pricing power. Find an industry that's paid back all its debt and is generating enormous amount of cash, which funds its expansion, and where valuations are reasonably comfortable and not at the reasonably comfortable, because in this marketplace it's very difficult to find anything at the bottom. We got a lot of pharmaceuticals. This is US facing pharma businesses. It represents little bit of everything: gaining market share, low pricing in the business, a very large output, a very large I mean, we're going into a patent peak somewhere in the next 4 years, so market opportunity expands, and all of these companies are sitting with cash that can fund all their expansion that is required. I think that's where that's what's anchoring our entire portfolio at this point in time.
It's very bullish in pharma. I got the answer because I've seen his portfolio.
Okay, let's do one thing. Let's also talk about, one space that has had, and I wanted your thoughts on this as well. One space that has had a really strong move in the last couple of days and weeks, right? It's this whole manufacturing theme, India manufacturing for the globe. And I want to talk about it today because Dixon Tech was the big mover in this week. In case you missed out on it, a lot of Indian companies are getting a larger seat at the table when it comes to manufacturing for global peers, right? Dixon Tech is now up 35% this year. As we know, they manufacture modules, display modules for mobile phones, and now they're working with almost all the large global players, whether it's Xiaomi, Realme, Motorola, etc. A couple of days ago, the company told us that currently they're manufacturing 7 million display modules for smartphones annually. That could rise to 30 million in FY25 and 45 million by FY27. That's the kind of scope that they see. And they're also in talks with other large global mobile manufacturers. CLSA, in fact, raised the target price on Dixon Tech to 9,000 rupees. Now, other examples of Indian manufacturers, for global players include Exide, where they recently won a deal with Hyundai and Kia. Bharat Forge has also spoken about how they aspire to be a global artillery house, with 80% of their defense business being in the export space. So, Kenneth, Motilal Oswal put out a note recently where they said that global manufacturing hub, India as a global manufacturing hub, is a big theme across sectors, whether it's semiconductors, electronics, automobile, EVs, aviation. But in this space, a lot of these stocks have run up already. Where do you still see some potential?
Whatever you do at this point in time, right? Any of these businesses, my sense is that you'll have to give it a time consolidation before you see the next up move. Because the prices represent a lot of earnings which is to come still. Yeah. So you still have to demonstrate your capabilities of generating profitability from whatever you're doing. And in an industry like this, when your capital employed or your investment is increasing at a very fast pace, the returns take some time to come through. Yeah. I'm undoubtedly, I've got no doubts that all of this are very large businesses, but you should have been in this space about 3 years back.
Yeah.
Okay. Exactly. So the way to think about manufacturing in India and chemicals came up, and I mentioned pharmaceuticals. This is also manufacturing. This has also got PLIs. This is also the space that it's in. So what's going to do well in 26, 27, 28? Okay, for the same segment of the market to do well in the next 3 years, there's got to be a dramatic change in execution now. Okay, there's got to be a dramatic change in execution.
So are you
to
saying it's
justify
too
everything
late
else.
to get into something like a Dixon Tech if you missed out on the rally?
I'm not saying that. The expectation is I'll generate the same amount of return. Yeah. There's a difference in it. Okay, I'm not bearish on the opportunity. I'm probably a little apprehensive on the quantum of return that you can generate at this point in time. There's a difference between the two.
Okay, all right. Okay. Actually, we've run out of time, not out of questions. Sure. But thank you so much for joining us here in the studio. It was a pleasure. And of course, we have a very hectic weekend. We're trading tomorrow. Working tomorrow, and we're voting on Monday. Right?
And we are watching Manchester City win the title on Sunday.
Yeah. Well, don't jinx it, Anuj. But okay, with that, it's a wrap on this edition of Editors Roundtable. More news and updates continue right here on CNBC TV18. milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Well, how I wish this was a video interview that we had, but you take what you get with the likes of Neville Nerona, rare voice, but extremely important as well, especially with the kind of success that DMart has seen in the retail space itself. The last conversation that we had was about 6 years ago. In the middle of that, there was a pandemic, a big surge that we saw in digital as well. So with all these things, the big obvious question was, what are the structural changes that have taken place in the modern retail world in the last 6 years? And to that, he had to say quick commerce could have had huge scale and digitally enabled micro enterprises which can reach small, tiny audiences at very low cost. And that has been the big takeaway over the last 6 years, the big structural change. One of the obvious questions also was that, the mix of DMart sales actually...
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty end a volatile week with 2% gains. The mid-cap index up 4%. The biggest weekly gain that we've seen in the last 8 months. All sectors end in the green, barring FMCG.
India must also increase, with the help of policies, its share in manufacturing in global value chains.
India needs to ramp up manufacturing and increase its global share, says the Finance Minister Nirmala Sitharaman at the CII Annual Business Summit. Says Prime Minister Modi will return for a third term, promises policy stability and no flip-flops.
We need to get into global value chains, and to get into global value chains means a fundamental change in a lot of things. It means low tariffs. It means low procedures. It means no protectionism.
The CEO of Niti Aayog, BVR Subramaniam, bats for low tariffs and low protectionism for India to enter global value chains in electronics, automobile and other sectors. Says private capital infrastructure is missing. Calls for government policies to be tweaked to incentivize the industry. Israel defends its Gaza operation at the International Court of Justice after South Africa calls for an urgent hearing to halt the attack on the city of Rafah. An estimated 6 lakh people have fled Rafah in the past week after Israel intensified its assault. You cannot have it both ways. The White House issues a warning to China after Beijing rolls out a red carpet for Vladimir Putin. A video of Xi Jinping and Putin hugging each other goes viral. Go Digit General Insurance IPO subscribed more than 8 times on the last day, led by large institutions and mutual funds. The retail book subscribed around 4 times the actual shares on offer. The company is raising over 2,600 crore rupees from the public issue. Telecom operators deposit earnest money with the government for the upcoming 5G spectrum auction on the 6th of June. Reliance Jio deposits 3,000 crores, which is 3 times higher than Bharti Airtel. Vodafone Idea deposits 300 crore rupees. Bihar's Deputy Chief Minister Samrat Chaudhary says 90% of BJP workers are happy about the alliance with Nitish Kumar, defends BJP's inclusion of opposition leaders with corruption charges. 66% of India's top valued unicorns are embracing artificial intelligence, according to an EY report. Another report by TCS shows 47% of CEOs expect AI to eliminate more roles than create new ones. All of that and more coming up for you, but first up, straight to the day's market action. The Sensex and the Nifty ended a volatile week with gains. In fact, 2% gains. The mid-cap index up 4%, and this is the biggest weekly gain that we've seen in the last 8 months. The Nifty today closing about 62 points higher, 0.5% higher for the Sensex. The Nifty Bank, similar picture, 400 points higher for the Nifty Mid-Cap. All sectoral indices closing in the green, barring FMCG. Prashant joins us now with the day's market action. Prashant, closing the week strong, and of course we've got a trading session tomorrow, and then we're closed on Monday on account of the elections.
Well, finally, the market made up for some of the underperformance that we've been seeing for the last many weeks, actually the last fortnight or so, to be more specific. The market had been coming off continuously, while US markets, to which, especially the Nasdaq, we are most correlated to, had been doing well. And this Friday, it was a little better. Of course, it's not the end of the week because tomorrow we've got 2 hours worth of trading. But the Nifty had a good close, follow on after yesterday's tremendous 200-point move that we saw coming through in the last sort of hour or so. On the Nifty Bank as well, it was a decent kind of a day. For the week as well, the markets, these indices actually are up about 1.5% or so. Mid caps and small caps, similar kind of pattern, and market breadth actually looked pretty good as well. So, we are ending in a much better fashion with some of the moving averages, etc. regained. Technically, these are important signals. Now, on the large caps, big movers, and M&M really was the stock of the day after strong earnings, good guidance. JSW Steel, Grasim, Ultratech, Kotak Mahindra Bank, and Shriram Finance were some of the other big gainers that we had. Not very much in terms of losers, so I'll get straight to what happened in the broader space. And here, a lot of PSU names: Mazgaon, Cochin, Garden Reach, Shipbuilders, buzzing. Container Corporation, BDL, BEML, a lot of them, of course, reported numbers, fairly recently. NLC India, continuing with PSUs, Moil, IRFC, Rights India were some of the other names. In the industrials space, you had Solar Industries, SKF India, KEC, which continues to move higher. EMS companies, Dixon, Keynes, Amber, anything between 4 and 8% here. The Bangalore real estate players like Brigade and Sobha. Brigade, of course, back at new highs today. There was Naukri, which is Info Edge, Affle India, Crompton, big move. It's basically still not at previous highs, but 15% kind of a move after the earnings. Endurance Technologies and Glaxo were some of the other names. So, this is, of course, a fraction of what moved, but this is where bulk of the volume-led activity really was. Under pressure in Sangvi movers, GE Shipping saw a slide, Honeywell Auto, there was eClerx, NetWeb, and Emphasis, which saw some pullbacks as well. As I said, of course, tomorrow we are trading with those 2 hours of market action, which we will track for you. Back to you.
Yes, we certainly will, Prashant. Many thanks. Finance Minister Nirmala Sitharaman says India needs to ramp up manufacturing and increase its global share. Addressing the annual CII Business Summit in Delhi, the Finance Minister also said she expects increased engagement with business leaders ahead of the July budget. She expressed confidence about the Modi government's return to power for a third term, promised policy stability and no flip-flop. Take a look.
The fundamental basis for this consistent and steady growth and high growth is the policy stability, absence of flip-flops, corruption-free decision-making, and making sure that the facilitation both in legislative and also the legal frameworks are all simultaneously going on, having heard from the industry that rapid changes are required in our compliance regime. I also want to underline, much against the advice given by some economists that India should no longer be looking at manufacturing or ramping up manufacturing, I like to highlight the fact that manufacturing must increase. India must also increase, with the help of policies, its share in manufacturing in global value chains. So, we need to have greater sophistication in our product manufacturing. We also need to see how best this can be given policy support. We look forward to a more pointed engagement with the CII to see what best can be done in the July budget, which will be the full year's budget, because what happened on 1st February, as you all know, was a vote on account. It just takes care of the expenditure for the first quarter till such a time the new budget is presented. And for the new budget, therefore, a lot of consultation can begin with the CII team as well. So I'll lay before you some fundamental indicators which you can use for co-creating the future responsibly, not just for India, for also for your partners elsewhere.
Well, that is the finance minister. Now, the CEO of the Niti Aayog, BVR Subramaniam, has made a strong pitch for low tariffs. Addressing the same CII event, he said India needs lower protectionism to enter global value chains in electronics, automobile and other sectors. He also said private capital infrastructure is missing, calling on the government to tweak policies to incentivize industry. Subramaniam has called for a range of interventions in agriculture to ensure that India becomes the food basket of the world. Take a look.
Agriculture has to be focused on, pushed through so that it reaches the next level. That's the very important part of the economy, because it sustains, in a way in India, it is the sink which absorbs a huge part of the population which is not in other sectors. So I think agriculture requires a whole range of interventions so that actually India becomes a global agricultural power. We can become the food basket of the world. There is no doubt about it. The question is, how do you take it there? And there are a whole set of things to be done. We need to get into global value chains. And to get into global value chains means a fundamental change in a lot of things. It means low tariffs. It means low procedures. It means no protectionism. We are not a part of the global value chain in electronics. We are not a part of the global value chain in automobile. We are not a part of the global value chain in a whole host of other areas. We look back and we get very happy about our performance, but if you look left and right, you see our performance can be much better. That's it. We think auto components is a great story in India. We account for 2% of the global trade in auto components. 2%. That just tells you, let's not be proud. There is a lot to do. I think much more needs to be done in terms of getting private capital into infrastructure. I think barring a little bit in InvITs and REITs, etc., and ports and airports, I think private investment in infrastructure is not there. So we need to come up with new models. We need to come up with new arrangements in which private capital is infused into investing in infrastructure. That will also require a lot of improvements in contract management and dispute resolution and fast-tracking our legal processes.
Well, that is the CEO of Niti Aayog. In international headlines, Israel defending its military offensive in Gaza at the International Court of Justice and has denied that it violated the Genocide Convention. This comes after South Africa called for an urgent hearing of the court and sought to put a stop to the attack on the city of Rafah. It's also urged Israel to withdraw entirely from the Palestinian territory. An estimated 6 lakh people have fled Rafah, a southern Gazan city where more than 1 million displaced Palestinians have sought shelter after the conflict broke out. Meanwhile, Russia's Vladimir Putin and Chinese Premier Xi Jinping exchanged handshakes and a rare embrace in Beijing during the Russian president's state visit. China rolling out the red carpet for Putin, and his visit comes after the US hit China with fresh tariffs. The White House also issued a warning to China, saying it cannot expect closer ties with Europe and also engage with those threatening Europe's security. The video of Xi Jinping and Putin hugging each other has gone viral. Facebook's parent company Meta has come under the European Union scanner once again. The European Commission has said that it is investigating whether Meta's Facebook and Instagram platforms have stimulated behavioral addictions in children. The Commission is also concerned about Meta's age verification system and privacy risks linked to the company's recommendation algorithms. Back home, Serum Institute of India has acquired a 20% stake in US-based Integri Medical to advance needle-free injection system technology. However, the vaccine's manufacturer did not disclose the financial details of this transaction. Serum Institute has said that needle-free injection system will be available in the Indian private market very soon. Well, trading platform ICICI Direct resumed trading operations on its mobile app and website an hour after the markets opened today. The broking platform had delayed operations multiple times this morning due to what it called a maintenance issue. The reason behind the maintenance activity has not been disclosed yet. General insurer Go Digit's initial public offer has been fully subscribed on the final day of bidding. The company has received a robust response from investors, with the QIB portion subscribed more than 12 times, retail portion booked more than 4 times, while the non-institutional investor portion has been subscribed more than 7 times as of 4 p.m. The company's public issue is a mix of fresh issue worth 1,125 crore rupees and an offer for sale worth 1,490 crore rupees. The Weather Department has warned of severe heat wave across northwest India and Bihar over the next 5 days. East and central India are likely to experience very high temperatures starting tomorrow. Southern states could see mild showers till the 23rd of May. Well, we would head into a break, but up next, 66% of India's top valued unicorns are embracing artificial intelligence. This as per an EY report. Another report by TCS shows 47% CEOs expect AI to eliminate more roles than create new ones. Details when we return.
Largely because perhaps, there have been entries of a lot of these value retailers in the apparel space as well. To that, he said, yes, there is marginal impact and specific to a certain category such as apparel itself. And that's something that we've seen in the numbers of Zudio, etc. as well. But a lot on the street were also worried about why DMart isn't growing stores as fast as the street is expecting. On that, his assessment is that the external world is tracking how many more stores DMart is adding every year, whereas they worry about how well the stores being added are being actually managed, and that's the big dissonance. But having said that, they would like to add as many stores as possible, as fast as possible. But for that, is there any real estate available to do that? He said, well, that is a challenge, but digital commerce is definitely showing the way. It's quite clear what they cannot do fast, digital can. So that's something that they'll be speaking about. In fact, quick commerce, as per him, is a significantly smarter format for than digital marketplaces, and a lot more relevant for India, which is known for leapfrogging beyond different things as well. And on competition and of course digital commerce, he says that digital commerce is indeed the next big challenge for all of us. And while they will be able to compete, the sudden disruption of general trade needs to be keenly watched. In fact, there will be significantly more digital plays before modern trade evolves and matures, and as a result of it, moats of every business will be slightly weaker than pre-digital times. Entry barriers have reduced for most retail businesses, and that could actually reduce profit pools as well. But talking about growth in the tier 2 and beyond, Bharat as we call, he said that this is a multi-decadal expansion opportunity. And lastly, asked him about what his key objectives for DMart are, and he said adding new stores and looking for moats in the e-commerce space, and growing that will remain the key focus for the company.
In the auto sector, in our pecking order, we see two-wheelers having a higher single-digit or lower double-digit kind of growth rates, followed by PVs and followed by CVs and tractors. I think the whole sector is at a lower end of its valuation band, and the premium that they used to enjoy compared to the Nifty or the Sensex has come down substantially. Companies with at least having 25-30% of their business coming from the rural side, I think that's where you start scanning businesses from. So you would find certain MNCs which are more urban oriented have already seen good numbers. The rural part will start kicking in from here on.
On an average, we did 900 wagons in the last quarter. We did 2,700 wagons. Of course, in March, we did more.
Police have arrested Bhavesh Bhinde, the owner of the advertising agency behind the illegal hoarding that collapsed in Ghatkopar in Mumbai on Monday. Bhinde was arrested in Udaipur after 8 teams of the Mumbai police searched various locations. At least 16 people have been killed and over 70 injured after the hoarding collapsed due to gusty winds and unseasonal rains and fell over a petrol pump. Remember, it was an illegal hoarding well beyond the prescribed limits in terms of its size. Bihar's Deputy Chief Minister Samrat Chaudhary has said that 90% of BJP workers are happy about the alliance with Nitish Kumar. Speaking to our colleague Santya Gora, Chaudhary has defended BJP's inclusion of opposition leaders with corruption charges against them.
भाजपा बड़ी पार्टी है, देश भर की सबसे बड़ी पार्टी है फिलहाल, लेकिन आप नीतीश कुमार के मामले में आप ये बताएं कि कैसे होता है कि 2015 में वो अचानक से करप्ट लगने लगते हैं, 17 में नहीं लगते हैं।
किसी ने कहा नहीं होगा। आप
सारे आरोप बीजेपी के
एक बयान आप दिखा दीजिए।
देखिए सर, सारे बयान बड़े नेताओं से लेकर छोटे नेताओं तक
एक बयान दीदी दिखा दीजिए जिसमें नीतीश कुमार को लोगों ने करप्ट कहा।
2023 से पहले मोदी जी से लेकर के बाकी बड़े भाजपा नेताओं ने कहा था।
नेता का नाम
मैं नाम नहीं बता रही हूँ,
बताइए।
प्रधानमंत्री जी से लेकर के बड़े नेताओं ने कहा था कि चाहे जो हो जाए, अब हम नीतीश कुमार जी के साथ वापस कभी नहीं जाएंगे, क्योंकि उनकी वजह नहीं थी।
वो मैं मानता हूं।
ठीक है,
हम आज भी नीतीश कुमार जी जो बिहार के पॉलिटिक्स में एक बड़ा चेहरा है, इसलिए हमने समझौता किया, इससे कहीं कोई डिफर नहीं करता।
अच्छा, इसे आप समझौते की तरह देखते हैं?
एकदम स्वाभाविक है, जब हमने समझौता किया तो कैसे कह सकते हैं।
और भाजपा रीजनल पार्टीज को कम करके उनके इन्फ्लुएंस
को इतिहास में कोई ऐसा नहीं होगा जिसको हमने तोड़कर अपने पार्टी में मिला लिया।
सर, शिवसेना महाराष्ट्र से आती हूँ मैं, सर, शिवसेना
तो दीदी बताओ,
शिवसेना एनसीपी
वो तो अलग इंडिविजुअल पार्टी है दीदी।
देखिए, शिवसेना और एनसीपी के एग्जाम्पल में बार बार देती रहूंगी।
टूटना चाहिए, क्यों नहीं टूटेंगे? वहां तो बेटा भतीजा और बेटी का लड़ाई था, एक जगह भतीजा और बेटा का लड़ाई था,
पर पार्टी टूट के
टूटेगी ना, उससे क्या लेना देना हमारा।
ठीक है, वॉशिंग मशीन के कॉन्सेप्ट की भी मैं बात कर लेती हूँ। देश भर में चल रहा है, चाहे अजीत पवार हो, चाहे बाकी नेता हो, प्रफुल्ल पटेल हो, तमाम नेताओं की बात करें, एक दिन करप्ट उन्हें कहा जाता है, प्रधानमंत्री खुद कहते हैं। अब आप कहेंगे बयान कहाँ है, तो मैं बता देती हूँ,
बयान नहीं,
खुद कहा है कि 70,000 करोड़ का सिंचाई घोटाला अजीत पवार के नाम पे उन्होंने
न्यायालय है इस देश में दीदी, न्यायालय है, न्यायालय तय करती है कि कौन करप्ट है कौन नहीं है।
बिल्कुल, लेकिन जैसे आप लोग खुद करप्ट मान रहे हैं,
वही मैं कह रहा हूँ, पॉलिटिकल डिसीजंस अलग है, लेकिन इस देश में करप्ट कौन होता है? जैसे लालू प्रसाद जी पंजीकृत अपराधी हैं, 7 केस में सजा आपता है, तो ये अकरप्ट है।
तो आपको लग रहा है ये पॉलिटिकल फैसले हैं, लेकिन उसमें पॉलिटिकल में भी कुछ तो मोरालिटी चाहिए सर, जिसे हम कल करप्ट कह रहे हैं, उसे आज अगर हम हाथ मिला रहे हैं।
केजरीवाल जी को कोर्ट ने ही रिलैक्स करके प्रचार करने के लिए दिया, तब देश में कानून बन गया, सुप्रीम कोर्ट ने कहा। अजीत पवार पे भी सजा नहीं हुआ था। मैं ये कह रहा हूं कि अब तो तय हो गया ना कि अब जो जेल में रहेंगे उनको पॉलिटिकल काम के लिए छुट्टी मिलेगी।
और आप कह रहे हैं ये राजनीतिक फैसले हैं सारे?
नहीं, राजनीतिक स्वाभाविक है, हम किसी से गठबंधन करते हैं, राजनीतिक फैसले।
Well, that is the BJP's Samrat Chaudhary speaking to Santya Gora. And before we wrap, artificial intelligence influencing the way people work and hire, not just globally, but here in India as well. As per an EY report, 66% of India's top valued unicorns are embracing artificial intelligence. Arundhati is standing by with more on the adoption of AI by corporate India. What are the big takeaways, Arundhati?
Thanks for that. Artificial intelligence, that's the buzzword echoing across the world, and companies only expect to see explosive growth in the sector over the next 10 years. So where does India stand today and what has been the rate of adoption? EY is addressing exactly that question in its latest report. India's legacy businesses are treading with caution, but startups and global capability centers are taking the lead in AI deployment. An online analysis of the publicly disclosed adoption of AI and Gen AI by India's top 50 most valued Indian unicorns shows that 66% are already using AI or Gen AI technology. This indicates that startups have been more proactive in terms of adopting AI technology versus your legacy players. Now, let's take a look at some of the most implemented Gen AI use cases among India Inc. 1/3 of them use Gen AI to execute point tasks using intelligent assistants, while 25% relate to marketing automation. In fact, this quarter has also seen a diversification in investments going into firms using Gen AI or AI applications. However, the report highlighted that hallucination of LLM or large language model responses, data privacy and sovereignty, and the cost implications of deploying Gen AI in production are the top issues. Meanwhile, another report by TCS lists out the same concerns with generative AI, but delves deeper into the kind of impact artificial intelligence can have on the economy. The report, which interviewed over 1,300 CEOs looked at the potential of AI for business and how it compared with the past disruptive techs like internet and smartphone. While 54% believe the impact would be greater or equal to the internet, 59% say that it would be greater or equal to smartphones. The study also found that 49% of those interviewed expect AI to have no impact on the number of jobs created, while 47% expect more roles to be eliminated than created. Finally, a report by Microsoft and LinkedIn found that an overwhelming 92% of those surveyed were already using artificial intelligence at work versus the global average of just 75%. The survey, which included 31,000 people across 31 countries, also found that 91% of Indian leaders believe they need to adopt AI to stay competitive. However, 54% worry that their organization lacks a clear plan and vision for AI implementation. Despite this, employees are eagerly embracing AI tools, with 72% of Indian AI users bringing their own AI tools to work. 75% of Indian leaders stated that they wouldn't hire someone lacking AI skills, outpacing the global average of 66%. The report, aptly titled "AI at Work is Here, Now Comes the Hard Part," it says that AI is transforming the world of work, reshaping talent landscape, and nudging both individuals and organizations to embrace change.
Arundhati, many thanks for joining us. That's a comprehensive wrap of a few reports that have come out on AI adoption, specifically here in India this week. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV18. Thanks very much for watching. Stay tuned. We're back in a moment.
This year, our target is to get to about 1,000 wagons on an average. So let's say between 950 to 1,000 wagons on an average. When we are doing the passenger rolling stock, when we get to a base level of at least 15 to 20 coaches, which should be achievable by Q3 of this year or Q4 of this year, we should be able to do 10% EBITDA margins approximately. And when we are integrated with propulsion, which should happen in FY26, then our EBITDA margin should see an improvement, and we should be targeting between 13 to 15% EBITDA margins.
One of the big lessons I learned, in addition to what I learned from my mother and father, was the guru, John Templeton. He was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. He was a very careful with money, and he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. I learned a lot from him regarding the need to be frugal and not to waste money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me. I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was a lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest hoarding. 14 other people found a mention on Monday evening courtesy of that hoarding. A mention in the list of the deceased.
Hello and welcome to Market Masters. Billionaire investor Mark Mobius, who's been focusing on emerging markets for over 4 decades, He's a bull on India. Mobius is closely following the tech market in India these days and believes there should be more equity offerings in the country, more IPOs and more listing of government enterprises. And this, according to him, will increase the market size and allow more capital flows to India as well. He's also authored several books on capital markets and the world economy. He's joining us today to talk about his latest book called The Book of Wealth, a young investor's guide to health and happiness. Mark, thank you so much. It's a pleasure to have you on CNBC TV18.
Thank you. It's a pleasure being with you.
You know, Mark, you write about your own childhood, how you did not come from money or a family of academia either. Your father was a baker, mother a homemaker. You had your own childhood struggles. You never borrowed money because your father warned you against it. Did your own childhood and the learnings guide you as during your journey as an investor?
Very much so. I think, the teachings of both my mother and father helped a great deal in where I am today. First of all, the value of education was very, very important to them. And they believed that, a good education was something they wanted to give us children. And secondly, they said, never borrow, don't get in debt. And I think those two principles stayed with me and helped me a great deal throughout my career.
Mark, you've also tried to explain investors the true meaning of wealth. It's not about owning expensive cars or having a lot of money in your bank account. It's quite a holistic concept. How did you come to learn about this, and what would be your advice to people who are getting into stock market wanting to earn quick money?
Well, one of the big lessons I learned, in addition to what I learned from my mother and father, was the guru, John Templeton, who I worked with for many, many years. And he was a very frugal person. He did not spend a lot of money on himself. I remember in the office, he used to take scrap paper and cut it and fold it and staple it and use it as note paper rather than buying a notepad. So he was very careful with money, and he was a billionaire. I mean, in fact, he now, after he died, he endowed the Templeton Prize. And in fact, one of the first winners of that prize was Mother Teresa. And the prize is bigger than the Nobel Prize. So I learned a lot from him regarding philosophy of life and the need to be frugal and not to waste money. It doesn't mean you have to not enjoy life, but at the same time, you don't have to waste money. And I think that was a big lesson for me.
Right. Be frugal in your transactions. If I were to ask you the true meaning of wealth, what would that be, according to you?
I would say, number one, wealth is health. In other words, you have to be healthy in order to be wealthy. You're not going to enjoy anything if you're in bad shape physically and mentally. So that's number one. You've got to be mentally and physically healthy. And the second thing is that you've got to be willing to give. In other words, the meaning of wealth is not only to have wealth, but to be able to give it. And that's another important point that I think was the lesson I learned from John Templeton, because he established the Templeton Prize to give rather than to take.
You've also drawn comparisons between Warren Buffett, the Oracle of Omaha, and Rakesh Jhunjhunwala to explain that wealth transcends monetary gains. To gain, you must sustain. Why is this important?
Yes, that's a very, very important lesson that we learn not only from Warren Buffett, but from other wealthy people. In other words, you've got to be able to continue to build your wealth and not necessarily spend it, but to build it so that you can leave it to others. And in order to do that, you've got to be frugal and you've got to be very careful in how you invest your wealth. In other words, you've got to invest in companies that are going to grow their assets rather than shrink their assets. So this is a very, very important element in investing.
Do you also end up seeing a lot of businessmen these days, a lot of investors who who are going big on the stock market, not caring about their health. And do you feel that is something we need to really think about?
Definitely. I think that's one of the most important points I hope that the young people who read my book will get. It doesn't make any sense for you to be running after wealth, running after money, if you're not in good shape and if you ruin your health in the process. So you find that true all over the world. People are so hungry to get wealthy, they forget about their health, and they forget that health is wealth.
Right. You also said that you are your biggest asset. What is the one investment that any investor must make in himself or herself? And what is that continued investment that they should be making?
Well, there are a number of things, but the first and foremost, as I mentioned, is education. In other words, even though you've been to the university, you should not stop learning. One of the things, again, I learned from people that I work with around the world who were successful is that they keep on learning. They keep an open mind. They keep on reading. They keep on learning from other people. That's number one. Keep on learning. Number two, maintain and grow your contacts. In other words, the people that you know are going to be able to educate you about life and about so many other subjects. So try to extend your network of friends around the world. And by the way, I emphasize around the world because you should not be restricted to only your own community or your own country, but you should have contacts all over the world because that will give you another aspect of education, which is so critical today. Because if you're going to find the best investments, you got to go global. You can't do it in only one country.
Right. You've also spoken about different financial instruments in your book. You've compared stocks to bonds. You've spoken about mutual funds. You've spoken about equities, the importance of gold, the importance of cash as well. What would be Mark Mobius's favorite instrument right now?
The favorite instrument is and always has been stocks. Stocks in good, growing companies with solid balance sheets. That is the very best investment you can make to begin with. But there are other good investments like gold. I believe people should have some physical gold. And of course, in order to be successful, you got to be diversified. So you shouldn't put all your eggs in one basket, so to speak. In other words, be diversified across different asset classes. It could be stocks. Of course, stocks would be number one and the best investment. But then bonds, real estate, gold, these are the kinds of ways you can diversify. But I would say 80 or 90% of your investments should be in stocks.
Right, 80 to 90% should be in stocks. What should be the right holding period in stocks according to you? There are people who want to earn a quick money, but if you want to be wealthy or enjoy the fruits of your investment in the long term, how long should you be with a particular stock in a market?
Well, it depends on the stock and the behavior of the earnings of the stock. Some stocks you can hold throughout your lifetime because they continue to grow, they continue to improve, they continue to adopt new technologies so that they can sustain themselves. But there's some stocks that you buy and you quickly find out that this stock is not going anywhere, the company is not doing well, there have been changes in the management, there have been changes in the industry, and you should sell. So there's no, I would say, no optimal time. On the average, 5 years is probably the horizon you should look at. In other words, when you're buying a stock, you should think about what can this stock do in the next 5 years. Usually people can't, and managements can't look beyond 5 years, but you can get a pretty good idea of where the company is going by looking at a 5-year time horizon. But that doesn't mean that you shouldn't sell it tomorrow if things change, or that you shouldn't keep it for the next 20 or 30 years. if things continue to go well.
Right. Now, speaking about the emotion portion, you've warned investors to avoid the emotion portion in the markets. Avoid a herd mentality. Stay calm. Be knowledgeable. Study the markets well. Study the stock well. And then decide your call. What would be your advice and context in the current environment in India and globally?
Well, in the book, I mentioned the term emotion is the potion. In other words, the markets are driven more by emotion than by intellect or by rationality. In fact, that's the case of our lives. If you look at your normal daily life, you find that so much of it is driven by emotion. When it comes to investing, you've got to be much more rational. You've got to observe emotion. In other words, understand emotion, understand the crowd behavior, and use that understanding to invest. But don't get involved yourself in the emotion of the market. And I remember John Templeton saying the best way to invest is to buy when others are selling, are despondently selling, emotionally selling, and to buy when others are aggressively selling, and to sell when others are aggressively buying. So this is the kind of thing that you've got to recognize when you're looking at a market.
On that note, we are going to take a short break, but don't go anywhere. This conversation with billionaire investor Mark Mobius on his book, Book of Wealth, continues on the other side. We'll also ask him about the recent volatility in the Indian stock markets and the reasons for the heavy selling by foreign institutional investors as well.
As is the case in most such tragedies. Additional Commissioner of the Civic Body told CNBC-TV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Another heartbreaking tragedy took place in 2017 when at least 23 people were killed and another 39 were injured in the stampede that took place on the erstwhile Elphinstone railway station, now known as Prabhadevi. The army sprung into action soon after, building a new bridge just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced and we never heard about that incident again. Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of a few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news.
Welcome back. You're watching Market Masters. With us is Mark Mobius, author and billionaire investor, on his latest book, Book of Wealth, A Young Investor's Guide to Health and Happiness. You know, Mark, coming back to the India scenario, there are, of course, a lot of things which affect the sentiment in the markets. And currently, there is a certain degree of volatility, a decline in the Sensex and Nifty that we've seen because of Indian elections. That is what several experts suggest. Do you think this volatility is indeed due to elections, or are there other factors at play? How should investors see this?
I think there's no question the elections are having an impact because people do look at the elections very carefully. Everyone is involved emotionally in one degree or another, and they tend to react emotionally in the market itself. So now there's an opportunity, because if you can look at the emotion in the market and recognize that perhaps the emotion, the direction of the market driven by emotion is wrong, then you should do the opposite thing. In other words, if everyone's selling, maybe you should be buying, and vice versa. Of course, based on the fundamentals, on the actual fundamentals of the companies in which you are investing. So yes, I would say that for India now, probably the Indian elections are having a big impact on the emotion of the market.
Right. We've seen at least 47,000 crores offloaded by foreign institutional investors since the time the elections began in India in April. Approximately $6 billion have been offloaded, Mark. What, according to you, would be the reasons for this?
It's probably because the uncertainty arising from the election. A lot of investors, not only foreign investors, but investors anywhere in the world, including Indian investors, tend to hate uncertainty. They don't want it to be uncertain. And of course, as you mentioned, the outcome of the election is uncertain. You know, some people say that Modi will get a supermajority and that he'll be able to get more seats in Congress. Other people say no, he may not, and that creates uncertainty. So whenever there's uncertainty, people say, okay, I'm out of here. I'm going to wait until I find out what's really going to happen, and then I'll invest. So uncertainty is a big, big driver to this, and that's probably what's happening with foreign investors.
Right. Let me ask you about 2 to 3 scenarios. One is, if the Prime Minister, the BJP, the NDA, they cross the 400 seats mark, as they have been suggesting and claiming that they will win big, they will win with record numbers. If they manage to do that, how do you see the markets reacting, and what will be the growth momentum and investment momentum and attitude towards India?
I think if they do that, the market will probably do well, probably move up, barring any other factor coming in. But I would say it would be good news for the market. And more importantly, it would be good for the economy, because then the policy objectives of growth and the adoption of technology will be very important. One of the key aspects now for India will be its ability to attract foreign technological investments, semiconductors, software, etc. There's an incredible opportunity for India to become the center for technical innovation and technical manufacturing. And that will depend on the degree to which the Indian government is able to attract these large manufacturers from China, from Taiwan, from US, Japan, etc. And that, of course, depends on the degree of bureaucracy and restrictions that the Indian government imposes. And my reading is that the Modi government will probably try to make it more attractive and loosen up these restrictions, which will attract more foreign investors.
Right. What if the government, the BJP or the NDA, altogether get the same numbers as last year? They don't get the 400 seats as promised, but they end up around 350, 353. Just the same number as last year.
Probably the market will move sideways. You know, there won't be much excitement in the market. The market, as you know, has gone up quite a lot. So there probably could be a correction along the way.